South Asia, Southeast Asia, and also in North America. We have scripted our financial market conclave a few years back. And for that, we chose Mumbai for obvious reasons. Because for finance, for banking, Mumbai is our heart and soul, our inspiration and our value system. And therefore, it is wonderful for us to be able to present today's conclave to you in a physical manner after a gap of over 2 years. The focus of this conclave is financial markets lock, stock, and barrel, meaning thereby we are here to present and learn from each other in a holistic sense about the financial markets, not as an island in the economy, but as an integral part of the entire ecosystem that is the Indian business and the economic landscape. Our sessions are therefore going to cover new banking, the financial landscape, how the tech companies, rating agencies, and other stakeholders are working together in the economy of future. We'll focus on issues like ESG, insurance reforms, how to address the volatility and the uncertainty issues that's so commonplace these days, especially on matters which are sort of beyond our immediate control. The idea is therefore to learn from each other. And before I hand over and request our opening session speakers to take the dais, just a small sort of backgrounder from our end as a Chamber of Commerce is that India as a nation, as you must have already heard, read, that we are number 5 as an economy in the world. We have overtaken our colonial masters. And the reason why probably we have been doing so well, and possibly we have been able to withstand the inflation pressure slightly better than many other leading economies, is because how we sort of managed the last few years. I'm sure the experts will talk about it more, but on the brighter side, over the last few years, some of the key economic parameters, including investments, have recorded a larger increase if you take the world's 5 other economies which are around our economy as a whole. And you will find that in India, investments have actually increased by over 20%, consumption by 26%, and exports by 15%, which represent the 3 key engines of growth. We have with us 2 of our former presidents, Mr. Ambarish Das Gupta and Mr. C.S. Ghosh, who will kick off the opening session. Between Mr. Das Gupta and Mr. Ghosh, they have, I think, close to 80 years of collective experience in banking, microfinance, and consulting. Mr. Das Gupta is a former partner and head of management consulting for both PwC and KPMG in India. And of course, the iconic Mr. C.S. Ghosh, the MD and CEO of Bandhan Bank. They will be joined online by Mr. Joydeep Roy, partner, PwC, and India FS advisory leader and global health insurance.
Good morning, ladies and gentlemen. My humble greetings to everyone, in particular to Mr. Ghosh. I'm delighted that Bengal Chamber of Commerce and Industries gave me this opportunity to set the tone for today's session, today's days. It's a very wonderful rain-soaked outside. The smell of the brewing coffee, the tea, and that sets the tone for the day that it has to be a very stimulated ideation day. I mean, we are all inside, lovely weather, coffee, tea, and it's a stimulated ideating day. And that's the tone of the day. And that's true what we will be doing today, a stimulated ideation of what the banking, the financial services players should be looking like. I am myself personally very immersed in this subject, very invested in this subject, because I am responsible for one very large bank, private bank, for whom we are working right now, and therefore every day we are soaked with more information on what better can be done for our client bank to break the frontiers of the technology or to break the frontiers of the banking world. So therefore it's a very interesting subject for me also. There was a gentleman called William Goldwyn in the world of movies. He once mentioned about the movie that no one knows anything. So that was actually got very much identified as NKA factor, no one knows anything. It was not actually a comment he made to disparage the audience, but it was a comment he actually made to explain that how unpredictable the audience is. And therefore it's very difficult to really understand what their tastes will be. And this same NKA factor in the film, in today's corporate world of this, can be related to the VUCA factor. And therefore, no one knows anything is more applicable possibly than film in this financial sector, that no one really knows anything. And therefore, what we are seeing is an increased attempt by the bank, and when I say bank, I actually don't only mean bank, I mean all the players in the financial sector, is how to acquire more intelligence. How we really can acquire more collective intelligence. The banks can become more intelligent, not only relying on the human intelligence of their own worker and their own executives and their own staff, but how they can really become intelligent and how that is possible. Today it's in hyper-connected, the days of the hyper-connectivism. We are all hyper-connected between our back, front, middle office. We are hyper-connected to the external world. The banks are hyper-connected to the external world, to the para-bankers, to the other bankers, to the digital lending organization, to the fintechs, the insurance also similarly, everybody. It's a world of hyper-connectedness. And through that hyper-connectedness, the objective is to generate huge amount of information and the data. And therefore, the other tone that we are seeing today is that through this, how really we can create our own data lake and the master data management. What should be our approach to really create an appropriate data lake, on top of which the next trend is how do we really set an appropriate interpretation of this data, an appropriate intelligence on this on these data, the cognitive intelligence, the conversational intelligence, the deep learning, the deep thinking. How do we really create a layer of intelligence? So it's an hyperconnectedness, generating huge information, the trained creation of the sophisticated, widely expansive data lake, and then on top of that, create the layer of the intelligence of how I better interpret the world, the external world as well as the internal organization in the bank. And therefore, how do I increase my intelligent prediction, intelligent analytics, not just of the customer, because we all know that the customer preferences and all are changing and therefore they want much more customization. This we all very much know. So it's not just the customers, but the entire world. So how do we really play well in this NKA quotient, no one knows anything, and or in this VUCA world? Now, along with that, what we are also seeing is an increased trend will be to enhance the operational resilience, because the banks or the players in the financial market cannot just cope up with this continuous changing, the vagaries of the economy, the climate, the geopolitical situation, the social unrest, the political unrest, various kinds of things which are contributing. And therefore, how do we really bring up our own resilience? And therefore, the operational resilience, how can we really enhance so that to withstand all the kinds of shocks which we will have to go. So one aspect is, of course, intelligence for the prediction, but beyond also additionally is the operational resilience. And that comes from hyper-automation. So therefore, we have seen that most of the banks or the other players have gone for their core banking system or gone for their back-end systems, the ERP systems, whatever they have gone for. But the day has come to go beyond that, the plus, or beyond the core banking systems, through the adoption of the various fintechs, through the adoptions of the various emerging technologies like the blockchains and the others, and how we can really get into an hyper-automation stage. The objective is finally to give me much more resilience, much more operational resilience. And therefore, what we are seeing also, and that is the trend, is that how do I stay very innovative? And when I say innovative, so intelligence, hyper-automation, and then innovation. So when I say innovative, it's basically the innovation in the creation not only of a technological architecture, which is basically to plug and fit all the types of things that's happening, but it's also a question of not to build up a huge, monolithic, mega, gigantic organization, componentization of the system, how to get into much more partnering, creation of a major ecosystem around me, the componentization, plugging players into my own operations, and therefore to stay, and that is the key word today in the banking or in the financial sector world, is agility and nimble-footedness. How through my people, through my process, through my strategy, through my technology architecting, I continue to become absolutely agile and nimble-footed, so that any such shock comes or any new technology comes, I am there to make it very, very adaptable. Say, for example, today we have already started seeing in the major metros, courtesy Reliance Jio, the 5G coming in. And this 5G will be spreading to the interiors of the country very soon. So if the banks or the players are not so nimble-footed and agile to really immediately adapt this new technology coming in, and therefore increase or use this technology to increase their inclusivity, use this technology to increase their intelligence quotient, to their automation quotient or to the innovation quotient, if they are become so much deeply mired and rooted into their style of working and they are not in a position to adapt, then that will possibly really trigger a very bad death for such organizations. So it's intelligence, hyper-automation, innovation, componentization, the loose structure, the process, technology, the strategy, that definitely sets the tone for the day. Also, additionally, I must say the two other factors which is coming up, and that will also be shaping up the bank and the financial sector's players, the roadmap, is the environment factor. Recently, RBI also has published their own advisories for how they should be operating. It's not their own ESG quotient, it's also the assessment of the ESG quotient of the ecosystem in which they play, the people that they are lending to, how the PEs are actually withdrawing from the world where they feel the ESG quotient is low, how the lenders are withdrawing from the world, how the customers are also withdrawing from the lending or from borrowing from a lender whose ESG quotient is low. And therefore, how do I really apply this automation, intelligence, innovation, not only in the enhancement of my own ESG quotient, but also in the enhancement of the ESG quotient of my entire surrounding and the ecosystem. And the second one is, of course, how through an appropriate intelligence and interpretation of the world, I actually take a much more predictive and preemptive stand to the risk situation which is upcoming, to the risk analytics. How do I really automate much more, and how do I be much more innovative to the upcoming risk standards and the compliance. So that actually sets the tone for the day. I think there will be a lot of discussions, deliberations today, sessions which will go much beyond the points that I have touched upon. Some sessions will be touching upon these points, some sessions will go beyond these points, and I will take a pause here and look forward to these sessions. And I will just end by saying that Mark Twain once to a speaker said that after he spoke to the speaker, he jokingly said that if you were silent, then people would have thought you stupid. All doubt, so therefore I will now request the flow of wisdom from the future for the today's all deliberations which will come now today. And thank you very much for giving me these opportunities to set the tone for the day. Thank you so much.
Thank you, Mr. Dasgupta. Now I would request Mr. Chandrasekhar Ghosh to kindly address us. Thank you, sir. Over to you.
Good morning to the respected audience and dais. Ambarish Da. I am not in a market expert. In front of all the analysts and like is in in front of Tamalda, I cannot like to discuss about the market. So, but I'll be like to give little bit the situation of the country and financial inclusion, how it can be helpful for the people. The global economy is going through a tough phase now. The war one side and COVID is another side. Large economy under visible as a stress. But Indian financial market have been more stable than the global. If I see that the data shows that the financial year 22-23, GDP is widely projected in at 7%, inflation controlled under 7%, and credit growth in August has come 15%. All these three parameters shows that the Indian economy are better than any economy of the world. And we recently seen that Indian economy have been crossed the Britain economy. So growth potential in India is immense. If we come to this, the financial inclusion, so financial industry is playing a better role to do it on that. Indian financial sector is on an upward journey, no doubt. And retail investors' awareness and willingness is at an all-time high. If I say that the Demat account jumped 63%, which is amount-wise 89.7 million in the financial year 21-22. Tier 2 and Tier 3 are also contributing and penetrating in this type of significant number of Demat account. Younger audience contributed to the large pie of the Demat account. This is a very good focus given to the Indian economy. Return for the retail investor has also been promising over the last half a decade. All this has led to one of the best Q1 number in almost a decade on most parameters. Corporate and SME are coming back to banking sector for capex funding. Digital adoption was accelerated. It's a record during the time of pandemic and even after the pandemic. If we see that the UPI transaction happened in the first quarter of 22, it was in 14.55 billion transactions have been done, which is the amount wise 26.19 trillion. But this financial year, first 4 months has come to double compared to the last financial year. That is also showing a very good jump. Growth about 99% in volume and 90% in transaction. What is the opportunities of Indian banking sector? Opportunities of the Indian people are living in there. And it helps us to the financial inclusion and economic growth. Another one is coming, the new technology like the artificial intelligence and machine learning will further enhance our capability and efficiency. What are the challenges? Couple of challenges we are like to face. Legacy system pull the sector down, at times giving the advantage to agile startup and new banks. Banks must rethink their operating model to fully utilize the power of digital. Regularly, banks should be focused on that, the rethink of their reskilling and upskilling the staff capacity line with this, the digital. With the digital growing at the place, security risks are on rise. So that is also the another risk. We see that customer education is need to build up in the ground level, how they can be like to transact and avoiding this security risk. Upskilling, upcoming technical advantage such as the digital rupee will bring newer opportunities for all of us. Financial inclusion has to be the priority of the bank and financial institution. I wish the success of this day for all of us. Thank you to giving the chance to me.
Thank you, sir. We have started with innovation and intelligence. We have covered the economy, and now we would request Mr. Roy to address on connecting the dots between economy, banking, insurance, healthcare, and education. So Mr. Roy would be joining online. So can we have the camera with him? Mr. Roy, are you with us? Can you hear us properly?
Yes, I can hear you. Am I audible?
Yes, yes.
Visible?
Thank you. So I would request you to kindly have your address. Thank you. Over to you.
Thank you. Thank you. And it's always a pleasure and privilege to be with Bengal Chamber, but never more so than now and today, because while Bengal Chamber is nearing its 200th anniversary in another decade, I'm so happy to announce that this is the time when we feel so much together in spirit, because this is the year that we are celebrating our 150th year in India. So PwC has been in India for 150 years, and it's such a privilege and such a legacy that not joining this conference was not a choice, though I was away, but I couldn't resist joining today, and especially in this August company. Well, we are talking about the economy, and we are talking about various facets of the economy. And I will just share my screen for a few numbers to be there, not for you to read through and the numbers, but just to hold some points. So whenever we speak about the economy, and we speak about so many different facets of foreign investments into India, for the flow of money, growth of several sectors, the infrastructure, and so many different factors, which are really the macro factors. Sometimes it's important to look at the micro. And any developed nation, or all the developed nations in the world that we label as financially advanced or really booming at this point of time, there is something in common that you will find in all of them. And that is manifest in two ways: ready access and affordable access to quality healthcare and education. Very advanced regulations. Largest single sector in our non-life insurance is still only 75,000 crore. So there's a lot of ground to cover. And unless we have full access to the healthcare for all sections of the economy, ideally through pooling mechanism like insurance, we will not be able to create an enabling environment for employment, for productivity, and for growth of the economy. It is a very encouraging trend that we see, that is the growth of the health insurance, as well as the spread of Ayushman Bharat, through which the below poverty line, now they have an ability to spend 5 lakh rupees for illnesses across the country. So which should have spurred the growth of a lot of hospitals around. Unfortunately, while we can put up the infrastructure, we do not have sufficient numbers of doctors and nurses, and that's another thought coming. In education, well, our enrollment rates and completion index in education have traditionally been low, and they were globally in the 60th percentile for enrollment, and completion rates are low. The dropout rates are high. But on gender parity, we have seen considerable growth, and that's an encouraging sign. However, employability after graduation continues to be low, and that's something which does not create skilled, efficient pool of people who should have been, the largest pool of people in the world in the areas of growth, which are technology and all other skills which we call as professions, which are the legal profession, the accounting profession, consulting profession, as well as the medical profession. So we need to look at that. While our engineer rates are high, we are low in otherwise. If you look at payments, now we see payments, and we also see move from cash, but not so much as we would expected with the rise of digital payments. However, there have been certain silent revolutions going on. And payments are a key indicator of adoption of technology through which people can avail of all these services that we have today all around us. So certain numbers. Now, UPI we know how much it has grown. The number of transactions in UPI have made India the largest online transactions of money across the world. However, that's not the whole story. Some silent revolutions are underway. The NETC, the tag system, the toll system, now that's completely moved to online payments. Only very few people pay cash nowadays. Even cards, the combination of debit cards and credit cards, where adoption and usage in India was low earlier, the numbers have grown. And the prepaid instruments, and I'm not even getting into the newer revolutions like BNPL, all of these are running silent revolutions of their own. And this has made the Indian economy today, a very attractive place for everyone to come and do business because of the trackability, because of ability to address people across the country, which was always a challenge through physical infrastructure of collection. Now, if we come to the more traditional financial services, asset management, banking, and insurance, well, all of them have been accused earlier, say 2 decades earlier, of being concentrated in urban areas, as well as doing 90-95% of the business from top few cities. Now that's actually poised to change. Some of those are still true. For example, if you look at non-life insurance, if you look at even health insurance, it is highly urban today. Life insurance has moved, especially protection insurance has moved all over the country, to the surprise of some of the industry players themselves. However, if you look at banking, now there's so many segments of banking which have moved, which have come on, like small finance banks and payment banks. We still have a lot of ground to cover in both these areas, insurance and banking, to really make sure that everybody avail of it. Most people have an account today, and that's a great place to start. But like credit cards and other pieces where just having it is not important, usage is important, we need to keep moving the usage to the more organized channels. As far as asset management is concerned, as far as people's participation in the growth of the Indian economy, in the growth capital formation through stock markets, where you can get the Indian population to pool in rather than depending only on foreign investments or FI investments, we are still a long way away. The participation in stock markets of the Indian population is still less than 4%, and that's something which needs to move up. So we are at a very interesting cusp of history. I think the building blocks are there. The enabling regulations are They're there and they're moving every month. Every month we see some or other enabling regulations coming in from all the regulators, from all the sector regulators. And that's something which creates the platform for transportation of money, which actually revolves into transportation of goods and services, and especially those which will create employment in India. So in a way, I think that's the picture that I wanted to talk about, where the financial services sector is intrinsically involved in figuring out how the employment is actually generated not only in select areas, but across the country, making every place livable and workable so that the spread of population is uniform and grows with availability of affordable, high quality education, health, and employment opportunities. Thank you very much. We'll wait to hear from all other speakers today. An interesting day ahead. Thank you again.
Thank you, Mr. Roy, for wonderfully connecting the dots. For the audience, we have an announcement that if you can scan the QR code of the thank you card that you have received, you can watch all the profile. And you can also watch the program in Facebook and YouTube link, which has provided to you. Now, we have a very pleasant task to perform. I would request the mentor of the Banking and Finance Committee, Mr. Tomal Bandopadhyay, if you could kindly join us on stage, sir. We have a very pleasant task to perform. I would request my colleague Moon to hand, sir, if you may kindly join us, sir. Sir, I would request Tamal sir to hand over the memento to our former president, Mr. Ambarish Dashgupta, on behalf of Banking and Finance Committee, and also to Mr. Chandrasekhar Ghosh. Since Mr. Roy is not physically present with us, we will definitely send our memento to him. With this, if there is any question that you would like to ask or anything that, just give 1 second if anyone wants to ask any question. Any question? So I think we have, the speakers have explained it quite well. So with this, we conclude this session. We will start this next session immediately. Thank you all. Thank you. Thank you, sir. Watch us live on there. So we have very eminent speakers with us. It's a discussion, the next session is the discussion on new landscape in banking and finance post-COVID. I would request Mr. Hitendra Dave, CEO HSBC India, to kindly come up to the stage, sir. I would request Mr. Nitesh Ranjan, ED, Union Bank of India, to kindly come up to the stage, sir. I would request Mr. Rakesh Singh, MD and CEO, Aditya Birla Finance Limited, to kindly come up to the stage, sir. Mr. Rajiv Sabarwal, the MD and CEO of Tata Capital Limited, he will be joining in Zoom. I would request also request Mr. Tamal Bandyopadhyay, author and columnist and mentor of our Banking and Finance Committee, the Bengal Chamber of Commerce and Industry, to kindly come up to the stage, sir. Has Mr. Rajiv Sabarwal has joined?
Yes, I'm there. I'm there.
Thank you, Mr. Sabarwal. With this, I'll hand it over to Mr. Tamal Bandyopadhyay, sir. Yes, you can use the mic.
Good morning and welcome to the very first session. New landscape in banking and finance post-COVID. Thank you, Bengal Chamber, for saying that COVID has gone away. Okay, because we keep on seeing still stray incidents of people dying, different parts of India. Aapka muh mein ghee shakkar chamber. Post-COVID. So, and thank you for having a very interesting set of people, because we have a 360-degree, we could have a 360-degree view of what's happening in Indian banking and finance. Two gentlemen from NBFC segment, two bankers, and they are from different, one is a foreign banker, Mr. Dave, and on my right in Union Bank, Nitish Ranjan. And of course, Rakesh represents a very big house for NBFC, and Rajiv, and there we have Rajiv Sabarwal joining us on, I think, through web. Is it there? Welcome.
Yes, I'm there.
Welcome. So two very large non-banking finance companies, and the largest foreign bank and a very large public sector bank. I'll just give a very small introduction. And then, because we have 50 minutes time, and we'll try to take one or two questions if you have anything and all. So we are all pleasantly surprised. I mean, in 2002, we never knew that by 2022, 2 years down the line, and even after going through this COVID pandemic, the Indian banking sector would be, I would say, so strong. It's actually transformed itself. And there are multiple aspects to this. Corporate India is deleveraged to a large extent. Bankers are pretty discerning in giving money. So we are complaining that credit is not taking off, but as we speak, credit offtake is almost 9-year high, 15% plus. So it's happening, and their balance sheet is, for most of them, it's very robust balance sheet. The bad dream of NPA is behind us. Fresh slippages are very little, and whatever NPAs or non-performing assets are there, most banks have actually done the so-called provision coverage ratio is very strong, very high. So overall, we have never seen the banking sector so strong. And Mr. K.V. Kamath had said that this is the best scenario for Indian banking in past 50 years. So with this, I will ask each of you to give bankers and representative from the non-banking segment to give a bit of a preliminary remarks. We'll have a just conversation, no long monologue and all. And slightly finer aspects we'll get into detail, provided we get the chance to, time permits. So over to you.
And recover the loss that we had in the 2 COVID years. So definitely this kind of growth looks quite sustainable. While people talk of pent-up demand, and in FMCG sector, we are also hearing the words like revenge shopping. I think it is much more than that, perhaps. So if we look at even Union Bank of India, today in all segments, we are growing in double digit, which was not the case even a year ago. So from August, September last year onwards, we have really started seeing the pickup. Retail is definitely the leading sector amongst all. But nonetheless, in the corporate segment also, we are seeing good expansion, few large and few mid-segment greenfield expansion. But in terms of brownfield, it is happening across the sector today. So it's not a countable numbers, whether it is textiles, cement, renewables, airports, oil and gas, apart from the roads. Every sector, there is a good demand happening today. And I'm sure not only the credit, the new paradigm shift which is getting into the banking, and that is from the digital transformation. I think that is going to take us forward in a much, much stronger way in the years to come.
Thanks, Nitish. This is only the preliminary remarks. So all credit goes to the banking system, but you also remember that Reserve Bank of India and government, both of them played a stellar role during this crisis. RBI flooded the system with liquidity. Different windows were opened up for different segments, and governments also came up with various schemes, government-supported schemes. So it's a combination of bankers becoming more efficient and also support extended by the regulator as well as the government. So let's bring in a gentleman who is little disadvantaged because he is not with us. He's probably in the Tata House at Fountain. So Rajiv Savral sir, you are there? Yeah, Rajiv, you can hear us?
Yeah, now I can hear.
Yes, so over to you. Give us from a, Nitish spoke about the banking segment, the credit is picking up and he has no complaint, not the infrastructure alone. So the discussion that still the corporate India is sitting on fences, not taking a call on investment. He's saying no, he's saying every year there's a growth. Now from sitting in your perch, literally, Rajiv, from a very large non-banking finance company's point of view, how do you see the new landscape?
I think what you said initially is absolutely right. And what, I would echo Mr. Kamat's comment that things seem to be completely back to normal. We can see it visibly outside. You also spoke about the fact that, COVID has gone away. Well, there may be cases of COVID. I think the fear of COVID has gone away. I think that is more important. And earlier also when we had a complete lockdown, it was more of fear of COVID. So fear of COVID has gone away, which is absolutely right. Credit growth is happening across segments, whether you talk about rural, whether you talk about retail, whether you talk about housing, whether you talk about corporate. I think corporate was probably, the investment cycle was the last to pick up. But we are seeing early signs of the same. Companies are looking at expansion, companies are looking at acquisitions. So there is clearly buoyancy in terms of growth. The only segment, I believe, which has got hurt is the segment which is dependent on exports. Because of the global economy not doing well, I think anything which is related to that will see a moderation and may see a decline also. So that is the only segment which we believe has a challenge. Delinquencies are down. Most of the companies are seeing very low NPAs. So the ability to take, risks is also higher. Digital, because of COVID, digital has pervaded each of the businesses much more. So cost of delivery of business has gone down. All of that is flowing into the P&L of, in the financial services sector, and you can see it being shown on quarter-on-quarter results or year-on-year results. So from that perspective, I think we are seeing a lot of good things.
Economy, not us. So here, let's hear Rakesh from Aditya Birla Finance. In the same way, your overall view, and then we get into a little micro issues.
Thanks, Tamal. And I completely echo what Rajiv mentioned and earlier.
Let's say something different. No, if you echo, it will become very boring.
So I'm just saying, structurally, if you see, Indian economy has gone through a lot in the last 5-6 years. The Aadhaar, the Jan Dhan Yojana, the account aggregation, the GST. If you look at GST collection has been so strong, and that clearly demonstrates the activity in the economy. The digital adoption, which everyone mentioned, and today on the consumer side especially, if you look at the digital, the way it is being used to reach out to the consumer, and small ticket loans at a fraction of cost, it's being delivered. And that really provides a simplicity and convenience to the consumers. A lot has to be done on the MSME side and the SME side, which the government again is trying to create the digital infrastructure. If you look at ONDC, which is again being, by the end of this month, it's getting launched in 3-4 cities. So clearly, all the building blocks are there. If you look at the corporate debt to GDP has come down to 47%. It used to be 62% in FY15. Balance sheets of corporates, leverage at MSME levels or everywhere, I think it's looking in a much, much positive way. And yes, we need to be cautious, optimistically cautious in terms of building, because in the credit business, there are cycles and there are some external factors which can impact it. But yes, we are very, very bullish the way we see growth in the next 3 to 5 years in the country across the consumer and the SME side. And even if you look at the MSME, which is a key contributor to the GDP, it contributes close to 33-34% to the GDP. But the credit to the MSME is only 16%. So there's so much of catch-up with the formalization of economy which is happening at the back end, which we don't realize. I think that will provide a fillip and impetus for the growth in the next 3 to 5 years.
Thanks, Rakesh. So Rakesh is also equally bullish. The third person on the panel, only thing he used one word, one expression is this cautious optimism. So everything is fine, but let's not be complacent. Let's not be over enthusiastic. Let's not throw caution to the wind. Mr. Dave, he represents the largest foreign bank. And I think you have larger scheme in mind, because normally I have not seen HSBC going to media and such a big advertisements all over the place, plus 2-3 months, full page advertisement, etc. So you wooing the customers in a big way. So you sense a big opportunity in this post-COVID world?
Yeah, no, I think it's, you would have to be a real cynic in 2022 September not to be optimistic about the country, right? It's you travel around the country, you meet business people, you meet shopkeepers, you meet whoever. Largely you are getting a positive feedback, but I just thought I'll just contextualize it also in a global setting, because you can be good by yourself, but if you want to see if you just step back and see, okay, what's happening in the rest of the world, I just thought changes some of the narrative. So clearly you look at places like Europe, right, where they have real issues out there, right? The prices of energy have just they have not gone up by a few percentage points. They're multiplied by 3, 4, 5 times, right? Some factories which were paying 20,000 euros a month are having to pay 150,000 euros a month to run the same factory, right? It doesn't make sense to run the factory. Now that has implications. If everybody decides it is not making sense to run the factory, that has implications for production, labor, wages, etc., etc. And it's not just about the price of the energy, right? It's also about availability of energy. So you might, even if you're willing to pay, you might just not have enough availability. In other angles, we shine so much more, right? I mean, they've had multiple changes of governments in most of these countries. US is the only one at this juncture which according to me remains still attractive, but we'll see, because the Fed is going to do what it needs to do. So I just thought the audience should just have a relative context that we are really looking good, not just because we are good because of the factors mentioned, but also if you're an international investor, there's not too many. I think Tamalda mentioned about banking and Mr. Kamat's comment on 50 years. I think the market is reflecting it today. When I was coming on my here, the bank Nifty hit its all-time high today. So clearly it's not something which academics are talking about or something. And finally, I think to the point that Rakesh made earlier about balance sheet, I think, again, since this is a post-COVID, pre-COVID kind of a thing, you look at any segment of the economy, you look at banks. In the 5 years before COVID, heavily focused on balance sheet repair, provisioning, etc., etc. Currently, experiencing the kind of credit surge everyone's talking about with very little provisioning coming through. Incremental lending is turning out to have the lowest loss ratios. You look at households, everyone thought post-pandemic, the amount of write-offs we'll have to take in our retail lending books will be very, very high. It's turned out to be much lower. You look at the credit growth. The MSME credit growth is now in 20% plus. So there is clearly, balance sheet of government is good, balance sheet of corporate seems to be good, balance sheet of household seems to be good. The government is having revenue buoyancy. GST is one where everyone talks about, but you look at corporate income tax collections, personal income tax collections. Nobody pays taxes for out of nothing. That means the profitability and incomes are also higher. So net, both on a relative basis and absolute basis, we are quite well. But I just hope that, I think we need 10 years of this. So let's just see where the panel can contribute to that shaping of that thinking.
Thanks, Mr. Dave. So He has given a little bit of broader perspective and how we are different from the rest of the world. He has not used the word decoupled, which many of them are saying, but one area which everybody is now quite aware that the growth projection, growth estimate probably may not be met because the first quarter GDP growth was not as much as we thought. As we speak this morning, Fitch again downgraded its June estimate for Indian growth, both for 2023 and for 24, but not in India isolation, it's the global growth talks about. But every agency, you name it, they are bringing down their estimate for growth story. So on the other hand, we are seeing all this consumer demand, credit growth, so on and so forth. So we'll quickly have this, time is permitted, is around 35 minutes we left, 12 o'clock close, we'll sharply close. Can we have one microphone among the audience if there's anybody wants to ask any question? Yeah, just make it, we'll go into that. Just give a microphone to this gentleman. So just make it very brief. No comment, only if you have any question. This gentleman. Okay. Just, can you introduce yourself and make it very brief, 30 seconds.
Very good morning. This is Ramesh Bhojwani. First of all, many congratulations to BCCI on their
just talk a bit louder.
Many congratulations.
Sir, cut all the frills. Just get to the question because our time will be running out.
Okay. Today the world is facing two dinosaurs in inflation and interest rates. They will have a very serious and sizable impact on all economies around the globe. Would like to know your thoughts and comments on the same.
Okay. Let's have a, just give the mic to the other person and then we'll answer both the questions and then we'll get into our thing. Yeah.
My name is Sandesh Bhangre. What is contribution 2021 budget in our financial market?
Sorry?
What is contribution 2021 budget our financial market?
Could you get what he's saying? Contribution of 21 budget.
Our financial market.
Okay. So first question I would ask that the menace of the double whammy of high inflation and high interest rate.
Yeah, so I'll say actually it's not two shocks. There is only one shock of inflation, and interest rate is to manage that shock very well. And it's very important to bring inflation to a benign level to ensure that any economy, and particularly India, when we are looking at a $5 trillion dream, inflation should be at a very comfortable and benign level. And but the good thing is that compared to other countries where is a race for matching 75 to 75, those risks can come to us. Otherwise, today I think we are in a very good situation managing the inflation, interest rate and growth.
The next question is about the contribution of budget. Anybody here would like to say anything?
I think from a financial market perspective, I think what you want is stability, which is not, every year you don't have capital gains tax going up or coming down. You don't have interest on dividend, tax on dividend, tax on. So I think the best thing the government is doing is keeping things steady, which is allowing the financial market to plan. Even if it's with high taxes, low taxes, you can plan it accordingly. I think the fact that you have a stock market, I think all of us must take note that despite oil being where it is, despite the war in Russia, despite our India's trade deficit which has resulted in pressure on the currency, India is one of the best performing markets both on the FX front as well as the equity front. So to the extent that policy makers and budget makers also have to be given credit, let's give credit where it's due. But I think bulk of the financial market now will depend on us, our economy, what we spoke about in the earlier session.
Thanks. Both of them said that. Incidentally, Reserve Bank of India's Monetary Policy Committee will meet by the end of this month. I think it's 28th to 30th instead of October. And probably, not probably, we will see another rate hike. We don't know, talking about between 35 bips and 50 bips. And before that, the US Federal Reserve will be meeting in the third week, and now market is expecting as much as 1 percentage point full rate hike, and we need to see, wait and watch how would RBI react to that. So let's get into that. We have almost half of it we have finished. Second half, I'll ask you a very simple thing, and probably we'll start with where is Rajiv, you are there, right?
Yeah, I'm there. If I can, Tamal, just
so
add on to...
we'll cut into this one quick round of 2-3 minutes each, the opportunities that you see, and one quick round of the challenges. So first round, I am asking you about the challenges, Rajiv, and the same kind of thing and all. Yes, everything is hunky-dory, credit offtake is 9-year high, bank balance sheet is very good, everything is fine. And of course, digitalization is a big advantage, but there are challenges we see, like for instance, MSME, you mentioned about, or someone else mentioned about MSME. There's a huge credit growth opportunity there, but we hear that the MSME which got the I would not say largest, but the government supported scheme, many of them actually will not be paid back. So there is an issue in the MSME segment. Banks are staring at NPAs, it's only being delayed. I'm sure that's true about the NBFC segment also. That's one part of it, that big challenge. Other part of it is the digitalization. Reserve Bank of India has come up with its own norm for the digital lending of the so-called neobanks. Actually, they have been playing havoc. There are hundreds of all this digital lending app, which is exploiting people in the hinterland. They're committing suicide and all. And I know personally some of the banks who had tied up with those digital apps, I can't name them, they regret for being tied up, because what those digital apps are doing, they're snatching away their bank customers and treating them their own and selling other products, so on and so forth. Of course, RBI is concerned about it, but again, managing the illegal one is a big tough task, because RBI has said that there will be a white list, the recognized digital apps, but in the hinterland, I don't think too many people will have the expertise and knowledge to go through the white list and decide who to this. So digitalization, that's the other side of digitalization. MSME is a big problem. And also we hear that banks are little more aggressive about giving loans. I would ask both you and Davi Saab to talk, because it's plain arithmetic. If your loan book grows up, you can show the NPAs are smaller. So this discretion is always not happening, particularly the state-run undertakings. We have seen one of the southern state-run undertaking. So many of the states now reaching out to the banks through their undertakings, which are being just floated to bank money. And because they are guaranteed by states, banks are pretty cool about giving them without much due diligence. So these are a few things, and many more are their challenges. So starting with you, Rajiv.
Yeah, no, thank you, Tamal. I think you've put,
back.
Exports are not going up, which we can understand because of the global economy, but imports are moving up, they're shooting up. And that is creating another challenge. And I think while there have been certain steps which have been taken, I think we need to take probably more steps in the area of how do we make ourselves more self-sufficient on oil. Are we putting in the amount of investments which we would like to have in ensuring that oil exploration or refining is better? Similarly, gold always remains a challenge. We take certain steps, imports go down, but again they shoot up. So how do we ensure that we can produce more gold inside the country rather than being dependent outside? Recently, the government has taken some steps and trying to bring in more investments on those fronts. But I believe both these areas require far more investments than probably what we have done in the past. Another area which the country always looks forward to is creating more jobs. It's very also the fact that we need to ensure that rupee stability remains. RBI has done a phenomenal job over the last few months in keeping rupee stable, but more can happen if we can get more manufacturing in India. So how do we make land acquisitions easier, process of starting a business even better? While we've improved, but how can we make it better so that when people decouple from China, how do they look at India as the prime opportunity and not Mexico and some of the other economies? So how do we make our country more attractive is extremely important. Another point which was mentioned about MSME, while we are seeing good credit growth in MSME, I think a large portion of it is happening because of ECLGS. Pure organic new investments or growth in MSME still has to catch up. I think it will come with a lag, but it needs to come back. So if MSMEs need more support, that needs to be provided not only through credit, but through better payment cycles, through support on investments. So that needs to happen. And the last is what you mentioned, Kamalda, in terms of where we should have caution. And I think Rakesh also mentioned it. Most of the mistakes happen when times are good, not when times are bad. So, all of us as lenders, as well as the industry, need to support growth. It's extremely important. It's our responsibility to support growth, but also ensure that we keep the leverage levels of everyone, in individuals as well as MSMEs, in control, so that we are in a situation where they can last for long. That's very important. So those were some of my comments which I wish to offer.
Thanks, Rajiv. Rakesh, you take it forward. So MSME, primarily he echoed what I said. There's a government guaranteed scheme.
Yes.
But many of them have already started defaulting. I don't want to talk more. I have already spoken more than why should I.
So two areas of challenges which I want to highlight is, one is when anything grows really fast and exponentially, that puts a systemic risks. So if you look at all the fintech startups, and you mentioned about the loan apps and all in terms of doing BNPL, and so I think this digital lending guideline which has come from RBI is very welcome because it's prudent. We need to put guardrails so that we should not have any systemic risk going forward. So that I see as a challenge, and if the sooner we put those guardrails, I think it will be better for the consumers as well as the lenders and overall industry. So that I see as a challenge, and I think it's been addressed by RBI in terms of bringing the new regulation. The second one, and which Raju mentioned, but I must tell you, MSME, a lot of these MSMEs was supported because of the liquidity provided by RBI and the Finance Ministry through moratorium, through ECGLS and all. And all of them, their repayments will start coming and is getting due now. If they would have got a 12 months moratorium or 24 months moratorium, the repayment will start now. And now we will face their repayment capability, whether the repayment capability has come back. But the way the overall economy is, we are very confident that it will, because the economic activity on the ground has picked up, and it has picked up across the segments. Hospitality, travel was lagging, but that also in the last 4 or 5 months has picked up so well. So I think it should be taken care of, but these are the two challenges which I see.
Good to hear Birla Finance, it's a large group, is saying MSME may not be a challenge because the demand pickup is across sectors. That's what you're saying. So the MSME segment will get the benefit. Davi sir, over to you. I spoke about digitalization on the other side of it. I spoke about MSME. I spoke about some of the banks are throwing caution to the wind to grow their balance sheet and arithmetically show lower NPAs, and particularly some of the state-run undertakings are taking advantage of banks' greed for growth. And there are many I'm missing out. What are the challenges you see? Hand on heart, be frank.
Yeah. No. I think you might being a bit too harsh. I think you are assuming that bankers haven't learned their lessons. From 2015 to 2020, that's all the bankers did, learn their lessons. We were castigated by anybody. Anybody walking on the road would say, hey, you don't know how to manage your risk. It was like random. So it has become a little fashionable. So, and our industry did wrong things, so we have to take the blame also. But I think on behalf of I'm not obviously a spokesman, but I would say there's been a tremendous amount of learning that has taken place. I think I'm aware of the kind of questions that now get asked on projections. Earlier, anybody would just say, I'm building a highway, 20-year road from 5 year onward, traffic growth of 10%, tariff growth of another 7%, etc. And broadly any chartered accountant who was good would just send that to us. So I think there is now a lot more scrutiny. There's a lot more cash flow analysis that gets done. More and more banks are lending against cash flows. They're lending against specific invoices, specific receivables, specific payables, etc. So I think just to balance the narrative, I don't want this group to leave this room thinking, we haven't learned any lesson. But in terms of some of the things over and above what both Rajiv and Rakesh mentioned, I think as we go more and more digital, and as we go more and more away from in-person conversations, we are expected to experience significant amount of fraud kind of activity. The sheer number of accounts that are getting opened, the sheer number of transactions that are getting dealt, the sheer number of OTPs that get compromised, the sheer number of things of that nature, I think that's something which as an industry we have to be quite prepared for, because it is a matter of time before more than 90% of the banking system transactions take place using phone, and there is still a level of, despite all the attempts to say, please don't share OTP, banks never ask you for your password, banks never ask you for personal information. I can tell you even today well, maybe I shouldn't speak about the audience, but at my home, if my dad got a call saying your points are expiring tomorrow, sir, I will certainly, you want me to, I feel very bad for say senior citizen like you, I'm just sending you a number, you tell me, I'll revive you, I'll whatever, extend your points, and this happens. So this plus digital signatures and things. So that's, I think, one. I think clearly the second is cyber fraud. I think it is a new risk. All of us are learning. I think the conventional old risks, credit risk, operational risk, reputational risk, I think I'm not saying we are there, but better than where we were 5 years back. But cyber again is an area of risk where none of us are fully trained. And therefore that's the other thing. And we've seen examples of that happen in our part of the world, right? Where hackers using some link, some email, keep getting in. So we as a bank keep sending look-alike emails. So my email address might be hitendradave@hsbc, but it'll go as a dot, just to check if my staff is learning and saying, click on this link for the next training program or something. So I think all of us are going to have to spend time on that. And third, I think point is made. I think there are economic cycles are there. But at a macro level, if I had to call out a risk, it is of our trade deficit. I think Rajiv also mentioned it is unsustainable, right? At $30 billion, $28 billion a month, it is unsustainable. It is good for us that the portfolio flows have started coming back last 2-3 months. But if there is one macro issue which we collectively need to be aware of, I think it is that.
Okay, thanks. So he has brought in new things which I did not flag off. What he said at the last, and also the fraud as we go along. And of course, I probably took a little journalistic license, and you said that I'm exaggerating all the fear about banks' capability. Banks have learnt their lessons, so they are pretty efficient now. Time will tell, so let's okay. Sir, I have the same thing, but what we see that probably public sector banks are a little more challenged than others, because your growth on the digital front is, you're not as savvy as the private counterparts. And if you go by Reserve Bank of India norms also, the way public sector banks are losing market shares, even I'm not talking about coming from 90% in 90s to 70% sometime back, and now early 60% now. But incrementally, if you see that every 100 rupee credit, public sector banks are less than 20 rupees from going. And even deposit, they are the proxy for sovereign, but people are more comfortable putting more money in private banks than public sector banks. So this is a sector-specific challenge. We had nationalization, then we had consolidation recently, talking about privatization of 2 banks. I don't know what next. So tell us what are the challenges you see as a public sector bank.
First of all, a quick comment on what Mr. Dave said and Mr. Singh said, is that, banking is truly a business of taking risk. And it's true for all kinds of lenders. And I think with the hammer of AQR hitting all of us 6 years ago, all of us have started learning, and that learning exercise has given us a lot of inputs that how actually we should look at banking and the credit per se. And fact is that banks, irrespective of the ownership class, have faced this challenge. One set of the banks, other set of the banks have faced this challenge, but we are learning that. Today we are in a much stronger place, whether it is origination, underwriting, monitoring, we are in very, very stronger place today. But yes, it is always a work in progress. And secondly, I think somehow the narrative that I often hear about the MSMEs, about the ECLGS, that there is a lot of NPA in this. I can definitely tell from our book, and we have disclosed it in our quarterly earnings call also, that if we look at our ECLGS book, then of the total ECLGS book, only less than 3% actually has become NPA, and less than 2% additionally is into stressed asset. So it's not as alarming as it appears to be. Point is that we have to look at, and it was Mr. Savarwal also said, we have to look at MSME business very differently. It needs some kind of support from the government. It also needs different approach from the lenders in terms of giving credit. To your particular question, I think we should not paint every public sector bank with the same brush. And I'll invite you to open an account with Union Bank of India and experience that. Today, with 5 clicks on your mobile app of Union Bank of India, you can get personal loan. Today, a businessman, a small businessman, let's say 50,000 rupees of loan if somebody has to take, it is a 20-minute process without visiting the branch of the bank or without speaking to, interacting with any of the staff of the branch. A person can take 40,000, 50,000 rupees loan on the mobile app, on the website of the bank, and account gets disbursed actually within 20 minutes. So that is the change that is happening. Again, we are in a learning phase. Some banks have taken these initiatives in advance. Some of the public sector banks are getting into this. But compared to 10 years ago, today technology disadvantage is not to that extent. So like today, what we are starting on the new journey of creating a platform, API-based, microservices-based structure, other institutions are doing the same thing. So it's a kind of great leveler, and we have to see that how do we leverage. In terms of the challenges that I particularly see, and without repeating, which has rightly been highlighted, I would see broadly from the macro side, there is a global challenge of global slowdown, further imported inflation risk, exports are could be further at risk because of the trade slowdown. And one more global risk could be is the sentiment. Because see, as I said in the beginning that we are seeing some green shoots of corporates of different sizes coming for greenfield expansion. But you know, corporate expansion is always what you call influenced by the sentiment more than the interest or anything. So if that sentiment deteriorates, I think despite India being in a sweet spot, that would be a great risk. Secondly, I would say risk for the banking sector is the quote unquote the slowdown in the bankruptcy resolution process, which was very good in the beginning, but it has completely slowed down. That we have to look at. And two internal risks to the institution that I would say, one is about the building partnership. I think banking of tomorrow.
Discuss about fraud, which Mr. Dave spoke about, and Nishit spoke about two very important things on the HR front, and that's in private, all bankers are saying. I mean, people are leaving left, right, and center. The turnover is 30, 40, 50%, and every bank is now thinking about how to retain them to pay money because, you know, they are going to all those kind of neo banks, they are going to IT sector, so on and so forth. So that's one part, and second part, what Nishit said is very important, is the IBC. As you know that India got into this insolvency code in a record time in 2016 August, Pranab Mukherjee, then president, signed off, and then, but it's getting slow. And there's a recent Supreme Court judgment where actually gave it a little twist to it, that earlier it was there that once, you know, that NCLT has to admit if it's convinced and if the application is complete. Now it says no, Supreme Court says no, it doesn't have to. There's a syntax is may and shall. You know, under section 7, it talks about may, which is for the lenders, and under section 9, it talks about shall. It's about the other creditors, the non-lenders. So Supreme Court judgment says yes, if NCLT finds, even if it's complete, it's for non-lending creditors, it will accept it. But for lenders, it may, it's up to the discretion of NCLT. So it has gone into a new, new trajectory now. It's already slowing, process is getting even slower. So we have about less than 10 minutes, so quickly you'll go. Is there any question from there? One question we can, yeah, just This gentleman, sir, make it very brief.
Yeah, sir, I wanted to know from the panel, I understand that there is a lot of demand and there is a lot of credit offtake from the banks. But our finance minister says that the corporates and the industry is not investing well. And she compared the corporate industry to the Hanumanji, who he has a lot of strength, but he doesn't know. So someone has to tell Hanumanji that you have a strength and you start performing. So I wanted to know from the panel, what led finance minister to make a statement like that? Is the industry and the corporates are not investing or not performing?
Sure. So where is the credit demand coming from? Finance minister saying there is corporate is still not investing, but 15% plus credit demand. Mr. Dave and Nishit, who wants to take it? You? So, Ms. Dave?
I think it's a valid comment by the finance minister, because despite the earlier part of this session where all of us were uniformly positive on the economy, the number of industrial houses who are talking about significant amount of fresh capex. I think the credit growth we are seeing is more maybe inventory financing, because the value of the inventory has gone up. 1 kg steel used to cost X earlier, now it costs X plus, so that is the plus that also kicks in, plus exports, etc. I would have to say that I think, and it's a counterfactual, but I think the one thing that might be holding people back is the war. I think just what happened to oil prices. Now you have newspapers talking about Fed funds rates will go to 4 quarter, 4 half. Then you are not, because when you invest, you're investing, taking a 20-year projection with this level of uncertainty on input prices, inflation, interest rates, currencies. That could be one factor, but you would have to, I would like to end this particular question on an optimistic note that it would take boards now enormous amount of conservatism not to reflect on the demand conditions prevailing in the country.
Thanks. So we'll, this gentleman, can you make it very, very brief because we are running out of time? We have 6 minutes left and we need to have 1 minute each from all of them. Yeah, please.
Hello, I'm Girish Raipuria. I work as a financial and commodities market consultant. My point is we have discussed positive factors and parameters which is affecting Indian economy very well. But can we identify any major factor or a parameter which may affect the Indian economy, financial market or banking sector in the long term negatively?
Okay. I think you have already discussed, but you want to take it, Rakesh? No, any major threat, that's what I'm saying.
So, I think we heard...
Post-COVID regime and the new landscape, everything is hunky-dory, looks fine. Most of the things are positive. So in 1 minute, tell your thoughts about opportunities and maybe some specific sector you can talk about also.
No, I think the biggest opportunity today for India is in manufacturing. With the decoupling from China happening, how do we make our country more attractive for more investments and make things happen much faster? I think that's the biggest opportunity which is staring in front of us. The other is all about what we have seen in terms of financial segments, the investments which have happened on payments, the infrastructure, digitalization which has happened. I think that is another opportunity which can significantly bring down cost of operations over a period of time. I think today we have seen more of investments. The benefit of that is supposed to come in. And the third thing related to all of that will be increase in per capita income, and that can really take the economy forward. So I think these all opportunities exist in front of us, besides many more.
Thank you. Thanks, Rajiv. Dave sir, your turn.
I think I'll just say that I think there is a growing sense, at least within HSBC, that we are at a tipping point when it comes to rise in incomes at household levels, and that implications what that has for the entire asset management, insurance, the wider, broader wealth industry. I think that would be one. I think it's the word has been spoken about for a long time, but my sense is we could be at a tipping point where suddenly you discover somebody in your lane is a millionaire, which wasn't the case earlier. I think the second thing is the opportunities linked to the superb work the authorities have done on creating data available So whether it's GST, e-invoice discounting and things of that nature in a safe and secure manner. I think that would be the other digital-led lending opportunities. And the third, of course, is I think India will remain the most attractive investment market for the next 10 years, according to me, and what role a bank like ours in particular can play in convincing global boards to come to the country. That's where I would leave it at.
Thank you, Mr. Dabe. So, yeah, Rakesh.
So according to me, I think the MSME segment will be there will be a huge opportunity there, because the democratization of data, which Mr. Dave just mentioned, all the digital stack which has been built, and the data will be available. How do we use that data to underwrite these MSME? Because the biggest challenge in terms of underwriting a loan to the SMEs were there's non-availability of data. Now the data is available. How do we use it, analyze it, and provide a loan to the MSMEs, and at a quick turnaround, at a very fraction of a cost, because the data is available in the digital form. So that I see is a big opportunity going forward. And MSME, which the banking credit, if you see, it's only 16% which is made available to them. Then that can clearly double it from here in the next 5 years or so.
Nitesh, you started the discussion, so you have to close it now. Essentially, what are the opportunities you see? If you can tell us, all of us here, particularly which sector you see the credit demand is picking up and so on and so forth. Because till now, till recently, it was only primarily driven by retail. Now you are getting into corporate credit. So I end here, all yours.
Thank you. So to the specific question on the credit growth, if I look at the greenfield, in the greenfield expansion, as I said, it is not very broad-based today, but there are from the large as well as the mid-corporate segment. It is happening into airports, oil and gas, some into the cement sector. But in the brownfield expansion, it is very, very broad-based. It is textile, cement, chemicals, all these sectors, they are showing the growth. Coming to the opportunity and to conclude, I would say India is indeed in a very sweet spot, and so is the banking. Challenges would always be there, but we Indians have the capacity to navigate through those challenges. One opportunity which is there across the sectors, including banking, is to adopt the technology in the faster way and push for the digital transformation. This can solve many of the challenges, bring process efficiency, cost efficiency, revenue growth, and a great experience for our customers. Thank you.
Thank you, Nijit. We are just exactly on time, just 1 minute to conclude. We could have actually gone on and on next 1 hour, but the general consensus is this. This is a very different landscape that we are talking about. Bankers are more, what would I say, more circumspect and discreet in processing credit now, because they have learned the lessons. Everybody said that they are much more efficient. And so they are ready to face the challenges chin up. And MSME, there's a challenge, but there is also an opportunity. Digital world is a challenge, but there is also an opportunity. I think the one challenge everybody also agrees at the same time, not at the micro level, at the macro level, that's the global economy, how the other countries, the developed markets behave, how the export market behaves, and so on and so forth. But internally, India is in a, I will not say it is decoupled, but it's in a much better position. Indian economy, Indian banking segment, and Indian corporate segment, it's much better off than most of the country in emerging markets and even developed markets to face up to the challenges, chin up, and to grab the opportunities and to move ahead. Thank you for listening to us, and give them a big hand if you're happy. Thank you, Rajiv.
Thank you so much.
Rajiv, the clap is for you also if you are there.
Thank you so much. Thank you so much. Kamal, you conducted it so well.
Thank you.
We have a very pleasant task to perform. I would request just for, give us 1 minute. I would request former President Mr. Ambaresh Dasgupta to kindly come up to the stage, and Mr. Ranajay Basu, the chairperson of our packaging committee, to kindly come up to the stage. I would request Mr. Ambrish Dasgupta to kindly hand over the memento to Mr. Nitesh Ranjan. I would request Mr. Basu to hand over the memento to Mr. Hitendra Dave. I'd request Mr. Ambrish Dasgupta to kindly hand over the memento to Mr. Rakesh Singh. And also I would request Mr. Basu to hand over the memento to Mr. Tomal Bandyopadhyay. Thank you, sir. With this, we'll conclude this session. We'll start our next session, which is, we would have Mr. Mayank Jha, MD and partner of Boston Consulting Group, Mr. Srikant Nadella, CEO of Kefin Technologies Private Limited, Mr. Naveen Kukreja, CEO and co-founder of PaisaBazaar.com, Mr. Sai Krishan Srinivasan, MD of Experian Credit Information Company of India Private Limited. They are already with us. We are just waiting for Mr. Mayank Jha to join us. Oh, hi, he has. So we're quickly starting the next session in a couple of minutes. Just give us 2 minutes to start the next session.
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट,
फर्स्ट एसआईपी स्टेटमेंट तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
एसआईपी की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर एसआईपी टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना एसआईपी बढ़ाऊंगा।
एसआईपी तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का एसआईपी करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर एसआईपी।
वरना क्या?
तुम्हारा एसआईपी तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा,
और यही लाइफस्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा। आप समझे?
हर साल अपने एसआईपी अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है ये है मेरा फर्स्ट एसआईपी स्टेटमेंट, तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
एसआईपी की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर एसआईपी टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना एसआईपी बढ़ाऊंगा।
एसआईपी तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का एसआईपी करने से
हेलो
नहीं चलने वाला।
हेलो,
हर साल जैसे तेरी इनकम इंक्रीज होती है, so should your SIP.
we are starting the next session. Mapping with the economy of future, technology providers, rating agencies and other stakeholders. I would request my colleagues to kindly usher all the person inside the room. I would request all the participants to kindly come inside the room. I would request the session moderator, Mr. Mayank Jha, MD and partner, Boston Consulting Group, to kindly come up to the stage, sir. We are ushering all the participants. We would request Mr. Naveen Kukrecha, CEO and co-founder of paisabazar.com, to kindly come up to the stage, sir. We are also requesting Mr. Sai Krishnan Srinivasan, Managing Director, Expedient Credit Information Company of India Private Limited, to kindly come up to the stage, sir. As Mr. Nadella has joined us. Has he joined us?
Yes. Good morning. I'm joining virtually.
Okay. Hi. It's good to see you. So, we are just starting this session. Just give us a few moments. With this, I'll just hand it over to Mr. Jha. So we are just I'm just going outside and ushering all the people inside. Okay.
Hello. Check.
half of those stocks. Half of this. And always, I mean, pre-MBA, I had my share of some FMCG, basically ITC. Get started. So, in the interest of time, we'll get started. A very warm welcome to all of you. A quick introduction. My name is Mayank Jha. I'm an MD and partner with BCG in the financial institutions practice. It's as a topic that we are discussing today. It's a very interesting flux at which our country stands in terms of the availability of technology and how it is going to drive future of financial services in India. The reason why I say it is at an interesting flux is because at a broader macroeconomic level, there are tailwinds for a bright growth path of India. We saw that in the last panel. There is a very positive view over the next medium term, while there might be headwinds right now, with the inflation in US, with the war with us, with supply chains being disrupted, with all oil prices going haywire, and that directly impacting how Indian economy behaves over the next short term. But over the medium term, if we look at the structural changes that are happening in the country, and most of them driven with technology, I think it's a great place for financial institutions to be and leverage the power that is technology that is being built. It is not just the inherent technology aspect which will drive the future, but the infrastructure that is being built to support technology innovation in the country. Whether we start with Jan Dhan accounts being available to all Indians, whether we look at the UPI rails which enable such massive scale of transactions that no country globally has seen unprecedented way, and it's a model that is being exported to other countries for driving innovation on payments, or whether it is the smartphone penetration where all of these come together. I think the infrastructure aspect that gets created with technology. As BCG, we are looking at evolution of data and the pace at which it is expanding. And for financial institutions, in the way they lend or in the way they are going to assess information or create information about the individuals, we are expecting it to be 100x growth in data over the next 5 to 7 years that is available with the customers. Whether it is through bureau, whether it is through account aggregation information, whether it is through the clickstream data that we receive from devices, we are going to see a 100x increase in the amount of data that is available on customers or investors, whichever way we look at it. Now the culmination of these is the focal point of taking financial services to the market to the next level. While Jan Dhan has gotten accounts opened for all Indians, how do we make sure that they are able to avail of financial services? That's what technology is going to enable. A better reach, a better penetration. The second thing that it will enable is efficiency of the value chain within it. So either it is curtailing of losses, improving productivity, and running the processes more efficient for better experience to the customers. Right? That's the second thing that it enables. The third is the availability of data helps to take to the customers what they want, what they don't have today, but also enables customer to make a more right informed choice about the options that are being presented to them with the consent driven mechanism. So all of this is supportive of what the economy of future using technology could look like. But I think the other challenging aspect which we should look at is the risks also that it possesses. India is the number 3 country in the world after US and China, which is prone to cybersecurity attacks. Every attack that happens is about a $2 million expense and takes a couple of months of diversion of the financial institutions. Financial institutions are 3x more amenable to cybersecurity attacks. There is a question on cybersecurity. There is a question on data privacy. There is a question on consent. And our regulators, and rightly so, are focusing very heavily on making sure that these aspects are taken care of in the manner in which the infrastructure is being built and the players are participating. So with this context, it makes up for a very interesting discussion. Opportunities on one side, challenges and risks on the other side. I would like to invite our panelists now into this discussion. We have with us Sai Srinivasan, who leads Experian for India. We have Naveen, who has been the co-founder at Paisa Bazaar. And on VC, we have Shrikant Nadella. Shrikant, we cannot see you here. Can we bring Shrikant?
Good afternoon. Yes, can you hear me?
Can we bring Shrikant up in the discussion as well? Yes, that's perfect. So Shrikant leads K-FinTech, and it'll be an interesting discussion to bring up perspectives from the bureau side, from the distributors and the front end customer owning participants, as well as from operations and processing and technology capabilities into the discussion. So maybe let me start this, and I would like to kick off with Naveen. Naveen, technology is something that you have really used to take lending to the masses, right? More options available to them, different ways of underwriting them, and also bringing in awareness around credit, behaviors. How do you see the role of technology, especially from investor awareness? And the reason I say this is there is a lot of investor awareness which is required on financial.
Bazaar. From what it has done I'll share a couple of numbers in terms of what it has done in the credit segment first, and then I'll try and cover the answer on the investor awareness piece. There was a time when we started Paisa Bazaar, 2014, or before digitization was mainstream. If you had to take a loan or a credit card, the first port of call as a consumer for you would be to try and speak to your bank where you have a savings account. And if you get an offer, then you have to worry about whether that's the best offer or not. And if you don't get an offer, then you really have to worry about where do you get the product from. And the way to do that, then way to go to somebody else was to try calling or visiting a branch. You could not get a lot of information on manufacturer's website in those times. So what both Policy Bazaar, Paisa Bazaar and the entire ecosystem did was take the product to digital platform with the help of technology, make the awareness more widespread, make the product easily accessible. And one of the manifestations of that is that, for example, in last month, we had inquiries from 1,080 odd towns for a particular loan product. That just starts to show on how the product has become accessible. Of course, there's a next stage, which is where the technology and the account aggregator and the IndusStack will continue to play a large role, is that while we had interest and consumer awareness from 1,082 towns, we could only disburse at least one loan in 620 or 630 odd cities, which means that 1,080 minus 620, so about 450 odd towns. The consumers are ready, consumers are looking for it, consumers are aware of what they need, but the supply or the manufacturing is not yet able to reach in a easy to access and viable fashion. And I think that's the work that's cut out for the industry from a lending perspective. Another example, if I can take a couple of minutes, that I'll share is that from a personal scenario, when I returned from UK, my home loan got rejected by SBI, and I got to know at the last minute, as would any borrower, right? When the lender pulls a credit bureau from Experian or other bureau, they said that you have a problem in a bureau. I said, I was out of country, so how can there be a problem? They said, you have to go get your own credit report and check where the problem lies. We can't share it with you. It took me 10 days, 400 rupee check, and 2 couriers, one from my side to the bureau, and other from the bureau side with the actual physical copy of the report. Cut to today, we partner with Experian and other bureaus to offer free credit score to the consumers. It takes exactly 2 minutes. The consumer can get access to their report from all the 4 bureaus, and they can actually track it for life if they wanted to, and see where they are, how they're progressing. And that happened because of technology and digitization, of course, with both sides, the bureaus and us participating. And the result again is that over 30 million consumers have taken credit score in the last 5 years from our platform alone. And I know there are more platforms. So if I add up, there'll be about 50 to 60 million consumers. That's about 23, 24% of the entire population who has an active credit score. And we add about 700,000 every month. What we also saw from coming to your specific question on investor or consumer awareness on the investment side, was that when the industry was forced to adopt technology faster and digitization faster, because there was no other option during COVID, it actually helped the investment industry in the first place. Of course, it helped the payment industry also, where I think the mutual fund and the stock broking industry combined saw doubling of the unique investor population in the last 2.5 years. That happened because the industry kind of got together, and of course they were forced also, to bring products and product awareness to the consumers in a digitized fashion. Hopefully that kind of starts to continue to increase the penetration on the financial product category.
Thank you, Naveen. Thanks for such a detailed view on this. So one of the things that I wanted to check with you, Sai, is, the bureaus have done a phenomenal job in building a digital repository within the country. Now, today, if you want to apply for loans, you can literally, complete journeys in seconds, right? And this information is transparently shared across bureaus. It is something that has lifted the quality of bureaus in India to a very significant level, and India would be amongst the top 10 bureaus that exist in the world today. What would it take to deepen flows on the investment side? Do you have views around how could this information be used also from a financial markets perspective, or taking it forward to get more customers? I mean, more customers in India today have lending needs, have lending requirements, and there are more bureau lines than mutual fund portfolios, right? So how do we bridge that? How do we bridge that gap? And what are the learnings from your journey?
Maybe I'll just try and take a step back here. And I think you spoke about data earlier in that sense. As a bureau, we often keep hearing this, and more specifically in the recent past. Why a bureau, even otherwise? That data is the new oil. But when we, so much so that I would say actually it's being run to the ground now. But when you actually look at it, right, is it new? Not really. Data has been there. We all used data in the past. Now, what's changed now is possibly the flow, is possibly the volume of data that we get, and maybe the diversity of data that we have access to. In the process, what's also changing
is the way we are looking at consuming this data. Right? Now, you rightly mentioned digital journeys in some form. They've been very instrumental in kind of propagating and the way we've been using data today. So all of the expansion that we see, I would say largely attributed to what we are seeing happening because of digital journeys. Experian, for instance, it's a data company. And as a data company, I think in the past, we always looked at saying, that's a data inventory that we have, that's an asset that we have. What tends to then happen is that it's just not about the availability of data, but how are we able to take it to market and make the optimum use of that data. And that's kind of happened only because of the proliferation that we've seen, especially on the retail side. No, you're right. Now, when you look at lending, for instance, a large part of what bureau consumption happens today is associated with the lending markets, when you call it retail asset market. The rest of the financial ecosystem hasn't really kind of caught up on bureau usage. We do see telcos using data now. We do see insurance companies using data now. The mutual funds and securities companies have also started to come in, maybe in a small way, not really as active as what we have seen the rest of the financial markets using data. But to put it very realistically, I think India is not really a market where it's D2C in that sense. When I say D2C, if you look at the US market or the Brazilian market for that matter, you have direct consumers who actually consume a lot of the credit reports. Ours is still largely B2B, right? You'll still have banks, financial institutions, partners like Naveen, who enable or you consume reports from the bureaus and scores from the bureaus, and kind of take it to the end consumer. So that's one leg of the journey that we still need to kind of cover. And to add to that, right? When you mention about the rest of the financial markets, do exist, and I think with the kind of evolution that we're seeing in the markets, clearly something that we believe will augur well for us.
Thanks, Sai. Sai, we spoke about data, more data getting generated, more data getting available. Now there was always this hurdle of getting information together, and that problem is exactly what account aggregator is looking to solve. It is with the customer consent, trying to pull together data from different sources, with the customer having the power of allowing data usage for a financial information or a use. So whether it is to get your loan, whether it is to get an insurance, whether it is for an investment need, right? And now, recently, SEBI has also asked mutual funds to be the financial information providers in the account aggregator framework. So as a user, now you can have your financial information from the various mutual funds and the depositories pulled out for you. My question is to Srikanth. Srikanth, what opportunities do you see emerging out of this? Lending has also already started seeing some of it, and lending part through account aggregator, where bank statements were required, you would need to print those bank statements and take it to branches. Some of that is starting to be now available completely digitally. But how do you see it evolving? And what are some of the interesting use cases that you see with account aggregator coming forward?
Thank you, Mayank, for the question, and good afternoon to my co-panelists as well as all the attendees. It's a great topic indeed, and I'll be, let me get specific to the point. I think the account aggregator as a construct, part of the India stack, was designed with lending being one of the biggest use case, not to state that the other areas, are not as relevant. I think it's truly a matter of, coming of age, for both technology and the data to come together to provide the solutions that are required for each of these industries, whether it is insurance or whether it is asset management space or even the pensions for that matter. See, broadly, when it comes to asset management space, and I will, I'll go beyond just the mutual funds because it is applicable to, all of the asset management as a space. I think with the recent, alignment of all the regulators, in fact, whether it's IRDA or PFRDA or SEBI, in order to onboard several entities to be FIPs, is that as an individual, as an investor, many of us, all of us, in fact, grapple with, series of challenges. One of that is much of our investments are distributed and probably live with many different platforms, some probably even physicals, if I may. In the industry we belong to, even today, about 20% of the investments lie in physical format. The rest probably would have been invested via several channels. Some of those could be through your distributors. Some of them could be your own banks as wealth advisors. Some through direct, registered platforms, and some probably would have done it directly yourself, so on and so forth. So the true, concern as an individual is that do we even know what all investments do we have? There will be cases in terms of inheritance transmission, some of it could have been passed down to us from our families, and it is very hard for us to know what amount of investments actually exist at which parts of the asset category and which asset manager, so to speak. So we believe that through the account aggregator construct, I think amongst the many use cases, one of the problem it would immediately address is to have a catch-all of information of your financials in terms of investments across the stack, whether it is mutual funds, whether it is alternatives, whether it is direct equity, so on and so forth, because almost all of these either have already been dematted and or in the statement account mode, all of which are fully digital, and the rest of the physicals are also with the registrar, so to speak. So it is lower yield. Right. Yes, I was just talking about several of our investments continue to stay put in asset classes which are probably not very optimal in terms of the returns that we ought to generate, especially in times of higher inflation. We need to be extremely careful and cautious, otherwise there is going to be wealth erosion. So providing the necessary inputs to your financial planner and or for yourself to know in terms of what is the kind of assets you have deployed and where it is sitting. You need to know the lower yield versus the higher yield, which will help you to balance your portfolio, which is again something that will be vastly facilitated and enabled by the account aggregator construct. Tax filing is another very important area. It's getting progressively challenging with a lot of investments going in, a lot of people trading, a lot of asset classes coming into the picture. Through this construct, we believe that there is a truly phenomenal opportunity for both the taxman as well as for the investors to have a unified, aligned set of information, in order to take care of the administrative processes associated with the filing of your tax. And obviously, but the single biggest use case is how better can you do the financial planning, right? So that's largely, we believe, are the use cases. In addition to one last thing, which is your ability to, take the disposition analysis of an investor, which is constructed through your CRM, as well as your financial profile based on your, investment pattern and your master information in terms of your demographics, such as your age, your background and your current wealth profiling, and what kind of investments could you do, in combination of all these three. Algorithms could be created, are being created, so that your wealth advisor gives you the most optimal solution for you to be able to optimize your wealth.
So, in a nutshell, Shrikant, if I were to summarize, I think, while account aggregator had already started seeing use cases on lending, with a lot of investment information coming in, the power of advising you on where should you invest, depending on your goals, depending on your priorities, is very easy now because, you have a visibility of your full portfolio that you can get. And second, always this question, what's my net worth, right? That starts getting assimilated and refreshed at a much easier manner. And I really like the thought process that innovation can happen on the taxman front as well. Filing taxes could be very complicated, and there is more and more information that is being sought about your banking statements, your investments. All of that can actually be consolidated and passed on. So, we look forward to a lot of interesting future applications. Just like with UPI, as UPI came in 2016, we saw a huge wave of innovation on what can possibly be done on payments. coming after that. The same thing we can expect with account aggregators, as it gets more and more adopted. Maybe next question to you, Sai. Sorry, I would want to take this with Naveen actually. Naveen, on digital journeys, right? Mutual funds and brokerage have been at the forefront pretty much. They used to be very digital from the very beginning, right? You could actually buy mutual funds online way back in 2010, 2011, 2012, right? What do you see as the next wave of innovation? Both maybe it is at the front end, and maybe Sai, if you can cover, what is there any innovation that you see on the operation side, etc. as well? Yeah.
Your question is more from a lending perspective or across
more from a
investment?
Lending, we have already
Sure.
started seeing, but more from an investment perspective, what is the innovation possibilities that you see?
Sure, sure. And it ties in to your last question that you asked about how does technology help increase the penetration amongst the investor population in from a financial market perspective. So I think like you said, the investment industry, especially the mutual funds and the brokerage, has been slightly ahead in terms of digitization, thanks to the regulator who kind of enabled a lot of that changes. And they really saw the gains when COVID happened and the markets, bank fixed deposits, whether it's government products like PPF, etc. And the equity and mutual funds were more riskier, less understood, and hence lower penetrated. Both digitization and increase of awareness and of course markets kind of presenting that opportunity, they all came together and provided the next level of opportunity. Where the next innovation is already starting to happen, and I see that amongst the fintechs that are offering it, is they are, the fixed income side, the financial products, whether it's the company bonds and other fixed income instruments. There are fintechs who are able to structure those products, break it down to a more investable amount. So, for example, if you wanted to invest in a corporate bond earlier or real estate, you had to think of lakhs, if not crores, as an investment amount. Now there are fintechs or products that are available where you can get into those products for as low as 10,000 rupees. You can invest into company bond in a fractional, what's called as a fractional participation. Same thing is available for real estate. And this has been done successfully the world over. So India is kind of implementing that with the help of technology and with the help of more awareness. So I think that's the next level of development that will happen, where more and more consumers would become aware of that, and hence, depending on their risk appetite, will start participating in that. I think the second thing that's happening completely from the side is you talked about financial education. And the education and awareness is started to happen because, some things like influencers and their ability to reach out to lakhs of consumers through a simple YouTube video format is what India discovered over the last 3-4 years. Driven by things like Geo first, and then driven by COVID. People were at home, didn't have too much to do. So, and they did have financial knowledge. So some of them said, we will kind of impart that knowledge to consumers. And I see multiple people who are helping the industry become more financially aware, and they're also able to do it in a viable fashion. So I think that part is a lot of times underrated, but super important, so that the consumers become more aware of what these products kind of bring together. And then the last stage of what you guys talked about in the last point, that as account aggregator becomes more mainstream over the next 2, 3, 4 years, having everything together in one place on what is the net worth, what kind of assets do you have, what's your allocation across assets, and then providing the right advice to the consumers will become far more easier, far more digitally enabled, and hence far more cheaper to deliver to the consumers. And as the quality of advice improves, hopefully the quality of investments will improve for the consumers.
So the one big interesting theme is it's not just democratization of data, but it's also fractionalization of assets. You can take assets, you can break them down, you can take it to a larger set of customers who will probably not have access, to a very interesting commercial property available outside their city. How do they invest? How do they invest in that, right? But technology can enable that today, and that's where innovation is expected. We'll need to wrap up this session soon. Just the last question, because we touched upon the challenges. Maybe first with you, Sai, and then with you, Shrikant. Just from a technology challenges perspective, whether it is consumer facing or internal operations, what is it that keeps you awake at night? Is it cyber security? Is it data privacy? Or what are the risks that keep you awake at night?
Exactly the 2 points that you mentioned, data security and information security. Again, as a data company, I think that's the bread and butter that of our business. And any breaches could have very, very significant cascading impact on reputation and also on the confidence that people have on the data itself. So yes, definitely something that keeps all of us awake on these fronts. But having said that, we also traversed a long journey here. I think compared to what things were 5-7 years back to where we are today. Clearly, I think the focus of all entities in the likes of Experian has always been on ensuring that we build our business models on compliance and security. I think we can't afford a breach, and that's clearly an area where there's a huge amount of investment that kind of goes in. But having said that, we also still need to innovate. We also need to be able to make products and services available to consumers in the market, and kind of make them relevant in journeys today. So bite-sized loans that are kind of going out today. We need to be able to make them available quickly. So innovation does tend to happen. So people are no longer looking at underwriting in the traditional form. People are looking at underwriting through automated means. So in some sense, some product and solutions that we could offer to enable that to happen. Maybe quick decisioning capabilities that we can enable on the fly. So those are things that we tend to kind of invest in. And when we build them out, important for us to take into cognizance the extent and quality of data that we hold. Something that kind of keeps us awake when we design and deliver products.
Shrikant, how are you staying ahead of the curve on some of these challenges? Especially pertaining to the data security risks that we see. Whether it is consumer privacy or or whether it is with cyber security. I mean, you're dealing with a lot of data. You are in some sense custodian of a lot of data which is sitting. How are you staying ahead of the curve?
Thanks, Mayank. So yeah, I mean, we do say it. I think we're definitely amongst the top 20 entities in the country in terms of the quantum of data we hold. And safeguarding, the data, there is no silver bullet to it. At the same time, there is, definitive path that has been laid down, which is to make sure that you secure, your data through series of perimeters, one after the other. In some sense, we call it 7 rings of fire. So basically, for anyone to kind of, penetrate through your lines of defenses, you need to cross through a whole lot of them. And, by one of that, of course, is to make sure that your data is residing in one of the most secure tier 4 kind of a data center. Make sure that your accesses are, highly regulated, be fully compliant on SOC 1, SOC 2s, etc., to make sure that, you have that level of comfort that provides. But more importantly, it is never the the big data center that is going to be vulnerable, but it is the weakest link into your entire ecosystem that is what's going to be the troublesome. And that could be the simplest API you could have extended to somebody who probably may not have had the greatest of the technology with them, or insecure data, or it could be a hyperlocal network where some amount of accessibility exists. So it is truly about making sure that there are no Trojan horses, making sure that there is no that last mile, the smallest component, which probably is going to be the in the vulnerable aspect of it. That needs to be taken care. I wouldn't say it gives us sleepless nights, as given the fact that we made substantive investments in this topic, and we are obviously fully regulated, governed to make sure that we are bound by the latest and greatest tech that is required, and make sure that you are fully resilient and redundant also in terms of the data architecture that you have, in addition to your application layer itself being highly secure. In addition to the infosec and cyber security, I think the factors that people in financial services sector should be worried, we are worried also, of course, is on the aspects of frauds. I think we need to carefully balance out the convenience factor with that of what could somebody with a malintent could do. And I think as the lag time between the transaction processing keeps coming down, it is very, very important that we do not lose sight in terms of the wrong side of being on the wrong side of the processing. So that's something that we all have to invest time, monies, and efforts to make sure that there is a balance. Lastly, I think the big data Moore's law suggested, I think, doubling of computing capabilities every 2 years. But unfortunately, the data is doubling every 6 months. So clearly, our computing may not even catch up with the amount of data that we are able to generate, which means that we need to invest a lot more so that the information is available at fingertips. And not necessarily, taking few hours sometimes, especially when you have a significant regulatory reports. So to wrap up, I think there is a saying that goes, if you think compliance is expensive, try being non-compliant. So I think the same adage holds good for cybersecurity, infosec, and all aspects associated with us being the custodians of various people's data and their hard-earned money.
Thank you, participants, for your views. Before we conclude, just if a short phrase from each one of you on what do you see as the role of technology in banking of the future. We can start with one short phrase.
Sure. I think in terms of the my view as an entrepreneur, we are optimistic set of people. That's why we are doing it. Is that it's probably the best time to be in India, first of all, and to be in fintech. And technology-led improvement, penetration, and scale has just started to happen. And my biggest concern is not cybersecurity or privacy. It is that the people in power do not put hard brakes or do knee-jerk reactions, similar to what we saw in what happened to UIDAI, India Stack being used by Supreme Court. So if that doesn't happen, then technology will power the expansion and penetration of products across financial services and hopefully help India go to the next level of GDP per capita.
A slightly different take here. I would say technology moving from being just support to being embedded into businesses.
From support to the core. Shrikant?
Yeah, I think it's and for a country like India, vast, geographically spread out and a lot of population. I think it's a culmination and combination of both digital and physical. The physical has to happen. As much as digital can permeate, has permeated, it is truly also about bringing in the remaining 100 crore Indians who are probably not digitally ready yet to be into that fold. And I think that is what's going to create the force multiple that is required for the entire financial services sector. We continue to be underpenetrated, whether it is insurance or whether it is mutual funds or assets or anything at all, lending for that matter. So I think it's truly about bringing the rest of the population into this by a combination of digital and physical initiatives.
So use it to scale, keep it at the core, and combine the digital and physical. That's what I take away from panel. Thank you very much for the discussion. I don't think we have time for questions. Probably we have the next session coming along. But thank you very much.
Thank you, Mr. Jha. With this, we conclude this event. We already, we just have a pleasure task to do. I would request Mr. Ranajay Basu to kindly come up to the stage, sir. And hand over the memento to Mr. Mayank Jha for wonderfully moderating the session. To Mr. Naveen Kukreja. To Mr. Sai Krishnan Srinivasan. We also have Mr. Srikanth. We are also thankful for Mr. Nadella to join us online. With this, we just conclude the session. We are starting the next session. Already, can we have Mr. Kumar online? Has Mr. Kumar joined us? Mr. Ashwini Kumar.
Yeah, no, I don't know whether you can hear me.
Yes, yes, we can hear you, sir. Thank you, sir. Thank you. Thank you. Sir, we are just starting this session. We are grateful for Mr. Tiwari for joining us. He was traveling, and with a special request, he has joined us. And I would request Mr. Tiwari to kindly deliver the keynote address. Over to Mr. Tiwari. Over to you, sir.
Thank you, Arnab. Very happy to be here. As you rightly mentioned, I'm traveling. I'm actually at the Mangalore airport right now because there's not enough time for me to travel to a acceptable enough place. And hopefully the session will go well in terms of audio and video. First of all, my congratulations to you, Arnab, and the rest of the team for putting together such a good set of speakers and the sessions. I was just hearing the last session with Srikanth and others, and very, very good thoughts expressed, partly to do with the topic which I've been given. So my topic today is new landscape in banking and finance post-COVID. COVID has been an outlier event for us, and so much has been spoken about this. But there is always a need to kind of step back from such outlier events like this. And therefore, this event in 2020 and 2021, hopefully it is going away now, but we never know. And this is a once in a century event. The last such event, as we all know, was the Spanish flu, which affected global population. And the casualties then were far higher, as we know. And therefore, with this COVID, the analysis of this and the impact of this on the banking and finance, which is a very niche area, will take some time, will continue to be analyzed gradually. As we know, so many lives have been lost, so many young people have lost their lives. The pace of economic activity also has taken substantive hits in multiple waves. And therefore, there has been a continuous debate on this post-COVID world in terms of how the work will follow. Will it all be work from home? Will it be work from anywhere? Will it be work on the go? What will economy look like? And the great resignation. All of these things we've been seeing for the last 1 year and more. And these events are still unfolding. And most sectors were impacted simply because there was a complete lockdown, not only in India, but in many parts of the world. And in some countries like China, the lockdowns continue to happen because of specific national policies which they have. In my view, the post-COVID world has 2 or 3 basic characteristics as I see it. The first one is the thrust for the adoption of technology. Now, we know that technology has been escalating and it has been going forward, it is increasing, but the pace of adoption of technology is simply skyrocketed in this post-COVID and during COVID world. We saw a lot of shift towards e-commerce, as we all understand, during the lockdown phase for obvious reasons, whether it is to order food or order supplies, etc. And the consumer has now moved to a permanent scale up in the e-commerce phase and digital platforms, which earlier it was scaling up, but in a very graded manner, maybe in a rate which was not as fast. But we saw this increase substantially, and it has stayed there. It has not fully come back to physical. So therefore, this this digital platform usage, the e-commerce usage, and anything digital, the usage has increased substantially. And even though physical is now coming back, it has stayed elevated. And it looks like a secular trend. In banking, we have seen what this means is that now, even after the branches have opened and everything is on in full service, there is a sharp drop in branch footfall in many geographies, and people are comfortable using digital apps which have improved in quality. There is also a lot of use of the API banking by integrating with a lot of fintechs, a lot of applications outside the traditional banking space through APIs. So that's again a trend which has accelerated during this phase. So that's the adoption of technology is the first trait. The second trend or trait we can say is the rise in environment consciousness. Now I'll take you back to COVID days, though they were not pleasant, very, very threatening days. But one thing which we saw in the social media, and all of us do remember those days, some of those days, where we could see blue skies after a long time in India. I actually had just come to India in July of 2020 from New York. And in New York, we were used to seeing blue skies. But in Gurgaon, or Gurugram, where I was located right after my landing here, I was still seeing blue skies, at least for a month or so. And we also saw videos of wildlife walking on streets. We saw many Himalayan peaks from many of the states, which were never seen for a long, long time. And therefore, this thing that the environmental consciousness came out very, very strong. As it is, the pressure of climate change and the way things are changing had been building up for some time. But there was always this view that, well, the present generation should not pay too much for the whatever has happened in the past, and while we will improve things, but it wouldn't be a drastic change. But that, I guess, is no longer an option. And not only this thing which has happened during COVID brought us home to this, but the other important thing is that many of the natural events, the climate events, have also escalated during this time, and we have seen in recent past very large floods in Pakistan and in some parts of India as well recently, in Bangalore, and also the heat waves, etc., in Europe, UK, etc. So this again is escalating. It's not necessarily connected to COVID, but because of the COVID period, there is a sharper focus on these things as well. And this again, therefore, ESG, as it is called, has become a deciding factor in the business strategy for banks and other financial institutions. And we have seen the recent RBI discussion paper on climate risk, which is focused on this again. And we are all evaluating that to see how banks can move forward in this area. The third piece is the entire thing about inflation. Now, this inflation, which we have seen during COVID, or rather post-COVID, is not the usual inflation. In fact, before the COVID came into being, there was a long period, almost 10 years post the crisis, global crisis of 2008, of a low inflationary environment in Western countries and also flowing into India. India also had a low inflation phase for a long time. And suddenly, because of the supply shocks to begin with, where because of lockdowns, the goods were not moving properly, and also a demand shock subsequently, because once the West started to open, there was a lot of pent-up demand, which was fueled by the generous subsidies and the checks given by Western governments, the American government, UK and Europe, and all of those, who to their people, which fueled this pent-up demand post-COVID. And therefore, this excess demand, which is not fully met by the shocks to supply, led to a bout of hyperinflation. And we are seeing this still in high, 8%, 9%, 10% in some countries. The US has had 7, 8%, which is slightly moderated. But again, considering that the US used to have below 2% and the Fed used to have a target of achieving 2%, I think this is a very high inflation. And this is also fueled by the war in Ukraine, which has led to the fuel supply inflation. And the result of all of this persistent inflation is that the central banks everywhere are now raising rates. And over time, as rates continue to be raised, this will lead to an impact on growth in various geographies, various countries. And ultimately, we are faced with a very turbulent and a volatile situation in financial markets. Because when the rates rise, it's in response to inflation. By the time inflation gets controlled, and hopefully it is not entrenched, we have a slightly, I mean, we might see recessions in few countries as well. So coming back to India, what has happened in India is the banking sector, especially because I represent the sector, has emerged very strong after COVID-19. There were fears that the lot of customers, lot of units will go bad because of the lockdowns, etc. And contact-intensive sectors were impacted. But thanks to the schemes which are launched by the central government, the RBI, with the banks in terms of emergency credit lines, in terms of deferring the installments and interest for a lot of borrowers, and various other schemes, we could save a lot of borrowers. In fact, estimated by our in-house economic team led by Dr. Ghosh, very clearly tells us that in MSME sector, a lot of units were saved because of the ECGLS. And therefore, the banks emerged stronger after COVID, which was not what was originally thought by most economists. And what we are seeing in the last 2 years, even during COVID and beyond that, the bank's balance sheets in terms of NPLs have improved substantially. There were a lot of savings during the lockdown phase, and now with the equity markets improving significantly, those savings, significant part of those savings are diverted to the stock markets. And what we also saw that the provision coverage ratio of most banks on an average is 75% or over. And this is higher than the loss given default number of around 60%, which shows that the banks today have enough buffers to take care of the unexpected future shocks. The business growth has also improved. We are seeing non-food bank credit expanding. It reached almost 15% in July 22, as compared to around 5% a year ago. And so much so that the credit growth is now ahead of the deposit growth. And therefore, as liquidity has come down in the system, there will be pressure on deposit rates, which are now moving up in response to not only the RBI rates, but also in response to the slackening pace of deposit growth. However, what the most exciting part in India, especially post-COVID, is in the banking space is the digital story. So we know that the UPI success story on the back of the Aadhaar, the JAM Trinity frameworks with better information management, the changes in the way of working and building of resilience. Because we have also seen that as the world goes digital, we are threatened by the cyber actors, and these are no longer the cyber criminals only. We also know that there are state actors and other malevolent players who could try and impact the digital capabilities and the digital processes which the banks run. Therefore, it is imperative that the banks prepare themselves for this dynamic environment, even as they focus on whatever business model is appropriate for them, whatever sustainability which has to be built into all the models. And we also are looking at the analysis of social media to help banks in reviewing our strategies in terms of not only customer segmentation, but also customer acquisition, and also improving the financial inclusion space. Because as we know, even if people in India, some of them do not have access to a lot of other things, most people in India today hold a phone, and the majority of those are smartphones. And these cheaper smartphones also give access to YouTube and various other social media channels. Therefore, banks in India need to be on those channels and need to be able to pursue strategies of acquisition, segmentation, and other strategies related to the banking. The traditional banks, which have now taken up the technology in a big way, they are upgrading themselves, and increasingly we see a lot of collaboration in fintechs. There was some talk earlier whether fintechs will replace banks, whether fintechs will threaten banks. But I guess over time, this is settling down to the collaboration between fintechs and banks. And we see various models of this, whether it is in terms of improved KYC, like for example, the video KYC, which is offered by fintechs. And we have also tied up with a couple of fintechs for offering that, whether it is scraping of data from with due consent from the customers, or GST data that is again being provided by fintechs. We also have tied up for sourcing of certain proposals and accounts from fintech. So a lot of collaboration is taking place. At SBI, we have invested substantially in technology, and as of now, the IT expenses contribute to almost 20% of the operating expenses. Our super app, YONO, as we know, is offering not only the retail, but corporate and agriculture banking also on the same platform. Today, YONO has about slightly short of 5 crore registered customers, and has created significant business value for the bank. Going forward, we will be using fintech for replacing, for example, the physical land survey with satellite-based imagery solutions, e-signing and e-stamping documents for end-to-end digital products. And we will tie with agri-tech business correspondents for sourcing, monitoring, and collection. In fact, our personal loan, which is online and which is a digital product, offers a pre-approved loan in just under 4 clicks. And this has gone beyond rule-based engine to a AI-based engine now, and therefore it is really helping us ramp our book. And we already have a book of more than 40,000 crores based on this PAPL or personal loan, as it is called. However, what we also need going forward is that governance will be a key to success and should not be compromised. We should take care that the stakeholders should be protected from digital frauds, data breaches, and cyber crimes. In fact, the losses which we currently face, the maximum number of losses are in the social engineering space under digital frauds, where customers, even educated ones, are sharing their passwords, their user IDs, etc. And the result is that how do we protect such customers? We can have some rules to see as based on their profile to give alerts, to check, but we also have to take a balance between the customer convenience who have increasingly gone digital. We have to educate them and also try to protect them. So therefore, how do we offer digital services in a clear, transparent, explanatory manner free from biases, and the models which use innovative techniques are useful, but they should be subject to robust model governance frameworks. Another, as I mentioned earlier about the ESG part, we know that at the Conference of Parties 26 or COP26 in Glasgow, India took substantive pledges, not only a net zero by 2070, but also to attain 500 gigawatts of non-fossil fuel energy. We are currently around 160. Energy mix comprising 50% renewable energy by 2030, reducing total projects from now onwards till 2030, and carbon intensity reduction in our economy by less than 45% by 2030. So these are very strong pledges which the country has taken. And clearly there's a role for all players, especially banks, to make this happen, because the extent of cumulative investment up till for coming to net zero by 2070 is estimated at upwards of $10 trillion. Now, this is not something which the industry or other players can do by themselves. And therefore, banks will have to play a very, very major role in arranging for this funding, not only for making it net zero, but for helping with the transition risk, for helping with the managing the climate change or mitigation risk on all of that. RBI did a recent survey on climate risk and found that only 2 out of 12 public sector banks and 4 out of 16 private sector banks said that they put in place an internal strategy for managing climate risk and integrating it into risk management framework. This also showed that only 1 out of 3 banks attempted to quantify their loan investment portfolio, which is susceptible to climate risk. So therefore, there is a long way to go from the current status. And this indicates both an opportunity and also an emerging risk for the banks, because banks are under pressure to bring sustainability as a parameter in the overall business strategy. There's a pressure to account for the carbon footprint, not only of the bank, but also of the portfolio. And reducing this footprint has become a focus point for investors. Among the public sector banks, we are the only bank to have a policy for sustainability. We have had this since 2016, and we'll be presenting this in our annual report. The bank deploys a sector-agnostic entry-level barrier assessment of environmental and social issues to loans between 5 crores and 50 crores, and takes decisions based on that. And for loans exceeding 50 crores, the borrower is evaluated on a number of ESG issues and allotted a score to ensure responsible investment. SBI is backing projects related to renewable energy and clean mobility. The bank has also directed efforts towards affordable housing and SHG finance and created customized products and services to uplift the weaker sections of society. We have issued green bonds, and we are aligning the products with the SDG pledges. It's also interacting closely with the PS and the BFI sector to have a collective approach towards it. In fact, the bank has gotten multiple lines from multilateral institutions like the World Bank for rooftop solar, with the KfW in Europe for the solar lines, and various other entities. We are negotiating with them to get more lines so that we are able to offer cheaper finance to many of these projects in the renewable space and mobility. And my last point is that the inflation is globalized. So it is no longer restricted to a particular area, as we saw from disruption of supply chains, from the conflict in Russia and Ukraine. We have a situation where advanced economies, as I mentioned earlier, are running double-digit inflation, and the emerging markets actually have lower inflation. But since the dollar is strengthening and the emerging market currencies are weakening, we have a risk where we will have somewhat higher inflation and at the same time lower growth. And this is typically called stagflation. So this is a risk which the RBI has flagged in the financial stability report, and we should be wary of this. Though the good news is that the inflation expectations in the US have declined recently very sharply. So therefore, the hikes in interest rates which are going on by most of the central banks, this is again hiking lending rates, but also the cost of borrowing for us. And this has impacted the growth recovery. The growth rates of various countries, including India, have come down. The latest estimate for India for this year, 22-23, is 7%. And this is increasing the cost of transition to net zero and maybe stress assets down the line if people are not able to pay, and the loss of credit demand gradually, which will bring down inflation but will also be negative for growth. However, rapid digitalization will help in mitigating this to some extent. In fact, banking industry also saw a sharp shortfall in the chip supply for the debit and credit cards in the wake of shutdowns in China. So therefore, I will make some final points here, 2, 3 points. One is, of course, as I mentioned earlier, the rapid pace of adoption of technology, the rapid rate of obsolescence of established technology. This has increased considerably. So banks are going already to technologies like cloud, cognitive, artificial intelligence, real-time analytics, cutting-edge ads and marketing tech, etc. And the customer engagement is increasing multifold, not only through the branch and the call center channels, but also chatbots and voice bots. And it's not very clear as of now as to how the central bank digital currency is going to impact the banking industry, but it's coming. Consumer tastes have also changed. The consumer expectations have changed. A digital footprint will become the main assets of bank, and we'll have to study these. The monetization of internal data using AI algorithms to expand business will also be key.
Thank you, sir. We are immensely grateful to you for joining us, and it is an honor that despite of your busy schedule, you have joined us. With this, we conclude this session. We will be back exactly after 45 minutes for another session. Please join us for lunch.
क्या खरीदने का प्लान है?
यार मैं तो अपना SIP बढ़ाऊंगा।
SIP तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का SIP करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर SIP।
वरना क्या?
तुम्हारा SIP तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा,
और यही लाइफस्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा। अब समझे?
हर साल अपने SIP अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है? ये है मेरा फर्स्ट SIP स्टेटमेंट। तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
SIP की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर SIP टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना SIP बढ़ाऊंगा।
SIP तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का SIP करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर SIP।
वरना क्या?
तुम्हारा SIP तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा,
और यही लाइफस्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा। अब समझे?
हर साल अपने SIP अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है? ये है मेरा फर्स्ट SIP स्टेटमेंट। तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
SIP की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर SIP टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना SIP बढ़ाऊंगा।
SIP तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का एसआईपी करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर एसआईपी।
वरना क्या?
तुम्हारा एसआईपी तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा।
और यही लाइफस्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा। अब समझे?
हर साल अपने एसआईपी अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। Mutual fund investments are subject to market risks. Read all scheme related documents carefully.
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है? ये है मेरा फर्स्ट एसआईपी स्टेटमेंट। तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
एसआईपी की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर एसआईपी टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना एसआईपी बढ़ाऊंगा।
एसआईपी तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का एसआईपी करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर एसआईपी।
वरना क्या?
तुम्हारा एसआईपी तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा।
और यही लाइफस्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा। अब समझे?
हर साल अपने एसआईपी अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है? ये है मेरा फर्स्ट एसआईपी स्टेटमेंट। तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
एसआईपी की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर एसआईपी टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना एसआईपी बढ़ाऊंगा।
एसआईपी तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का एसआईपी करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर एसआईपी।
वरना क्या?
तुम्हारा एसआईपी तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा।
और यही लाइफस्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा। अब समझे?
हर साल अपने एसआईपी अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है? ये है मेरा फर्स्ट एसआईपी स्टेटमेंट। तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
एसआईपी की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर एसआईपी टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना एसआईपी बढ़ाऊंगा।
एसआईपी तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का एसआईपी करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर एसआईपी।
वरना क्या?
तुम्हारा एसआईपी तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा।
और यही लाइफस्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा। अब समझे?
हर साल अपने एसआईपी अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है? ये है मेरा फर्स्ट एसआईपी स्टेटमेंट। तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
एसआईपी की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर एसआईपी टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना एसआईपी बढ़ाऊंगा।
एसआईपी तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का एसआईपी करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर एसआईपी।
वरना क्या?
तुम्हारा एसआईपी तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा।
और यही स्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा। अब समझे?
हर साल अपने एसआईपी अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है? ये है मेरा फर्स्ट एसआईपी स्टेटमेंट। तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग?
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे, जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना एसआईपी बढ़ाऊंगा।
एसआईपी तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का एसआईपी करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर एसआईपी।
वरना क्या?
तुम्हारा एसआईपी तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा,
और यही लाइफस्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा। अब समझे?
हर साल अपने एसआईपी अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है? ये है मेरा फर्स्ट एसआईपी स्टेटमेंट। तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
एसआईपी की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर एसआईपी टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे, जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे, जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना एसआईपी बढ़ाऊंगा।
एसआईपी तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का एसआईपी करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर एसआईपी।
वरना क्या?
तुम्हारा एसआईपी तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा,
और यही लाइफस्टाइल
तुम्हें फ्यूचर। अब समझे?
हर साल अपने एसआईपी अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है? ये है मेरा फर्स्ट एसआईपी स्टेटमेंट। तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
एसआईपी की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर एसआईपी टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना SIP बढ़ाऊंगा।
SIP तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का SIP करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर SIP।
वरना क्या?
तुम्हारा SIP तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा,
और यही लाइफस्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा। अब समझे?
हर साल अपने SIP अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है? ये है मेरा फर्स्ट SIP स्टेटमेंट। तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
SIP की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर SIP टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना SIP बढ़ाऊंगा।
SIP तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का SIP करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर SIP।
वरना क्या?
तुम्हारा SIP तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा,
और यही लाइफस्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा। अब समझे?
हर साल अपने SIP अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है? ये है मेरा फर्स्ट SIP स्टेटमेंट। तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
SIP की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर SIP टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना SIP बढ़ाऊंगा।
SIP तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का SIP करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, सो शुड योर SIP।
वरना क्या?
तुम्हारा SIP तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा,
और यही लाइफस्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा। अब समझे?
हर साल अपने SIP अमाउंट बढ़ाने से आप इन्फ्लेशन का मुकाबला कर सकते हो और अपने लाइफ गोल्स को समय पर अचीव कर सकते हो। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
पापा, ये आपका इतना पुराना म्यूचुअल फंड अकाउंट स्टेटमेंट अभी तक रखा है?
ओल्ड इज गोल्ड बेटा, पता है? ये है मेरा फर्स्ट SIP स्टेटमेंट। तुम्हारे कॉलेज एक्सपेंसेस के लिए स्टार्ट किया था।
मतलब आप मुझे घर से भगाने की प्लानिंग इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
SIP की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर SIP टुडे। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना SIP बढ़ाऊंगा।
SIP तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का SIP करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है,
इतने पहले से कर रहे थे?
भगाने की नहीं बेटा, तुम्हारे उड़ने की प्लानिंग की थी।
SIP की शुरुआत जल्दी और लंबे समय के लिए हो तो लाइफ गोल्स आसानी से पूरे हो सकते हैं। स्टार्ट योर SIP टुडे। Mutual fund investments are subject to market risks. Read all scheme related documents carefully.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
फ्रेंड्स कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
इस बार इंक्रीमेंट पे क्या खरीदने का प्लान है?
यार मैं तो अपना SIP बढ़ाऊंगा।
SIP तो हमारा भी चल रहा है, और क्यों बढ़ाना उसको?
देख, सिर्फ एक अमाउंट का SIP करने से नहीं चलने वाला। हर साल जैसे तेरी इनकम इंक्रीज होती है, so should your SIP।
वरना क्या?
तुम्हारा SIP तुम्हारी लाइफस्टाइल के साथ नहीं बढ़ पाएगा।
और यही लाइफस्टाइल
तुम्हें फ्यूचर में अनअफोर्डेबल लगेगा।
Request all my colleagues, I would request all my colleagues to usher all the people inside. We are about to start our session in couple of minutes. I would request everyone who are outside to kindly join us within the ballroom and take your seat, please. Would request everyone to kindly join us in the ballroom and take your seat, please. We'll be starting the next session in few minutes. Everyone to take your seat, please. We are starting the very important session on mutual fund. The session will be moderated by Mr. Tamal Bandyopadhyay, author and columnist and mentor, Banking and Finance Committee, BCCI and I. Would request Mr. Vishal Kapoor, CEO, IDFC Mutual Fund, to kindly come up to the stage, sir. Would request Mr. DP Singh, Deputy MD and CBO, SBI Mutual Fund, to kindly come up to the stage, sir. Would request Mr. Peshutan Dastur, Group President and Head Sales at UTI Mutual Fund, to kindly come up to the stage, sir. Would request Ms. Lakshmi Iyer, President, CIO, Debt and Head Products, Kotak Mahindra Asset Management Company Limited, to kindly come up to the stage, ma'am. And we would request Mr. Srinivasan Ramamurthy, Equity Fund Manager, HDFC Mutual Fund, to kindly join us on stage. Now I would request Mr. Tamal Bandyopadhyay, author and columnist and mentor, Banking and Finance Committee, the Bengal Chamber of Commerce and Industry, to kindly come up to the stage, sir. Can I request? Can we have another microphone on the stage, please?
Very good afternoon, and this is a post-lunch session, so our task is not to let you fall asleep. And I think subject is as such, most of you, or like all of you, must be waiting for. So we'll start, we'll have just a casual conversation because it's a general topic, Indian capital market beating volatility. And you can't have a better panel to discuss this because they represent almost a large part of the Indian mutual fund industry. We'll take a few questions if time permits in between the rounds. And only one caveat is this: don't ask for any stock recommendation. Is that okay? So we'll not discuss any particular stock. So volatility, I don't know. Lakshmi probably better know. I don't know how is Brahmastra doing. Is it the box office? Has they been able to? Brahmastra pit gayi. But the Indian market is as such, like every day people are talking about Sensex 70,000 in next 2 years or 75,000, etc., etc., etc. And the day market goes up, you will find all the positive clauses like money is coming, they are not going, investors are not going to China, they are coming to India. And then we talk about Indian inflation is not that high, Indian rates will not go that much high. And then we talk about oil prices coming down, etc., etc. And then the day market goes down, the media and all of us find also the equally believable reason why it is going down. Whether it's a Jackson Hole meeting where Powell said something in 8 minutes and that tanked the US market and then the spillover effect on India, or everything, APIs are not coming, so on and so forth. So it's extremely volatile market. But mutual fund not only deal with equity, you also deal with debt, you also deal with some gold ETF, etc. So I would like you guys to tell our audience, in this volatile market, what would be the correct way of dealing with it? Again, no stock, we're not discussing that. Essentially, when as an individual or as a journalist or as an author, when I interact with markets, I see the changes. Like 2 months back, they are talking about this is the time to get into debt because interest rates will go up only, we should lock our money into debt and all. And then little later, they changed the thing. They said, no, equity is going up, so we must get into equity. And now at this point, most of them say, no, equity is going up, but it's very overstretched. I mean, we have never seen this kind of valuation. So is it right thing to stay liquid or put in money in equity? So confusion all around, and I think the God and these 5 persons, 2 gentlemen on my left and the lady and the 2 gentlemen these 2 gentlemen on my right and this 3 person on the right, on the left, they know actually what is happening in the market. So I don't have any gender bias, but I see Lakshmi is the first lady to be on the panel since morning. So ma'am, you start. General comment in this volatile market, how to beat the volatility. And then we'll get into some specifics. And we will take questions in between, time permitting. It's 2:14 now. At 3:15 sharp, we'll end. Yes.
Thanks, Tamal. Is this audible to everyone? I'm assuming yes. And yes, the post-lunch session is the most difficult session, and it's not yet Friday, so I can't talk about movies which are going to release, which I have not seen. But let me take you to something, I think which all of us would have seen, a movie which is many, many years back, which is a movie called Mughal-e-Azam. And I'm sure most of us would have seen the movie Mughal-e-Azam. If you haven't, it's available on YouTube, forget OTT. Now, in Mughal-e-Azam, and why you'll come to know exactly in a few seconds why I'm talking about this movie, is because in that movie there's this very, very famous dialogue by Akbar, Maharaj Akbar, who tells Anarkali, who is Salim's lover, that Anarkali, Salim तुम्हें मरने नहीं देगा और हम तुम्हें जीने नहीं देंगे. Now you will wonder what is this Salim, Anarkali and Akbar context in this market. So here the Salim and Akbars of our volatile world are Mr. Putin and Mr. Powell. Clearly, the volatility in oil prices created on account of this gentleman and the resultant, I would say, usage of the rate hike Brahmastra by our Mr. Powell is leading to shudders and shivers across the globe. And in that kind of a volatile, uncertain market, we cannot say that, this is going to be the view. Probably 2 hours later, where I speak next, something would have happened, something would have bombed, oil would be maybe $5, $10 higher, or maybe, $20 lower. And then your investment thought process changes quite materially. So I think that is, in a gist, how one describes really this volatile world. The way to plan this is, of course, keep yourself very, very agile. It's very important. And keep yourself extremely grounded. It's very easy to get carried away in this kind of a market scenario where the effervescence is faster than camphor. जो घर पे जो कपूर जलाते हो, that also obviously evaporates. But the effervescent nature of this market is such, what you saw yesterday is not available today. So I think that would be my opening thoughts in terms of how we see volatility at this point in time.
Thanks, Lakshmi. So she spoke about Salim and Anarkali. Thank God she didn't talk about those who want to discuss about film, etc., etc. She is there after market hours. You can always, along with market. Acha, during markets are also okay. That's what she said.
Yeah. Hello. Yeah, sure. So thanks in normal times. So it is, I mean, while it is true, and it is obviously even more truer for institutions, because for us it is normally much easier to take contrarian bets in a marketplace, given that it is not possible to take, pro-market kind of positions normally, because obviously because of your size and everything, it becomes a lot more difficult. So while that is true, but at the same time, I think what incrementally we have started, I think most of us as market participants have realized over time is that if you, as a market participant, as a fund manager in my case, and as people from the mutual fund industry who actually design products and run products, if you are unable to kind of think about investor behavior in some fashion or the other and factor it into the way that you're running portfolios, that creates a big wedge between the returns that you generate as a fund house or as an institution and what the end investor generates, because then the gaps becomes wide. Because if you're extremely volatile, what happens also is that there are times when, there are a lot of mistimed entries and exits by investors into your fund, and hence the end investor does not even get the returns that you might have actually delivered. So from that standpoint, I think it becomes important even for people like us to keep that in the back of the mind when we are kind of constructing portfolios. And while it is difficult to run away from volatility, but we do strive to whatever extent possible to minimize volatilities and try and be relatively more stable in terms of how the best that we could. through things like asset allocation, through things like within equities, being defensive at points in time in markets where one feels that markets are stretched, and being a little bit more aggressive when market conditions are more favorable. So we do kind of do those tactical changes, size and liquidity permitting. And that, I think, is broadly what I would say in the way that we kind of think and approach volatility in markets.
Thanks, Srini. We'll get into some of the micro aspects later. So let's hear Mr. Singh, representing SBI Mutual Fund, your preliminary comments on how to beat the volatility.
Yeah, see, I agree with Lakshmi as well as Srinivas. See, whatever is happening. In fact, today I will say one thing. People think that we sitting on the dais are the experts. But I think today the Indian investor, the way they have shown their behavior, I think they have become the experts and we are driven by what they are doing. They are not putting any fresh money. Money is coming only through SIP route and all, and they are fighting with the people are remaining invested. That's what the experts have been telling all the time. That volatility is your friend. You have to continue with this. And fact of the matter remains, as Tamal was talking, I mean, everybody is talking, there are different views. But one thing is, there is a committee that this is the time which is absolutely favoring the India as a story, and Indian markets by default will get benefited. This is the time when we need to get people into the capital markets, not directly through the equity route, but bring them into the capital markets. There are so many things happening, but Lakshmi is more experts on this, on the debt side, on the equity side. But today, we feel that this is the time when we have to be very confident, show a very strong face, do good for the investor being the center stage of all our thought processes, and move it forward. It's not the time to get out of the market. It's not the time to get whole hog into the market. That's how we have to be very, very mature behavior, which investors are already showing. But in the bits and pieces, then when there is some kind of confusion in the times of investors, that's where we feel that we need to navigate in a much more responsible manner. But volatility, yes, it is there, and we have to live with it.
Thanks, Mr. Singh. So essentially, you are saying you are better off than many other markets, and stay invested. Don't try to get in and get out in quick succession. Yep. Mr. Kapoor.
Thank you, Tamalda. So we started with an Indian classic movie that inspires me to talk or think about a Western classic movie, the good, the bad, the ugly, but with a twist. Rather than the ugly, I'd rather focus on the opportunity. The good is that, and we're talking about volatility. Keep in mind, if there's no volatility, there's really no market. Then there's no point of view. Volatility is inherent to markets. I think it's important for us to recognize it, recognize that it's good, because that's where the opportunities are created. Now, unfortunately, what is bad is how we react to volatility. And it's very natural that behaviorally we are fearful. So when volatility is around, we can take irrational decisions. That leads to unwarranted actions, and therefore portfolios don't stay invested. So you react. That's the bad. Now, I think the industry, especially the fund industry, has created some very, very effective tools, now proven over various cycles, to actually make it an opportunity. And that's what I think we should really focus on, which is where is the opportunity? DP, my friend and colleague, spoke about one of them, which is SIPs. SIPs, or systematic investment plans, or STPs, systematic transfer plans, have proven now over cycles to be a very effective tool to deal with volatility. Because keep in mind, once you decide that this is what you want, not looking at the market every day, every minute, every hour is a great way to actually keep your money long term and invest it. So that's one thing I would want to call out, that there are great tools available to manage volatility. SIP, STP is one of them. The second I would call out is the new category called balanced advantage funds, where fund managers through some models can help change the mix between equity and debt. And keep in mind, these two asset classes can help you manage volatility very effectively. So when the fund manager feels that it's a good time, they can increase equity allocation. When it's not a good time, they can reduce equity allocation and push more into debt. As an investor, therefore, you get a reasonably or a more stable ride than you would otherwise try and do yourself. So again, coming back, there is good in volatility, there is some bad reactions to volatility, but there's a lot of opportunity in volatility. Please don't miss it.
Thanks. So volatility is a part of the market, part of life. We have to live with it. And you have mentioned about SIP and STPs, one way is of overcoming the volatility. Baston sir, I've kept you deliberately as the last speaker of the round because you represent India's oldest mutual fund, UTI. So give us a sense how to tide over, how to face, how to beat the volatility.
Sure. So good afternoon to everyone. Thanks, Tamal, for this. I'll just bring a little different perspective. Think of what matters to you. Your children, your retirement, your house, keeping your spouse happy. Those are the most important things of life. How is your investment going to aid that is the most controllable subject that you can do. Markets are definitely not in your control. Last piece of view that I can put out there is, in the short term, volatility, and we heard from everyone, is inherent. But I can tell you the market is going to go only one way, and that is up. Will that happen in 5 years, 7 or 25 years? It surely will happen at some point of time. And if I have that time period to invest, why do I get perturbed in the short term and keep second guessing where interest rates are going or where equity markets are going? One last statistic. In the last 25 years, Nifty has been positive 19 years out of 25. 6 years it was negative. India is far better placed for growth in the next 25 than it has been in the past 25. Now, कौन से साल में कितनी volatility होगी, कितनी बढ़त, कितनी कम market में होगा, who can predict that? You bet on the long term and stay focused on yourself is the only piece of gyan I can give.
Thank you. So again, the same thing, live with volatility and stay long. Anybody has any question from the audience? Others, you can take it later. No? This gentleman. Can you have a mic? Just make it brief, only the question here.
Sir, my name is Sandesh Bhangre. Sir, what is a blue chip fund and index fund? What is blue chip fund and index fund?
What is blue chip fund and index fund? Whatever. Syncs up. Yeah. See, blue chip funds is basically from the large cap stocks. You pick when it's cherry picking from within the stocks. What are the good stocks within those companies which fund managers feel that they will do well, keeping in view their fundamentals, they do the analysis. And the portfolio is created out of the large cap stocks. That is called the blue chip fund, which is investing mostly into the large cap stocks. That is the general fund which is there. And index fund, whatever index you are putting in, this will just mirror the stocks within that index. Suppose you are putting in Nifty 50, so it will mirror only the performance of the Nifty 50 stocks. If it is a mid cap, whatever stock.
Multi-asset fund, like commodity or the real estate or the debt and the equity or any other asset class, will help to beat the volatility.
Is it a question or you are making a comment?
No, will it?
Acha.
Will the diversifications of the asset class will beat the volatility? That is my question.
Vishal.
Yeah, so excellent point and excellent suggestion. I think the concept and one of the, core or established principles of managing volatility is to diversify. So more the number of assets which move differently in different cycles, the better your chance of beating volatility. And therefore, balance advantage is just a very simple illustration I was giving between equity and debt. But yes, if you add a commodity or you add a metal or any other asset class to it, it will definitely absorb more volatility and therefore make it a steadier opportunity for you. So you're right, absolutely over there.
Thank you. Yeah, there's a gentleman here at the end. Can you give the mic there? Yeah.
Hello, sir. I'm Vikas Sharma. I represent Informatics Ratings. Sir, I just wanted to hear from you that how does global market scenario impact on mutual fund industry? Like we are looking at global market scenarios which are right now very challenging. So what is the impact on equity and mutual fund industry on this, looking at the present scenario, sir?
Dastu sir?
So any of you, sir?
Yeah.
See, the global markets not impacting domestic markets is not possible. That's number one, because the interlinkages still seem to be there. One might debate on the degree of the interlinkages. For example, at this point in time, if I take, the most topical thing is, a dengue fever. So, for example, right now, all global economies, including India, EM economies, are suffering, say, from a dengue fever. But how many of them actually go into ICU? And how many of them are undergoing home treatment? I think that is very, very critical. So in that context, if I say countries like the US, the UK, the ECB, all of these, the European Union, all of these have reached such a stage where inflation is accelerating way faster than probably their best printers can run. So I think therefore that is, reached a level where the platelets have dipped so much that they are actually in the ICU for saline and other treatment. Whereas economies like ours are still standing pretty tall. Inflation is high, no doubt about it, but is it so high that it is going to blow the whack out of you, make the central banker, go into maybe a fourth gear in terms of, hiking interest rates, like what the US has embarked upon? Very, very unlikely. But at the same time, can we afford to be complacent and sit in a neutral gear and say that all is well, all is well? Again, that's also not the reality. So the truth lies somewhere in between. So countries like us, for example, according to me, are in the second gear, and this is in the driving parlance that I'm talking about, where you're going steady, you are going in a similar direction to where the US is or the Eurozone is or the UK is, but you are mindful of the fact that an overdrive or, excess of speeding might just lead to a lopsided impact. While you are an inflation vigilant, you can't completely, I would say, disassociate yourself with the fact that growth also requires some bit of an anchor. So I think that is a situation we are. So certainly, if US will continue to hike interest rates, there is no doubt in our mind that India will have to play ball and follow suit. But as I said, it's not going to be andhadhun moments like what the US is depicting. US is in a typical scenario where they are talking right and walking left. I don't think India is in that kind of a situation right now.
Thanks, Lakshmi. So taking off from what you said is this, India, even though it's not decoupled, but in a very different kind of scenario, we see corporates, most of the corporations are deleveraged. Banking sector is very strong. In fact, Bank Nifty is at its lifetime high. We are talking about investment. We are talking about consumption demand. That's the one side of it. On the other side, there's a threat of interest rate going up. To some extent, it depends on our own inflation scenario as well as what US does in the third week of this month. We don't know what's the terminal rate we are discussing, etc. And so in this kind of context, I'll start from Srini and all. It's debt versus equity. For a lay person, what would you think would be the balancing factor? Because all of you said that volatility is a part of the market. We can't ignore that. We have to live with it, and we have to stay focused on long term. And every mutual fund discussion I have seen sitting on the dais or in the audience, people all talk about long term, but how long is long term? Is it 3 years? Is it 5 years? Is it 10 years? Within 10 years also you'll find out that 1 point to 1, maybe from the first to 9th year, everything was fine, but on the 10th year, it just goes down. So ultimately, if you stay put for 10 years, your return is much less than had you got out in 9 years. So it's all
we always discuss this long, but nobody knows how long is the long term. That's a separate story. But in this kind of scenario, debt versus equity, the balancing act, each of you can give us some sense for the audience. Starting with you, Srini.
Sure. No, I think at a very broad level, I would say that when you're looking at asset allocation, which is what I think you're talking from a, debt equity mix kind of a standpoint, I would say that there are two things that any investor needs to take into account when he is at his personal level. I think that's also, I think one of the most critical elements here, because every individual is running through a different point in time in his life cycle. His requirements might be very different. So to that extent, when an advisor is talking to, is advising an individual, or an individual is himself taking a call, I think there are 2-3 things that matter when you're taking this particular call. He wants to beat inflation, because that is where, every expense that you have in your life typically scales up with inflation plus minus some number. So when you are dealing with, when you're investing in an asset class, the ultimate objective that you have in mind is obviously you want to beat inflation, and that is a relatively, I would say, a medium to long term kind of an ambition that, or an aim that you have. In the short term, you do not want large fluctuations or large drops in your, I would say, AUM. And this balance is actually very different for different people, because different people will have different requirements of this balance. There are some people who do not, whose dependence on this income stream from this investments may be very high, and hence to that extent they might want a slightly higher element of a reduction in short-term volatility, and as opposed to beating inflation or building wealth over the long term. So logically for them, the share of, I would say, equity as an asset class should be lower and debt should be higher. So I would say, I think to answer your question from an asset allocation standpoint, I would think the key decision that every individual needs to take is, one, where is he in terms of his requirement of balancing this aim of beating inflation over the long term, but at the same time meeting some short-term objectives along the way, and taking some account of the asset prices cycles that are currently prevalent in the marketplace. These would be, I would think, the 2 key elements that one should be wary or thinking about when they are building this kind of an asset allocation mix between debt and equity.
Thanks, Srini. So we'll ask Mr. Singh. I know each of you have your expertise, but generally, if you say, and what Srini raised a very important point, that ultimately, what is your what you earn through your investment, whether it can beat inflation. Like as we speak, August inflation is 7%, which means 100 rupee we are keeping in a bank account, say, it actually becomes the value of money, its ability, the purchasing power runs down to 93 rupees. Okay, now even if you get 7% interest, which is the best some of the banks are offering, and if you are in the 30% income tax bracket, so you actually get around 5%. So 105 rupees minus 7 rupees, 98 rupees. So despite that, despite earning 7% on a bank deposit, at the end of the day, you actually become a loser by 2 rupees. Your 100 rupee becomes 98 rupees, the purchasing power. So that's what inflation does to our savings. Right? Am I correct saying that? So, Singh Saab, in this market, where the market is volatile, equity market is volatile, a lot of things are, interconnected globally. What's happening in China, Russia, Ukraine war, oil has come down, but we don't know what's going to happen. And of course, the big elephant in the room is what's happening in US. Now people are talking about 1 full percentage point rate hike later this year. So does that make debt much more attractive at this point of time in equity? What would be your perception?
No, debt definitely will become very, very attractive today, especially post this Fed hike, whatever we are looking at. Once that happens and market, as the factors that into the pricing and all, and then our policy also comes, whatever hike has to happen. Thereafter, that if you are, see, one very, very good innovation has happened in mutual fund industry, which we are calling as the target maturity funds or the index funds. So that's one of the best product, because earlier we were having a product which was fixed maturity plan, which was mimicking the fixed deposits and so everything. But the problem was the liquidity. In this particular class, which is index funds or target maturity funds, you know you are having the visibility of the YTMs, what will be the kind of returns you will be getting because you are locking in the at a particular YTM, you know the expenses, what will be the returns you will be getting after that particular period. It could be 3 year, 5 year, 10 year, whatever you are putting in. But these kind of heightened interest rates are not going to stay forever. And once this interest rate starts coming down and there's a capital appreciation in these stocks and liquidity is available, it becomes absolutely liquid for you to withdraw the money and put it in any other asset class, even very cost effective also. The costing is not very high. So I think this is the best time for the debt markets. I'm not saying today, but in the times to come, maybe in 1 month down the line, 2 months down the line, it's going to be very, very attractive. Yeah, that's the point. And I'll take 1 minute on the first thing, sir. How long is the long in the equity markets? So that question, I think, as you rightly said, ever since when I joined mutual funds 23 years ago, this is the common question: how long is the? But I always give an analogy of the gold. Whenever we buy jewelry, this is an asset class. Do we ever see that we are buying jewelry for 3 years or 5 years or 10 years? We buy jewelry whenever we need it. This is kept in the need of emergency. I will liquidate it, whatever the price is. So same analogy has to be for the equities. Yes, first 3 to 5 years are very, very important. Once you make it 100 rupees become 150 rupees. Thereafter, even if the market is down by 10% or up by 10%, how does it make any difference? If you need money, you withdraw it. So equity is an asset class. You should not be defining the period. Okay, from taxation point of view, yes, they are saying 1 year is, after 1 year is long term, before 1 year is short term. But yes, if you are entering it when the market is very high, then there could be period of 2 years, 3 years. So first 3 years are important. You have to be there for 3 to 4 years, and thereafter it's immaterial. But it should be for much, much longer period than 3 to 4
Thanks.
years.
This is yours.
So to your question on asset classes,
at this point of time.
At this point of time, clearly I would favor Lakshmi over Srini. Because, whether you look at, GSEC yield over equity market yield, you look at the PE or the PB for any segment of the market, equity market is probably not cheap at this point of time. On the fixed income side, for the last few years, we didn't have enough yield which allowed you to get a return from fixed income. That's now come into place. The big question is, what is the terminal rate? So when RBI is raising interest rates, वो कहाँ पर जाकर रुकेगा? And has the market already discounted that level? If that being the case, then like DP said today, target date maturity funds or anything on the shorter term could become very good return providers with the yields that are there in these funds at this point of time. So clearly for me, debt over equity at this time from a short-term immediate future point of view.
Thank you. Vishal.
So I would urge you not to worry about the short term at all and keep your objective at play. I think Pesu spoke about this earlier. Be selfish. Talking about managing liquidity, we spoke about a few tools like SIP, STP, balance advantage. But the strongest tool across market cycles that helps you manage volatility is time. Every study across every market will tell you that the ills of volatility, which is that you can lose money, gets progressively smaller and smaller and goes down to zero or lesser, or zero, after 4, 5, 6 years. Depends on the market cycle and depends on which market you're looking at. In India, by and large, our studies have showed that on a rolling basis, the moment you hold for more than 5 years, your probability of having lost money is near zero. 100% of the time you've got gains. So another way to think about it is that as long as you're willing to hold long enough, volatility should not bother you. And therefore, the question of how much equity, how much debt comes back to what is your time horizon, what is your goal. Don't bother so much about the very, very near terms. Let the experts, let the traders, let people who really deal with this day to day worry about that. As an investor, you really have to worry about, is your goal being met? And is volatility getting in the way? Volatility will not get in the way if you're holding long enough.
Thanks, Vishal. Over to you. You have the last word, Anarkali. I'm sorry, Lakshmi, not there. Okay.
So I would say that शादी कर लो. शादी कर लो, not to all of you, but the point is, I know श्राद्ध का season चल रहा है, पितृपक्ष है, but उसके बाद usually you see that it is the season of weddings. So you start preparing for the wedding, which is the marriage of debt and equity. You are at a time where interest rates have bottomed out, have started rising, have not totally peaked out, but somewhere it is in that, what would you say, the Trishanku zone. It is kind of suspended right there, but maybe closer towards the sky right now. And on the other hand, you have equities, which is behaving like आगे खाई पीछे कुआं kind of a scenario where, you know, damned if you do, damned if you don't. So every time you decide you're going to exit, you see the FPI is trying to buy, and every time you do the reverse, there is some, you know, factor which is playing in your mind. So I think the confluence where you try to blend equity and fixed income, which is so popularly called as hybrid, for example, in the mutual fund industry, is the way out. But if you say, you know what, I want high adrenaline rush, I don't believe in these marriages, I am pretty okay taking the high risk, then it's equities for you. At this point in time, probably you could be overweighted, or you try to do, if you want to do a lump sum, you can go into a large cap, as somebody said, blue chip kind of categories, stagger yourself into small and mid cap. But if you say, you know what, I just don't even know how to walk and you're trying to tell me how to dance, so I'm no Michael Jackson, then for you it's pure fixed income. As DP said, target maturity funds are one of the better things that happen to the debt mutual fund industry, where the element of certainty is pretty much high. Either which ways, whichever asset class you do, and I will bring in mythology over here, and I'm assuming quite a few, or all of you would have seen Ramayana. I would say that there is Sita who actually breached Lakshman Rekha or फिर Ramayana रची थी. So she actually breached the discipline despite having told not to breach it. And then you know what happened. And there is this Kumbhakaran who is, you know, sleeping through the day, through the night, and just sleeping and not really, you know, is completely oblivious. नगाड़ा डोल बजा के उसको उठाना पड़ता है. अब बोला कि अभी वॉर छिड़ गया है, अब तुम आ जाओ अपने भाई को बचाने. I am saying in your investment portfolio, please be like Kumbhakaran, don't be like Sita. It's extremely, extremely important, because when you fill it, shut it and forget it, and you're oblivious to where crude oil is, you're oblivious to which is the next war happening, be aware of the fact that which is the next movie release. Be aware of the fact that यहाँ से 4 किलोमीटर बगल में कौन सा नया restaurant खुला है where I can go and, you know, probably satiate my palate and tickle my taste buds. Once you start getting into that realm, into your investment mind, trust me, it's very difficult. It's not easy as I'm telling you, because it takes great difficulty to practice what I'm telling you. And once you do that, trust me, you have attained that Zen stage. फिर आपको बोध गया जाने की जरूरत नहीं है निर्वाणा के लिए.
Thanks, Lakshmi. I mean, you prepare yourself to get the clap, all those kind of Sita, Lakshman Rekha, Brahmastra. I know. Okay. Anybody has any question? Not those who have already asked. Anybody? This gentleman, yeah. Then we'll come back. We'll just take one question. Yeah. Can he have the microphone, please? This gentleman, yes, sir. Make it very brief. हाँ.
राकेश जैन, my first question. आज हम जहाँ भी जाते हैं, किसी भी इन्वेस्टर के पास जाते हैं, तो हर कोई यही कहता है कि सलीम का वही वाक्य दोहराता है कि आज का जो सिचुएशन है, आज का जो माहौल है, कि हम तुम्हें जीने नहीं देंगे, और एक तरफ से देखे तो हमारा इन्वेस्टमेंट हमें मरने नहीं देगा. ऐसी सिचुएशन में हमें उन्हें कैसे कन्विंस करना चाहिए? एंड द सेकंड क्वेश्चन इज टू द पिस्टन जी और एनीवन, कि आज हम किसी भी एएमसी का म्यूचुअल फंड के रिकॉर्ड देखें तो 10, 20, 100 जितने भी फंड्स आए हैं उसमें से हार्डली 5 या 10% ही परफॉर्म कर रहे हैं। बाकी के पैसे पिछले 10 साल का इन्वेस्टमेंट देखिए वहीं का वहीं है या थोड़ा सा इंटरेस्ट रेट के आसपास में मिला है। ऐसी सिचुएशन में हमें उन्हें कैसे कन्विंस करना चाहिए, कैसे सिलेक्शन करना चाहिए कि ये फंड राइट है। धन्यवाद।
Thank you. So, yes, whoever wants to take.
First question was to Lakshmi and second was to anyone.
First, Lakshmi.
सर
क्या करना
कन्विंस करने की कोई जरूरत नहीं, उनको बताइए। आपने बुलबुलैया 2 पिक्चर देखी है? नहीं देखी है? अब आपकी हंसी से लग रहा है। अगर आपने नहीं देखी है तो जाके देखिए। विश किया हुआ इसको हमको छूना नहीं है, उसको अछूत करके रख देंगे ना, तब जाके वो आपका गोल्ड का माइन बनेगा। एंड आई थिंक आई एम वेरी वेरी कन्विंस बिकॉज हर साल जब मैं रिटर्न फाइल करती हूँ, दैट इज व्हेन आई एक्चुअली लुक एट माई डीमैट स्टेटमेंट एंड आई रियलाइज सडनली दैट आई एम सिटिंग ऑन सम गोल्ड माइन। ऐसा एक स्टॉक है जो मैंने 15 साल 20 साल पहले खरीदा हुआ था, वो ऐसे ही पोर्टफोलियो में पड़ा हुआ था। वो स्टॉक स्प्लिट होके 2, 3, 4 स्टॉक ऐसे और पोर्टफोलियो में आ गए एंड देन यू रियलाइज दैट्स हाउ वेल्थ क्रिएशन इज डन। मैंने खरीदा था, मुझे पता है, लेकिन आई हैड जस्ट फॉरगॉटन अबाउट इट एंड इट वाज अ डिसेंट स्टॉक, फिर उसने ध्यान नहीं दिया। सो बी लाइक दैट, फिर आपको कन्विक्शन देने की जरूरत नहीं पड़ेगी। एंड पेसी ने जैसे आपको इतने सारे डेटा पॉइंट्स दिए, सी इफ यू टॉर्चर डेटा, डेटा विल कन्फेस। यहाँ पे आपको डेटा को टॉर्चर करने की जरूरत नहीं है, आपको केवल उनको सिंपल से सवाल पूछने हैं। क्या ऐसा कोई है इस रूम में जिसने 10 दिन में कभी मुनाफा या नुकसान नहीं कमाया है? आई मीन, इज देयर एनीबडी इन दिस रूम हु हैज नेवर मेड अ लॉस इन 10 days? Not possible. You ask the same question to same person. Ask a question: is there anybody who has ever made a loss in 10 years? आपकी जो फ्रीक्वेंसी है ना काफ़ी घट जाएगी, अनलेस आपने क्रिप्टो वगैरह में लगाया होगा, फिर वो तो स्टोरी अलग है। फिर तो आप देवदास बन जाओगे, फिर आप सलीम अनारकली भूल जाओगे। सो आई थिंक कीप दैट इन माइंड. इट्स वेरी इंपॉर्टेंट दैट यू स्टिक टू ए एसेट एलोकेशन. Time and again, studies have proven more than 90% of the returns are basis asset allocation. Everything else is Maya.
Thanks. The second question, whoever wants to take. दोनों के जवाब दे दिया अभी तो।
हाँ, वो मैडम है तो थोड़ा सा हाँ. But you take her also aside about her own investment and how it's been growing. I think she has time.
दूसरा देखिए, ये
show her demat etc etc.
मैं ना इस बात से सहमत नहीं हूँ आपका कि सिर्फ 5-10% स्कीम्स बेटर कर रही हैं और बाकी सारी जो सेविंग जैसा दे रही हैं, ऐसा मतलब मेरे को नहीं लगता कि ऐसा है मार्केट में। यहाँ एक साल ज़रूर था बीच में जब सिर्फ 5-6 स्टॉक, 1-1.5 साल ऐसा आया था बीच में, सिर्फ 5-6 स्टॉक्स ही चल रहे थे। और म्यूचुअल फंड का पोर्टफोलियो, किसी भी म्यूचुअल फंड स्कीम का पोर्टफोलियो 20-25-30 स्टॉक तो होता ही है। अगर आप 5 स्टॉक में अगर आप अंडर वेट हैं या आपने उसको नहीं लिया तो वो आपको अंडर परफॉर्मेंस दिखेगा विज़ बेंचमार्क। और दूसरा मेरा ये सवाल है, मतलब किसी भी इन्वेस्टर को ये नहीं देखना चाहिए, जैसे लक्ष्मी ने भी बोला कि मैं बेंचमार्क से कैसे परफॉर्म कर रहा हूँ, मेरी अपनी इन्वेस्टमेंट से कैसे परफॉर्म कर रहा हूँ अगर मैंने डायरेक्ट इन्वेस्टमेंट की है तो वो एक ज़्यादा ज़रूरी चीज़ है देखने के लिए। और दूसरा, आई मीन सी देयर आर सम स्ट्रक्चरल इश्यूज विद आवर बेंचमार्क्स. Today, 3 stocks contribute 25% of the market cap of large cap stocks. So can any mutual fund scheme beat 25% into these 3 stocks? No, it cannot be. I at least I don't, unless until it's an index fund or something like that. तो उसकी वजह से थोड़ा बहुत तो ऊपर नीचे रहेगा। अगर एक साल में आपका HDFC बैंक, HDFC और रिलायंस तीनों बढ़ गए, बाकी चीज़ें नहीं बढ़ी, तो आपके सारी स्कीम्स जो अंडर परफॉर्म करेंगी। बट हु विल हैव 25% ऑफ दिस? दैट्स अ क्वेश्चन. सो डोंट लुक एट दैट वे. ओनली थिंग इज लॉन्ग टर्म, वेदर यू आर क्रिएटिंग वेल्थ और नॉट, वेदर यू आर गिविंग टैक्स एफिशिएंसी और नॉट. बट शी इज सेइंग जस्ट फॉरगेट इट. इफ यू रियली इन्वेस्ट एंड फॉरगेट over the long period, you will enjoy the benefit. If I have invested say 7 years ago and today I am sitting on 100 or 100% plus appreciation, it doesn't make any difference if market falls by 10% or 20%. मेरा 200 जो 100 का 200 हुआ है, 200 का 180 हो जाएगा या 210 हो जाएगा. Even then it's okay.
Thanks, Insab. So both you and Lakshmi said the same thing. Invest and forget. Invest and forget. So we have about 16 minutes left. So we'll have we don't take any more questions. So we'll have a quick 2 rounds, 1 minute each kind of thing. Insab, we'll start with you and from there on all. First is this, not any specific stock, but if you can give us a sense in terms of equities, the sectors to look for. For at this point of time,
everybody is talking about banking. As I said, bank nifty is a historic high. On the other hand, telecom in a bad shape because of primarily the developed markets not in the best of health.
Yeah.
And then we hear contradictory statement about consumer demand. The other day I was at a shop, I will not say the name brand, they're saying that we have never seen the way the large TVs, like nobody comes here for 30,000, 40,000, 60,000 TV, worth of TVs. They all go for 1 lakh plus television, etc., etc. You talk about, 2 days back I got a text message from a friend of mine. She said she and her husband, both of them shifting, going to a new car. Both of them. So on the one hand, we are hearing this kind of revenge buying. On the other hand, we hear that no, rural India is not in the best of shape. So it's very uneven. In this way, what are the sectors big no, and what are the sector big yes? Can you tell us 1 minute?
Yeah. Sir, as far as sectors are concerned, I think...
No name of any company, just sectors.
No. As far as sectors are concerned, these are very, very cyclical things, right? And let this thing be done by the fund managers in your fund. Unless until you... See, if I tell somebody, yeah, banking and financial services is doing very well, get into banking and financial sector. And on the other side, I'm saying be very, very long term. Will I be doing a right thing? Suggesting it because banking and financial, I'm not giving a guarantee that it will continue to outperform the next 3 years, 5 years. So let it be diversified, this be done by the fund managers because they can take quick calls. As an investor, I can't do that. So better let it be with them. I mean, the sectors, yes, today banking sector is doing very well. When the currency was actually depreciating, our IT sector was doing very well. Yesterday there was a complete sell-off on the IT sector. Better to be leave it to the fund managers. They will keep on doing whatever they are doing. And I am confirming it to you that all the fund houses, the fund managers are doing a lot of hard work to get into the... It's very, very difficult to get in and out. But we don't take a call as far as sectors are concerned on an ongoing basis from investors' point of view.
Thanks, Vishal. Yeah. Vishal. The sectors, no, sectors, yes.
So I would second what DP is saying. There are clearly sectors that we like today, BFSI in general, auto in general, etc. There are some like this. But as an investor, why do you want to take sectoral calls? Let the fund manager decide that because pricing and valuation, etc. can change very rapidly. So don't get into that. One very interesting way to manage volatility, coming back to how do we manage volatility, is something called a volatility index fund. So you can buy the index, but this is an index which chooses the low volatile companies. So the 30 least volatile companies, and you normally associate low volatility with low return, that low risk, low return. In this case, this is an index which has produced similar returns, but with lower volatility. So that can be another way to manage volatility. We offer, and we've just launched a fund to just mimic the index. So these are ways in which you can also manage and keep volatility lower than the market.
So for me, you're asking very pointed questions. I'll try and give a pointed answer.
As fund managers.
BFSI, auto would be two sectors that I think have got a lot more legs to run. And, theme would be consumer because I think that's a theme again which will have strong legs to run a mile from here.
Lakshmi.
So, I will give you, since everybody is talking about BFSI, auto, etc., I'll tell you that, from another asset class, which is from a fixed income asset class perspective, if you assume government bonds, state government bonds, and corporate bonds, which is a credit, to be three sectors, we think it's time to be overweight or continue to remain overweight in the government bond and the state government bond sector, and probably be underweight the corporate sector. Now, it's not, or the credit piece. It's not because we believe that the credit cycle is worsening. The credit cycle has certainly improved for the better, which is why, all the speakers are, bullish, maybe a BFSI or auto space, which obviously even we are also. But the point is that the spreads between, the corporate credits and the government bonds have compressed, and how. Now, in that kind of a scenario, if you are getting to probably experience 5-star hospitality at, rates which probably were 3-star, then why not? So I think that would be our preference for sectors.
Thank you. Srini, what are the sectors that to look for, to get excited about, and take bet at this point of time? And what are the sectors untouchable at this point of time, from a fund manager's perspective?
Right. And segment and obviously global cyclicals or global sectors are something which I would say, relatively speaking, today would be I would be less comfortable with compared to domestic sectors. And within domestic piece as well, I would think that after a very long time, I think we are seeing incipient signs of private sector capex coming back. So to that extent, I would say that if I were to look at the capex cycle, which has been kind of a big disappointment for our country for some time now, I think that is clearly changing at the margin. And there are obviously, I think there are, I mean, both the government and obviously the corporate balance sheet cleanup, both of them have to be kind of given credit for the position that we are in today. And hence, to that extent, I would think, incrementally speaking, I would be a little bit more bullish on the capex cycle as well. Yeah.
Thanks, Srini. We have about 7 minutes plus 8 minutes left. So last round, 1 minute plus each. Starting with Srini. This gentleman, Ambarish Dasgupta, is sitting there. He's the former president of BCCI. He had 100 rupees in his pocket. And going beyond capital market, if you want his 100 rupee to allocate at this point of time among equity, debt, gold, real estate, and staying liquid in some way. Even within the equities, some part of it probably overseas equity, not in India alone. 100 rupees, how would you, for Ambarish, how would you advise him? What would be the asset allocation? How does he play rather you play as a fund manager, as a trapeze artist? Everybody spoke about stay invested, is the balancing act. So teach us, each of you, the balancing act. Ambarish is 100 rupees. Sir, you're okay with it, no? 100 rupees from him and given it to you. What are the asset classes you put in?
He's saying, why not more? Why just $100, I guess? So yeah, I mean, the easiest answer that I can give him, obviously, is one of the funds that I manage is a multi-asset fund. So I'd be very happy if he chooses to put that $100, all of it, in my multi-asset fund. But yeah, I mean, at a very conceptual level, I think that's exactly what we do in a kind of product like multi-asset, right? I mean, we do have allocations to REITs, we do have allocations to equity, we do have allocations to debt, and we do have allocation to gold as well. So in a way, the more liquid assets that we have today, all the liquid assets that we have today, we try and ascertain at this point in time, which are looking at from an attractiveness standpoint purely, we ascertain that and we decide that. So currently, if you look at my multi-asset funds, for instance, I mean, the one that we have at HDFC, almost 55% odd would be in equities as we speak, about 11-12% odd in gold, maybe 3% odd we have REIT exposure, and the rest is in debt. So that would be my, if I ignore his life cycle and I just purely say from a market attractiveness of asset classes standpoint, I think that's where I would be.
Singh Saab, 100 rupees, and tell us the different asset classes. I've already mentioned, even within equities, India and overseas you can split. And
Sir,
tell us by ball, just.
Sir, you have given me the profile of the person, BCCI president. So 2-3 assumptions I'll take. I'll not take 100 rupees, I'll take 1 crore rupees. Yeah.
Anyway, but okay. Keeping 100, you
No, if I have to take a call very seriously, I will put at this point of time 50% in debt in the target maturity kind of funds, so that whenever the things are right, I can move to equity. For the remaining 50%, I'll put 25% straightway into equity, and remaining 25% in a staggered manner into equity over the next 6 months to 1 year. That's simple. Because other things I think are sorted. He has his own house, he has all the things. He has already, he doesn't have any long-term goal liability kind of thing. So that's my assumption, and I will do this for him.
Thanks. So you see the divergence of opinion. Srini says 50% in equity. Singh Saab says exactly opposite, 50% in debt. Here, Dastur Saab, 100 rupees, where all you put it?
So I take a contrarian view. I'd, take him to take a very serious look at real estate. It's a sector that has not performed for over a decade in most parts of India. And if you don't have that as a investment, not consumption asset class, maybe either a...
So Tamal, a very difficult question, and I'll make a few assumptions.
Yeah.
He is the president of BCCI.
No, he stands for every man,
okay,
every investor. So let's not get into how much his net worth, how many houses he has in how many cities, how much bank, etc. His age. No, he's in he represents every investor.
Okay. So for every investor, I think firstly it's important if you're investing, look beyond 5 years. If you're looking beyond 5 years, things get easier. Otherwise, you're not investing. You're really trading.
So tell us,
right?
100 rupees, how do you distribute?
I would say keep it simple. You can do a very complex asset allocation very, very scientifically. We can give you decimal point numbers of how to allocate, but that's not your job. Please don't get into it. Let the fund manager do it. A simple balanced advantage fund or a multi-asset fund, where the fund manager does all of this, is a far better thing. You'd rather track one number rather than tracking 40 different numbers and getting SMSs and statements. Keep life simple. Focus on your core job rather than doing so many things and distracting yourself from your core passion or your vocation.
But you have not answered. Don't be diplomatic. Just they want to know what to keep your...
For a 5-year plus period, I would still be overweight equity. I would say a 60-40 or thereabout, 60% equity, 40% debt would be reasonable. Within the 60% equity, you should have some international exposure. I would say 10-12% would be reasonable. Within the debt, you must have some amount of cash or short term. You can squeeze in 5% of gold in between if you really think that's a great asset class. I am not such a big bull on gold, so I will probably live without.
No real estate?
I'm not a bull.
Okay. Lakshmi, again the last word is yours, but don't say that you take the 100 rupees and little more and go and buy a ticket for Bambrasto.
Not at all.
No, not for any...
See, because I watch movies, the stocks like, the ones which house multiplexes are doing very well.
So 100 rupees
I will make your job very, very easy because all of them have confused you sufficiently enough. So I'll take you from what Vishal said, keep it simple. 100 rupiya hai, to 90 rupees put in Kotak Balance Advantage Fund because that fund has allocation of 53% in equity today and the remainder is going in fixed income. And last 2 to 3 years, it has consistently done up and down. So आपका जो सर दर्द है ना हमको दे दो, हमारे पास बहुत सारे टाइगर बाम है. बचा का जो 10 रुपया है, 5 rupees put it in sovereign gold bonds, which will give you 2.5% extra. हमारे देश में जो भी एक्स्ट्रा मिलता है, we are अतिथि देवो भव, happiness personified. So 2.5% extra plus the return of gold. आप भी खुश, बीवी भी खुश, सरकार भी खुश because we are not importing gold. So you are doing a very noble job and reducing the deficit of the country. And बाकी का बचा 5 rupees है, वो आप REIT में डाल दो because real estate physically own करने से बेहतर. So I tell people, if you are wise, you buy a house. If you are rich, you buy 2 houses. And if you are a fool, you own the third. I am giving you an opportunity to own 2,500, 3,000, 5,000 under one roof. So please invest in REITs for the remainder 5. So this was a simplistic answer.
Thanks, Lakshmi, for giving us the advice and also marketing your product here. It's not exactly the place, but yeah, that brings us in exactly 3:15 now. Yeah, we have exceeded by 6 seconds, 15 seconds more. So, like any good discussion, there is no uniformity. We have seen that one is pushing for debt, another for equity, yet another for real estate, and it's only normal when you have different fund managers. But on one thing, everybody is saying that we have to live with volatility, not because of our internal issues, but because, the globalization, and we largely depend on, to a large extent, we depend on the foreign fund flow. So it depends on what's happening between China and Taiwan, what's happening in Russia-Ukraine war, what's happening on the US Federal Reserve meeting, FOMC meeting. All these things we are bearing. We have to live with the volatility, and as everybody said, that stay invested, stay for long. That's the only way to beat volatility. There's no other magic one to do that. With that note, we come to an end. I hope you enjoyed, and if you have, give them a big hand.
We're just waiting for Pleasantas to perform. Just May I request our former president, Mr. Ambarish Rajgupta, to kindly join us on the stage and hand over the frames to all our speakers. But don't go away. Please stay with us. We are just coming up with the next session immediately after that, which will cover the stock market aspect and also on the ESG investment. So please stay tuned with us. Thank you, sir. Yeah. Okay. Mr. D.P. Singh. Mr. Vishal Kapoor. Mr. Peshotan Dastur. Ms. Lakshmi Iyer. Mr. Srinivasan Ramamurthy. Thank you, sir. Thank you all. Thank you. Thank you. Thank you, sir. The next session is stock and shares, ESG and other factors impacting the market. I would request Mr. Hemal Uchat, partner ESG deals and strategy to kindly come up to the stage, sir. And also Mr. Dheeraj Delhi, MD and CEO, HDFC Securities Limited, to kindly come up to the stage, sir. We are starting the session immediately. I would request my colleagues to kindly usher all the people who are outside. With this, I'll hand it over to Mr. Uchat. If you can take this forward from here. I would request my colleagues to kindly usher all the people. We are starting the session.
Am I audible? Hello, audible? Yeah. So, very good afternoon, everyone. And I think I was part of earlier session and very interesting discussions on this style of investments. I'm not sure anyone would have understood the volatility in capital markets, but we are trying to all gather over here and decipher some of the technicalities of it. Today's topic given to us is quite interesting: ESG and other factors which could impact capital markets. I think markets are an interplay of hope and fear, right? And it goes with lots of sentiments. And at times you wouldn't know, markets, what are the reasons behind markets which are fluctuating? And there could be funny reasons which could be accorded to the market fluctuations. Purely technical reasons we can understand, like, war happening somewhere. But at times there could be funny reasons. And maybe I will try to illustrate a couple of examples over here, which I have, come across. There was an instance where a global beverage company, it had sponsored an event, and it was Euro 2020, and this global football star was giving an interview on a news conference, and what he did was he just displaced that aerated drink from his table. What happened after that? It coincided with a $4 billion washing away of the market cap. Now, what is this event? You cannot give any technical reasons for that. I mean, very surprising, but that happened. The other reason which I could come across is, a logistics and a delivery based startup in UK. Immediately after the IPO, there was a fall of 26% of market cap due to reasons, which was there in public knowledge about labor concerns or governance. These are few couple of instances which, I could fathom. But anyone in this audience, maybe I would request to raise a hand, that they could remember any such funny reasons where they have seen volatility in markets. Maybe none. So Dheeraj, maybe I will come to you, and in your experience, how do you describe volatility in market, and what is your view, or have you come across any such instances where you couldn't understand the market dynamics?
Good afternoon, one and all. Thank you, Hemal. I think it's a great question that whether I have witnessed the volatility in the markets or not. Let me tell you, I have been in this market for last three decades. I have been doing this role as a MD and CEO of HDFC Securities for last 7 years. But through and through, as an investor, I have been investing in the markets for almost last 3 decades. When I was doing my BCom honors, that's when I started investing into the markets and got first-hand experience at that time. I can only tell you this thing, that the volatility is the core to the DNA of the equities. And when you are investing in the stock market, when you are investing in equities, you have to be friend with the volatility. Unlike other instruments like fixed deposits, where there is a fixed interest rate, fixed tenure that is given to you, and you can get your interest without volatility at the frequency that is promised to you. Having said that, volatility nowadays have increased significantly. It could be attributed to the geopolitical conditions, it could be attributed to the commodity prices, it could be sometime attributed to the sentiments in the market, demand and supply, and most of the time also due to the performance of the corporates or companies that are listed on the exchanges. So, volatility is here to stay. You have to make volatility as your friend and not your enemy. If you can master your emotions and deal with the volatility, you can make decent money in the stock market. If you get panic, if you do not understand, and if you can't be friend with the volatility, then you should not be investing into the capital market. And with the complexity increasing, I can tell you the volatility will increase in the Indian markets also and global markets. When I look at the one of the most developed market in United States of America, you will see that even today, on the backdrop of certain event, the stock prices will go up by 10%, 15%, or go down 15, 20% also, just on the basis of some event, some news, some particular area which impacts the particular company. So volatility is here to stay. I have seen many bouts of volatility. There were many scams, many accidents in the markets globally as well as in India also. I am sure all of you are familiar with that. So my only humble request to each one of you is that learn how to navigate the volatility and make a full use of the volatility. In fact, then you will be able to master the investments in the equities and capital markets.
Thank you, Dheeraj. Fantastic. One needs to get into the nerves of volatility for understanding or making investment decisions, but probably the solution is in long-term investment. And as Lakshmi said in the last discussion, that try to be Kumbhkaran, which probably will, pass you through all the volatility, and you get decent result over a period of time. Now, in terms of ESG investing, and I being a professional on ESG side, I would say risk mitigation is an important factor in the business, right? And ESG plays an important role in mitigating risk of the business. We have seen all through that there could be many financial factors that could impact the market. However, I think the businesses and companies give their performances and stand strong based on the non-financial factors of a company. We have seen the valuations of the company. I mean, the profitability and the valuations is a factor of profitability. Valuations are determined based on non-financial factors, and it is these non-financial factors that would give companies in terms of sustainable performance over a period of time. Just to quote few statistics over here, ESG investing has been there for a long period of time, and there has been certain statistics by MSCI who have tracked, the indices and certain companies on returns which are given by the companies who are following ESG principles. In some of the research, it was found that an investment of 100 made in 2007 has resulted in a return of 290 rupees for ESG-backed companies versus 190 for non-ESG-backed companies. Now, what is ESG all about? So when I gave these examples of the sports player who displaced the drink, it is something which is connected with ESG, which is on the health of a product. When I gave an example of another logistic company, it also gets into sort of ESG issues with respect to the treatment to workmen and employees or the laborers. Now, these factors are becoming important in terms of valuations of the company, and the businesses are getting driven based on strengthening these ESG factors in the company. We have seen investors actually pushing companies in their investment decisions to embed ESG factors in the company. And so the markets are trying, and in this volatility, what we talked about, companies backed with ESG policies would see lesser volatility with respect to companies which are not backed with ESG policies. We will talk more about ESG, but in the meantime, Dheeraj, what is your experience in the market about companies, their risk mitigation policies, and do you really think ESG is something which is getting into decision-making process for the investors?
ESG is a nascent concept in India, but if you look at the developed economies, they have been working on the ESG for quite some time, and there are dedicated funds who are just investing in the ESG also. I think it is the core to the investments. Sooner than later, even in India, we would appreciate that we need to have this filter of ESG before we look at the investments and before we look at even how to deal with these companies at banking and financial services entities at large. I can tell you, about 5-6 years ago, I was in Taiwan. There was a conference organized by one of the large European-based asset management company, and that's where they had a detailed session on the ESG, and that's where I got to know that how people are so serious about this as a concept. And now I have witnessed that people are really looking at it very, very closely. In fact, after coming from the Taiwan, I had a meeting with the senior colleague in the HDFC Bank also and told him that not only in the investments, but also even in lending, we should be having a criteria that whether the corporates whom we are lending are ESG compliant or not. And in last 5 years, they have evolved and they have a well-articulated policy on this front in terms of lending. So I am just giving you a little bit of prognosis. In times to come, companies that are not compliant on the ESG will get loans at a higher interest rates, may not get the loan also because they may be, causing harm to the society at large. Among the millennials, among the youngsters, there is a great conscious that they do not want to invest in the companies that are not that are harming the society at large. So, like I have a 22-year-old daughter, she tells me, I won't invest in any company that is making liquor or spirits or all these things which are causing more pollution to the India or the world. So that way I think the awareness has been increasing. So it would come on the forefront and it would have a decent and significant impact. I'm sure, you know, it's a one concept one should track very, very closely.
Thank you, Dheeraj. I think some of the important observations over here, in a sense that your daughter is getting into responsible investing, which is sort of a key word which is going to continue in this world in terms of how do you invest, how do you behave responsibly. Over here, maybe let me get into sort of how investors are getting into decision making, and this decision making is sort of done with a responsibility towards society, towards environment. There are like many investors, many private equity funds, and I think mutual funds over here, who are getting themselves committed to responsible investing, and then they are getting themselves registered with principles of responsible investment, where they actually get into decision making and they embed investment decisions, keeping in mind E, S, and G factors. They, not only that they make decision making, they get into active involvement into the companies and also seek reporting from the investing companies in terms of how they are walking through in the journey of improving their ESG factors. Net in terms of ESG, a company would change its behavior, reduce their environment footprint, reduce their carbon footprint, improve their social behavior, improve their community behavior, and get onto the higher standards of governance, which means that on an overall basis, there would be a sustainable business for the companies in a longer period of time. So Dheeraj, what could be other checks and balances apart from ESG, which we talked about, if a person wants to make an investment decision?
Another important question, I think whenever you're looking forward to invest in any company, you have to have certain criteria in place before you select that company. And first and foremost is looking at the background of the promoters, competence of the management team. I think this is the first filter. Second filter is to look at the corporate governance, then look at the sector or the industry they are in, whether they have, what kind of market share these companies are having, are they up for disruption or not. They are in particular sector which can be easily disrupted, where the substitutions are easily available or not. Do they have a monopoly business? Do they have are they in an oligopoly kind of an environment, like in telecom? We have only 2 or 3 players right now. So that sector has gone through this consolidation. So sector specific questions, and then it boils down to looking at the company specific criteria, which means the financial ratios of the company, and I won't elaborate on that. You would know what financial ratios to look at. And other than the financial ratios, you need to look at whether they are gaining market share or not. And the last but not the least, the valuations. Company might be very interesting, they may be in very interesting space, maybe growing, gaining market share, but their valuation is going to the roof. Then at that juncture, it doesn't make sense to invest in that company. Though you are finding this narrative from my side bit longish and or a checklist which is difficult to follow, but when you start looking at all these data, it is very easy today. You can actually go to click any mobile application of various stock brokers and you get all these information handy. Just spending 10-15 minutes, you can compare them with the various other, within the same industry as well as in the all other parameters that I have mentioned. So currently, with the advent of technology, with the plethora of information that is available investment is an easy task, provided you are willing to spend some time on the same.
So talking about valuations, and again, it is an art, not an science. Valuations happen based on financial business modeling, but getting into the world of ESG, we have also tried to see that one can have sustainable earnings over a period of time. It's still a developing model. One cannot get into specifics of the risks involved within ESG, but at the same time, with appropriate risk mitigation strategies and appropriate expenditures towards having a framework around ESG, it is probably possible to build up a probability of having a sustainable earnings in that sense. When we talk about ESG, we have got into some sort of value enhancing strategies for the companies, and it all depends on how deep one gets into the strategy, but at the same time, it is quite possible that the earnings of the company could be improved maybe around 5 to 7% if a company walks on the path of risk mitigation on ESG. Various factors which are involved in ESG, whether it's on the cost side or on the revenue side, there could be opportunities on the revenue side to get new market, get into new customer base. Like, one example Dheeraj gave is his daughter, right? So he, the next generation would want to buy products which are more beneficial to the environment. So you create new opportunities on the revenue side and try to reduce your expenses, the major expenses being around energy, around salaries and workman expenditure, how to improve efficiencies of the people around you in the company. And all these factors clubbed together, it is possible to get into sort of an accretive, profit accretive business modeling, and it would enhance valuations around ESG. So that's sort of new theme which is now getting into the behavior of the companies to improve and get efficiencies in the business modeling. Again, on innovative things which is happening, and I was talking with one of my clients that within every sale of a product, right, the company is committed to grow a tree, say for example, right? And that growth of the tree is visible on your mobile phone. Now such innovative things, it would, this new, strategies to acquire market, new strategies to acquire customers is now getting into place to enhance revenue at the same time and also be compliant with ESG factors. So apart from financial factors, these non-financial factors are getting into the business models and in discussions in the boardrooms, how to acquire customers, improve revenues, reduce costs and increase profitabilities. So all these factors gets into a valuation, risk mitigation, and probably reduces the volatility in the stock price of the companies. So this is about valuation and ESG theory. Maybe next one, and probably we're left with 5 minutes. Dheeraj, I want to speak about fundraising opportunities. What is that investors look at while investing, and from the company standpoint, when and how a company would go out and do the fundraising and opportunities available at this point in time?
So last few years have been really very good year for the various corporates and even government entities to raise funds through capital markets. The SEBI chief mentioned day before yesterday that capital markets are here for capital formation. So I completely endorse her views. And I can give you some data points in financial year 2020 through IPOs and right issues. The companies could able to raise 75,000 crore. That number went on to almost 1,10,000 crore in FY21, and then FY22, 1,40,000 crore. Of course, there was an LIC element in the same because there was a large issue by the government end of fiscal 2022. But even in this year, when we have been witnessing a lot more volatility, a lot more correction at the global level, not so much in India. We have almost decoupled ourselves from the world correction. We've seen good amount of the traction even in the IPO and right issue this year also, almost, if my memory supports me, 38,000 crore kind of amount that has been already garnered by these companies. So my only advice to all the investors is that do not invest in all IPOs. Do not believe that the primary, when you are investing in an IPO, you will make money only. So again, here also due diligence is very important. Understanding the business.
In Indian markets are also like throbbing with lots of fundraising. From ESG standpoint, I mean, all of you must have read, by 2025, maybe around more than 50 trillion or dollars of funds would probably get channelized in the sustainable business investing. So there is huge flow of funds which is getting into sustainable businesses. There are innovative fundraising opportunities, and earlier I think Dheeraj mentioned about cost of capital. There are lenders who are ready to invest, in companies which are improving their footprint in environment or on social side. So various themes available in terms of decarbonization, women entrepreneurs, affordable housing. If the company is getting into such businesses and creating impact in society, the cost of funds is getting reduced. So that sort of sustainability linked bonds are available in marketplace, and it has been increasing day by day. So from an ESG standpoint, I think there is an opportunity available for companies to reduce their cost of capital, and it also increases overall valuations for the company. So I would say in terms of closing statement that while ESG is not new, but it is sort of new normal for companies, SEBI has come out with mandatory requirement for companies to give reporting on business responsibility and sustainable reporting for top 1,000 companies from FY23 onwards. It also is that reporting will also be helpful for companies to analyze, each of the companies in terms of their journey towards ESG. Although it is still at a nascent stage, but I would say as India, as SEBI, we have started the journey towards sustainable investing and getting into sustainable businesses. So with that, maybe Dheeraj, do you have any closing remarks?
I think I know that we have already exceeded the time. So my only advice is that if you are really looking forward to beat the inflation, equity is one of the credible alternative for long-term investment. Please do invest in equities with the objective of beating the inflation, beating the benchmarks, and keep investment horizon at least 3 to 5 years and not less than that. Thank you.
Thank you.
Any other questions from the audience? Yeah, okay.
Sir, hello. Sir, if you can guide on ESG criteria for the companies, which are the companies they should go for ESG criteria? Either they are unlisted or listed entities. And if a particular company wants to get the ESG criteria done, whom should they approach to? Which are the agencies, institutions they do ESG criteria for the companies?
Yeah, so I think it's a good question. Every company, whether listed or unlisted, if they walk on the path of sustainable behavior, it ultimately enhances value and gives a sustainable outcome in that sense. It has always been there in Europe, right? And once we realize that we are getting into sort of scarcity of resources, right? It is now becoming more prevalent in countries like India, which are like sort of polluting, and we realize that we also have taken goals of net zero by 2070, etc. So I would say that it's not distinguished. It's a journey. You will not be able to improve on every criteria overnight. So it's a journey of 5 to 10 years. You get into sort of specific aspects, get into sort of a diagnostic and determine which areas you want to improve. It could be related to air pollution, it could be related to waste management, it could be related to employee behavior, depending on the business. If you are into manufacturing, you need to address one set of KPIs. If you are into IT sector or a service business, you need to address another set of KPIs, right? So probably your diagnostic will help determine your stakeholders, who all are impacted by your businesses, and get into sort of an ESG journey, which will, probably give you a sustainable outcome. On advisors, I mean, there are select advisors. Obviously, we also are into that business.
Great, sir.
But, obviously, you will Google it and you will find it.
I mean, are there rating agencies also that do ESG ratings?
Yeah, so ESG rating is one thing which we didn't speak in the discussions, but just like you have ratings for your financial health, there are ESG ratings which are, some of the agencies which have got into ratings is Sustainalytics, you have MSCI rating, you have Dow Jones Sustainability Index, they are into ratings. CRISIL has got into ratings recently. So these are some of the agencies which give you ESG ratings. Some of them are voluntary, some of them are involuntary, right? And hence disclosures are very important because they would probably pick up few data points from publicly available information from annual reports, etc. And then they give you rating.
Right.
So, so rating is on ESG. MSCI has started getting into giving you climate risk ratings also. So these rating agencies are now,
Understood.
catching up in terms of giving you ESG ratings.
So lastly, just wanted to know, can I also approach Big Fours, KPMG, PwC?
Yeah, so all Big Fours are into this practice.
Great, sir. Great.
Yeah,
Okay.
thank you.
Thank you, sir. Thank you.
So any other questions? Any other questions from anyone? So from the, if there is a few minutes left and with the permission of the speakers from the next session, from the organizations, can we ask something to the speaker on the dais? If you all agree. Sir, from Bengal Chamber of Commerce, we just wanted to clarify on something. We just wanted to ask something to explain that we have heard about this sustainability factors from ages. When we have heard a book.
Sorry, your voice is not clear. Can't hear you.
We have heard about these sustainability factors on concerning about which stock to invest, which and particularly about the sustainability factors from long time ago. And I have read a book called even before the concept came up, ESG standards and other things have came up. There is a book called, will you call it a progress if a cannibal using a fork? So from those days when, will you really call it a progress when cannibal uses a fork, to COP26, COP28 and so on. My basic question is, in one way we are struggling for shortage of coal. On another hand, we are speaking about, reducing carbon footprint and all. So what exactly with all those accounting standards, with all those measures, with this huge shortage of coal, what exactly we are heading to as a nation?
See, it's a complicated question. Economy and ecology, right? I mean, we all talk about balancing act, and one needs to have a balancing act between economic development and preserving ecology, right? So I guess various countries have got into research on this in terms of what could be the sources of power or sustainable power, right? We have thermal-based power. Some European countries have gone into nuclear power, right? But I think there is no answer as of now in terms of what is going to be sustainable for very long period of time or forever, right? Because if you get into one sort of source of power, it's going to have an impact. whether it's coal or solar or it's nuclear, etc. So your question is good, but probably as of now there is no answer that what is going to be a sustainable energy for forever.
That Thank you. Since there is a short of time, we are immediately starting the next session. I would request Mr. Amit Roy, Managing Director, Insurance and Allied Business, PwC, to kindly come up to the stage, sir. I would request Mr. Anand Pejwa, Deputy MD, SBI General Insurance Company Limited, to kindly come up to the stage, sir. I would request Mr. Ankit Agarwal, Founder and CEO, Insurance Deco, to kindly come up to the stage, sir. I would request Mr. Hiten Kothari, Appointed Actuary, HDFC Ergo General Insurance Company Limited, to kindly come up to the stage, sir. I would request Mr. Sanjay Datta, Chief Underwriting, Reinsurance and Claims, Actuarial, ICICI Lombard General Insurance Company Limited, to kindly come up to the stage, sir. Mr. Sunil Sharma, Chief Actuary and Chief Risk Officer, Kotak Life Insurance Company Limited, is on his way and would be joining shortly. With this, I would hand it over to Mr. Amit Roy to take the session forward. I would request my colleague to kindly usher all the people who are outside. Over to Mr. Roy.
Thanks, Arnab. Thanks a lot. Good evening, ladies and gentlemen. And I am actually delighted to welcome my esteemed panelists in today's discussion. And we are actually starting this as the penultimate discussion for the day. The entire days of financial conclave have been really, really fruitful, very engaging conversations. I witnessed a few. And I'm sure that next about an hour or so, you'll hear some very interesting things in the backdrop of reforms. And the topic that we have is, I'm sure all of you would have seen that, insurance reforms nowadays, though I belong actually to insurance industry, looks pretty different to me also. 2.5 decades in insurance prior to coming to the consulting world. And I would normally see that probably during the year, a few 10 odd regulation changes and, really massive changes once in a decade kind of a thing. But I think very recently, last about 6 to 8 months, welcome Sunil. Last about 6 to 8 months, the kind of developments which have been seen in the industry is really, really encouraging. I'm sure you will hear a lot, and I think Arnav has already introduced the panel to all of you. But let me tell you that within these 5 people that we have, we are going to see a lot of very encouraging things, not just for the industry, not just for knowledgeable people, not just for knowledge of the book, but something which will appeal to the customer, something which will appeal to the people who are aspiring to find out a livelihood. India is actually in a very interesting state of situation now. For the first time, the country is looking absolutely resilient. And why I say that is also because of the pandemic results that we have seen. We have seen what kind of inflation outrage is there elsewhere. But when I look back to our country, I definitely swell with pride that Indians have proven that in spite of all odds, they can actually, hold it right and tight up there. And in that backdrop, what is happening is a very good connected story. For the first time, possibly 99% of the country is connected with internet. The digital economy has evolved like anything. I must say digital insurance also is evolving like anything. And with the backdrop of reforms, now we are saying that we are in for dramatic rise of penetration of insurance, which is a very big thing. And for a country like India, which is large, which has got large population, the emerging risks that we see, the NatCats that we have seen in recent years, is something which needs to be covered for sure. And in that backdrop, let me give the airtime to my panelists, and let me start with an interaction with no other person to talk better about this than Sanjay. Sanjay, I would like to know, in this flurry of reforms, everybody is talking about affordability, everybody is talking about penetration, everyone's talking about a lot of green stories. Now, any risk area where you see that from the industry point of view that makes you worried? Let's start with something which is gray and then we go to the green, maybe.
Yeah, it's a big risk by itself, and which caught the industry unaware, especially on the health insurance side, and we just were absolutely, caught without any protection, to speak, as an industry. And with that, still we went ahead and, kind of footed the bill. But that's a different story. The story I'm, worried about is the opportunities which are arising out of that. Opportunities, the fact that so many businesses shut down together, correct? And there was so much of loss, starting with simple things like loss of jobs, correct? Now, if you look at India, there's so many things which are not covered, protected in India. And these things which people don't usually see, people see sickness, death, flood, devastation, and hopefully not an earthquake devastation. But cyclone has started coming in, climate change is coming in. But you look at the economic side of the risk, a lot of the economic risks are not covered in India. And I'm talking on the risk side, not just pure economic risk, which bankers and others cover. And that's where, do we have a loss of job cover in India? Advanced markets have that. Do we have, business protection, business interruption covers for small SMEs which are shut down because of this pandemic or a flood event or any other event? And just to look at the enormity of the problem, and if you go to the, IIDA has put up a site, put a committee to look at it, and for a simple business payout to SMEs of 10 days, 5 days, a very simple amount, 25,000 or something, would need capital of 75,000 crores. Now look at, that there is an opportunity, but the amount of, capital required, amount of will required to look at these extreme and difficult risks which are coming out of this particular pandemic is the thing. Forget the economic damage versus the actual insured damages in everything. A lot of people are not even insured for their deaths, underinsured for their deaths in the life side. Health, similar story. Look at flood, earthquake. You have a Bangalore flood. 90% of that is not covered because people don't take home insurance and people don't take things. So the opportunity arising out of these risks are immense, and if we do not find a way to, baby steps in covering these risks which are coming out, then we are back to the traditional way of selling, which is mandatory or trying with the other means. Yeah. So these are pure risk opportunities, and we should look at, saying that, how do we tackle these big issues?
Thanks for citing that, and that brings me to the question now to Anand. Anand, the entire country is looking at reforms, and the entire country is looking at a growth of penetration, the growth of, also livelihood for people. Because once the number of insurance companies go up, once the penetration go up, it's better business for everyone else, and looking at industry to create a lot of jobs. So what are those growth areas that you are looking at? And how will it grow? I mean, what's the realistic assessment on that?
Thanks, Amit. Obviously, whatever I will say is my personal views. So that's a disclaimer right in the beginning.
That's a disclaimer, right?
See, in India, traditionally, we have been going by the normal, traditional method of distribution, which is face-to-face. Okay, we may talk about everything. We may talk about, you mentioned about internet, getting into it, and people buying policies from the internet and all that stuff. But if you look at the percentage of penetration through those mediums, it's very, very small as of today.
Yeah.
Okay. Most of the companies, when you started way back in, say, 1999, 2000, 2001, concentrated more on metros, urban, those kind of cities which are there. Slowly, they started moving to the second level. Now, I think the time has come, if you want to really see the kind of growth which the regulator is expecting us to give them. Yeah. Okay, we need to go into the rural markets.
Absolutely.
Now, rural market distribution has got its own issues, own risks. Okay. For example, rural marketing. How many of the MBAs would like to go and do marketing in the rural areas?
Yep.
Okay, so manpower is a big question. Qualified manpower is a big question. The amount of investments the company will have to make to get into the rural areas. Bigger issue is dissemination of the information of insurance and why does people need insurance?
Correct.
Even today you go to a village and check with a shop owner, do you have insurance for your shop? He doesn't know. He says, no, I don't have it. Why do I need it? For last so many years, that have we understood it? Have people in that area gone and bought policies? No. They would have increased by a small portion, but has that gap reduced? Look at the protection gap on life side.
Right.
And I think Sunil will be a much better person
I'm
to
going
reply
to ask
on
Sunil
that.
about that.
But that itself is a huge gap. Huge gap. Now, we have been talking of life insurance in so many years. Now, if people in the metros and urbans don't understand the importance of protection gap, do you expect the rural guy to understand importance of this? Definitely no. There, the first question they ask is, अगर मैं जिंदा रहूँगा तो वापस कितना मिलेगा? Right? So one is the micro insurance part. If you can increase the micro insurance, the rural insurance, but both of these will need separate kind of products, separate kind of a vehicle to deliver it. So distribution model has to be completely different. It's not the one which we are now talking about that is going to happen.
Yeah.
And within the contours of the regulation, how do you ensure these things happen and the right product is delivered to the right customer?
Also the margin part of it. Yeah.
And how do you implement it? That's important.
Yeah.
Cattle insurance, for example, now coming from from life to general, cattle insurance. Now, how many of those cattle which really die are the ones which are insured?
True.
So we have seen so many things happening in this industry, the way it is done. So new technologies available, new distribution system available, implementation and the right implementation, getting the right output of that, I think is very important to increase the penetration level.
That's a great vivid answer, I must say. Anand, thanks for that and very candid indeed. And that brings me to Ankit. You know, in this talk of very exciting times of data, connectivity, new age products, also control on commissions and everything. Digital is something like the most buzzword, right? At the same time, the realistic part is that digital volume is not picking up. That's the reality, right? And digital is not a cheap channel for sure. So, of course, to make the country go from a, single-digit penetration to anything around double-digit, we need massive digital growth. So, what are your plans on that? Very keen to know that.
Firstly, thank you so much for inviting me in this August company where I'm the only one not wearing a jacket and I'm the only one not wearing a suit. That itself explains how expensive digital is.
Yeah.
Right? But at, again, the cost of being controversial, trust me, digital is not expensive. I've been an investment banker. I've looked at this side of the P&L and I'm now looking at this side of the P&L. The cost of breaking even for a digital branch is way lower than the cost of breaking even for a full-fledged physical branch. A lot of insurance companies, including SBI General Insurance, have been path breakers in moving completely digital. We have to understand digital cannot be the answer for all our problems. You will have to ask, what are the areas which can effectively be solved by digital? Absolutely. The Honorable Chairman has laid a lot of stress in 3 areas. All the reforms, and I'm thankful to him that insurance is finally getting its due share of limelight in Indian economy, which it was not getting for the last 2 decades. Now, whenever we open CNBC, every week you will see a new guideline or a new reform being pushed by the regulator. So we are finally in everybody's eyes. But that said, there are 3 main areas on which the Honorable Chairman is focusing on. One is how does he increase insurance penetration in rural areas, right? Or in areas where people may not want to go. That is the same thing which RBI tried to do in early 90s or late 90s through PSU banks, right? Second, they are saying that we have to improve penetration of health insurance. Health insurance should be made the 4th pillar for any individual in the country. It should become roti, kapda, makan and health insurance. For that, He's solving affordability, which can only be solved through digital. Lastly is claims. And here is my point, that you have to decide where digital can be best used. It can be best used for increasing distribution. It can be best used for solving the problem of affordability.
Releasing some regulation. So somebody not connected with insurance, one of my colleague from the tax practice, he said, Amit, tomorrow is Friday, can we expect a regulation? So I said, good. I mean, if insurance is getting talked so much and if it is making so much of wave, it's a good situation. But Sunil, the question to you is that, in a way on non-life side, we had use and file, in a way, right? But life always demanded that, right? How bullish you are on this use and file, and how do you see that this experiment will actually drive the growth? So product becoming ahead of distribution, is that something that we are going to see?
Yeah, no, that's very interesting question. And I think the regulator actually has started this journey some time back. They had some use and file guidelines, but there was more of an experimentation. But I think GI side has always been use and file. Most of it has been use and file. And typically for a life insurance product, I think, from design to the approval from IRDA used to take a good chunk of time. The product regulations actually were there in place.
Correct.
And most of the products, products are obviously in compliance with the regulations. So I think the regulator perhaps thought that, well, if all the products are in line with the regulations, why not to actually just do the use and file, which will really help in terms of reducing the turnaround time. So I think the changes that I'm anticipating now with this use and file is that for those lines of business for which use and file is allowed, there is going to be a lot of reintroduction of products. And some products, like say for example, the regulator is allowing term assurance business to be repriced as frequently as you want to do, which would mean it's in the interest of the customers, the faster. So eventual beneficiary of all of this is going to be the customer. They'll get the most competitive products.
Right.
Say for example, the annuity products, which is very, very interest sensitive product.
Yeah.
So nowadays you will see that, some insurance company may actually set up the process in a way they could change the annuity rates weekly.
Yeah.
Or more frequently than weekly also. I worked in US and they change the annuity rates daily. So, and the technology these days can enable doing that. If there's a yield curve change and you see the interest rates are changing, you can just basically make sure that you change the annuity rates every day or whatever frequency. That'll happen. The other thing that I'm seeing is on the non-participating guaranteed products, because there's a guarantee embedded into the product and the insurance company has to hedge all the expected future cash flows from that. Any small change in the interest rate will lead to the worse or the better, or the better than the anticipated outcome. So this will really enable insurance companies to quickly change the premium rates, launch the products faster into the market. So I think the companies would like to really be more leaner, more agile, to be successful in changing their products. And because system setting also takes a lot of time. Mm-hmm. So the companies would like to make sure that all their processes are faster, from design to the launch of the products is much, much faster. So I think it's a very, very positive, which will really help in terms of reducing the turnaround time from design to market the product.
Interesting. I mean, I see so much of confidence on the side of the industry. It's amazing. I always thought that coming up with the variety of product which make the thing very, very complex for distribution, for the people who are managing operations and all of that. But what I see in the industry is something very encouraging. And Hiten, coming to you with that backdrop, with the way the reforms are getting driven, and clearly the call of the hour is enhance transparency, okay, make it affordable for people, and disclose commissions, yeah. So what's happening to the economics of, insurance calculation? How would you manage the margin? If you are making so much of transparency, if you are getting the product affordable as it is in India, I thought the premium rates are one of the cheapest in the world. Talk about health insurance, right? So how do you drive profitability in the backdrop of all that?
See, has grown.
So I think the reforms, when looked at the right perspective, there's always a silver lining in those reforms. We pick up those silver linings and build upon it and then challenge ourselves as to how to optimize ourselves. I think the margins will come out. The distribution and the penetration that can increase because of more affordability and the transparency. Today, when customers have to buy it, they're not certain that insurance companies will pay the claim. If we can bring in the transparency, we can bring in the trust, that extra mileage that can be shown, that would mean that more and more people will be ready to come in. We will be able to drive more economy of scale, and that's what it is. Nothing will happen in the short term, but I think in the long run, this is what will drive and enable the companies to make profits at the end of the day. So I think the profitability is going to be the key. Insurance companies generally are capital draining companies, and hence return of equity and other metrics will continue. So I don't think companies can still burn cash unlimited. That's not possible.
Interesting. And just to extend these questions, Sanjay, I'll come to you. So much of exuberance on the industry. What about reinsurers? What are they saying about the country, about the margins, about the rate, disclosures of commission, NatCat? What's the story out there? I hardly see any article on reinsurance these days. Am I seeing the wrong newspapers? I don't know that. But so much of the things is getting about everyone, but not about reinsurer. I don't see a single interview of any reinsurance company, right? How are they feeling?
So that's a great question, because, the focus is on regulations and stuff, let's say use and file, all of these stuff, which affects the primary companies, the ones who are distributing and all of that. I think that's the right thing to do, because as of now, like I said, capital has been there, and, especially contingent capital from the reinsurers, they're willing to come in. Of course, they have their own conditions of, the risk being good, the, price being good, and all of that. But, I think COVID has changed some of the, basic issues. So, first, even, let's say, they have become reticent after COVID came in. So they have put in clauses, conditions, which basically makes it watertight. That they're learning from the other markets where COVID had impact, even on the corporate book and all of that. They have started putting in conditions and which are very clear that they will not have anything to do with either a pandemic or a communicable disease. Correct. That's the first big change in things coming through. And so especially in products apart from health and life, which anyway has its own dynamics. Health, if I go for love or money, I will not get any reinsurance.
Correct.
On pandemic.
Yeah.
Correct. That's absolutely closed for the time being. Correct. So I'm sure life insurance is also going through its own challenges in reinsurance. We hear there are a lot of stuff around that, but still it's going through its own phase. But here it's not available in health insurance. You can't get it. Then let's say the other areas which I did talk about, the areas which are rising out of risk, and the economy changing, things like, he's aware of that, the government has been pushing all the general insurance companies to get into sureties, for example.
Yeah.
Absolutely, we are just, wary of that because of reinsurance capital not coming in.
Yeah.
So there are a lot of places where insurers come and play positive stuff where we are not have the coverage or the kind of things, which is available, like loss of job, for example. There's no coverage available. So I think reinsurers can play a big part. It's not only about capital coming into the, the distributions or / the primary companies. It's also important that capital comes in at our backs. Because otherwise, then we'll be constrained. All of that product, and all that, I want to give some of the other products. I don't have capital behind me.
Yeah.
So correct, I can put my own capital. That helps in terms of other areas. But I'm still scared. How am I writing thing with a large pandemic event hits me on a health insurance book?
Absolutely.
And we're talking about penetration. We want it to be a sustainable, affordable business.
Yeah.
But I don't have reinsurance cover. The whole beauty of reinsurance, in the insurance world is I put it across the world. Here we are building, sometimes, systemic risk will develop if I just keep it inside India. So these are my,
anyway, you think something like an exchange that we see, let's say, in London?
Yeah, so
right?
one of the reaction to that has been things like uncertainty and volatility on the reinsurance front has been to go for pool things.
Yeah.
So those who are not, especially on the general insurance side, all of us have started putting in capital as primary companies to build pools in the, Indian pools, Indian specific pools. That's one thing. There is a lot of talk around that. I did talk about the pandemic pool, but that's too big. It requires government support. But internally we have put in. So all of the pools have come out of reaction of the reinsurance not being available, starting with terrorism pool in India, nuclear pool in India. The latest one is the marine cargo pool coming out of the war because nothing was coming into India. So I think we'll also have to sometimes not depend only on reinsurance coverage across the world. We develop our own.
One has to be a little guarded also.
But the market, especially the primary companies, also start finding ways to be able to share risks amongst ourselves through pools or other mechanisms.
Whether you like it or not, okay, sorry Amit, but as of date, the biggest loser is an insurer, the manufacturer. I'll call him the manufacturer.
Okay.
The biggest gainer is the distributor. And who
Not
pays
the
for it?
customer.
No, who pays for it is the customer pays for it. Okay, so that's in short the question. Okay, a good question what you asked me. See, you may have 58 companies, you may have 100 companies, you may have 200 companies. What will happen? Will that increase penetration? Yes, it will increase penetration to a certain extent because everybody will try to get into some niche markets which they feel they can enter.
Yeah.
Like for example, if few more banks come up with their own companies, it will be another few more bank assurance companies coming up. Okay. Somebody like Amit comes up with some more digital, they will try to see where they can penetrate where digital is not there today and try to come out with the products. But the question is, are we in a position to provide those kind of specific products at the specific price or affordable price and still make money for the company? Now you ask me whether you should look at valuation or you should look at, I'm very clear. If you are a person who is looking only at valuation, you will look at top line. You will not look at bottom line. Because you want to list your company in 5 years and get out of it. A long, like sustainability we talk of. If insurance is a long-term business, what we were told in life when I was in life, then I would look at valuation. I would look at how I build my embedded value, what kind of products I sell, which are the products which give me much better contribution to the EV, and then try to push those products in that particular manner. On the other side, if I have to, for example, say if I have to push my retail, rural retail in a big way, can I come out with sachet products? You know, when we were small, all of us saw those huge glass bottles containing shampoo.
Yeah.
Then it went to plastic. Then it went to small 1 liter, half a liter, 250 ml, 100 ml. Now you have sachets.
Right.
Insurance is getting converted the same way. Life insurance earlier we thought was a long-term product. And Sunil, excuse me if I'm making any mistakes on life. Today you can have life insurance for 28 days. It was unheard of some say 5 years back. Now, similarly on the general side, on the health side, what rightly Sanjay mentioned, can you come up with products, say I'll just give you a vague example, a dengue cover product for a short period. But the question is, will you have the necessary kind of population to buy that product at that particular price? Because if the mass consumption does not happen, it's a huge risk to the company.
Yeah.
Okay? I'll give you a small, simple example which I think all of us should know. How many of us have cyber cover for our own selves, individuals?
Correct.
Now you said that the 4G, 5G has been growing, number of users have been growing. The number of users have been growing, the number of hackers have been growing. The number of hacking that is happening on a daily basis has been going.
Yeah.
Companies have come out with cyber products, but it's so difficult to convince a guy that he should buy that product, even if it is worth 200 rupees. So whatever we do on whichever side, no doubt, coming back to your question, the biggest gainer, intermediary, the biggest loser, the manufacturer, the customer pays for it. We have to come out with new things. New companies coming, they will come with their own strength. That strength will be used initially for a small period and somebody will replicate it. And now with use and file, cut, copy, paste will become more predominant. Okay, so faster products will be rolled out, faster things will happen, processes are there, every company is moving to digitization, so digital things will go up. So delivery of the products will be faster. Claim settlement, obviously because it will also get digitized, will also become faster.
Right.
But the question is, 200 companies, I don't know. 100 companies in the next 5 years, I don't see them.
Yeah.
Every company when they came to India in 2000 saw a huge population which was the raw material for this insurance business.
Yeah.
How many of them could actually go and get that thing out of, convert that into business? and convert that into meaningful business where at least at the end of 8 years, 10 years, you could start showing profits in this business.
Interesting.
The more the industry, my own assessment, every month as commission, you need to source 1 lakh people to go through that entire rigmarole. URN karo, IRN karo, training karao, usko examination karao, pass karao.
I'll ask that profitable agent story to Sunil.
See, but then that is the cost which the company has to bear, no?
Very interesting.
Outsource it to him and then he'll ask money for it.
I really can't believe this, that, how the things are getting interpreted in the market. And I agree with you, Anand, that someday I was talking to one of the friends who happens to be from Insurance Institute of India. And he said number of examinees, who appear for their licensing test is something like nearing some 16, 17 crores or something like that. I said, then you guys must be very rich here. I mean, the first thing that it brought to my mind is that maybe another 10 insurance institutes of India and then privatize it, It will be a good monetization thing. But I kind of agree to that on agency sustainability. But Ankit, coming to you, in terms of profitable customer story, that means younger age and all of that. So do you see netizens, getting into health insurance in 30s, in life insurance in 25? What set of customers you see in your digital world? And do you see a change, most importantly, in terms of their wallet share, profitability? Anand mentioned about, agency coming in, going out. Ultimately, a very loss-making proposition for, any insurer, right? So what's the story out there?
Sure. So first, Anand, I have a lot lesser white hair than a lot of you here. So forgive my ignorance for this, but...
nowadays we dye white, so it's actually black.
Hey Sanjay. So I remember one conversation I had with Sanjay about 2 weeks ago. We bumped into each other in Delhi. And we were actually having the same conversation. Something which Sanjay said stayed with me: the grass is always greener on the other side. I wish distribution as a business was as profitable as we all make it out to be, right? Distribution layered with technology, and tech is not cheap. Technology is cheap. They're two different things, right? Is not at all profitable. Yeah, but it is a very, very important route, or it is a very, very important medium to penetrate deeper in the country, if played and used effectively. We've seen the power of distribution in banking, right? What banking correspondents have actually done to take banking to the deepest corners of the country. We all have to come together as an industry and understand how we can penetrate and solve for problems of distribution. As Sir just said, right, every company which came into the country in 2000, right, saw that 100 करोड़ की आबादी है, बहुत सारे लोग इंश्योरेंस खरीदेंगे, बट किसी ने ये नहीं समझने की कोशिश की कि हमारा भारत 3 पार्ट्स में बटा हुआ है. एक नीचे का 50 करोड़ जिसके लिए भारत सरकार या राज्य सरकार सारी फैसिलिटीज़ देती है. दूसरा ऊपर का 5 या 7 करोड़ जिसके पास एजेंट है या खुद एजेंट बन चुका है, राइट? जो मिडिल लेयर होता है ना, मिडिल क्लास, उसके लिए हम में से कितने लोगों ने सॉल्व किया है? If we actually solve for that is when we will be able to penetrate distribution or penetrate for insurance. Exactly what we were discussing the other day, Sanjay. Coming to your last question, first question which I'm answering in the reverse order. Have I seen increase in youngsters searching for health insurance? Yes. Have I seen an increase in youngsters buying health insurance? It has started coming down. The world after COVID will be looked with two lenses. It is going to be BC, that is before COVID, and AC, that is after COVID, right? So before COVID, if there were if one person was searching, after COVID, the number of searches have gone up by 5. If before COVID, out of that 1%, was anybody buying health insurance? If he was at the age of 30, nahi. Sabko lagta tha hum amar hai. But after COVID, वो अमर का फैक्ट जो था वो लोगों के मन से निकल गया. अब सबको मालूम है हम अमर नहीं है. सो उन 5 लोगों में से शायद 2 लोग अब खरीद रहे. बट वॉट वी आर नॉट सॉल्विंग फॉर एज ए इंडस्ट्री, वाई पेनिट्रेशन इज नॉट गोइंग अप, is because nobody is focused on solving in GI industry the problem of affordability. Life insurance ka sales month on month, quarters.
You know, the, let's not say customers, unprofitable risk coverage, right? So, and now the growth story, and now like Anand mentioned about sachet product and all of that. We also know that the good story for the industry, at least on the life side, very encouraging story, is the quality of business has increased, complaints have gone down, persistency has increased for everyone, 5th year persistency is a good story. So matching all the mathematics, and now that you have a target, you know, 5 years target of growth, okay, how are you managing capital for that? Because you will have to make a profitable agent, profitable distribution, digital connected story, new use and file story, and ultimately making profit for the shareholders, right? So how are you planning to match the equation on all of that?
Yeah. No, I think that's an interesting perspective. So the life insurance business compared with the short-term GI business, the 3 things which are extremely critical that you to keep in mind. I think one is, you know, your excellence. All your operations, all your distributions has to be excellent in terms of the efficiency. To make sure that your acquisition cost gets minimized. Because, you know, if you look at you're selling a contract for next 20 years, 30 years, 40 years, and you're spending 100% of the first year premiums into acquisition costs, you're left with nothing after that. And therefore, the first thing is your excellence. You know, your acquisition cost has to be minimized. Your processing cost will have to be minimized. It's unlike other contract wherein, you know, say for example, Amazon is selling something, is, you know, the transactions gets done at there itself. It's a life insurance wherein you have to look at a lot of other risks in terms of the anti-selection, the health-related complications, etc. You do not want actually that your portfolio get impacted by the adverse selection by fraudsters, or, you know, you're one of your distributions sitting outside the cancer hospital and insuring all the patients. So excellence is extremely important. The other is relevance. I think if you are not there in terms of the growth, you can't really, the third thing is sustainable. You can't be sustainable. Yeah. And that is what the challenge is actually. If you look at you know, the whole insurance industry, you can clearly see the patterns coming in. The companies actually who are better on excellence, they becoming relevant, are becoming more and more sustainable. And you will see some companies actually failing, and unfortunately, if they don't follow this excellence, they will not be relevant and will not be sustainable, because end of the day, you know, you got the large in-force block of business, you need to bring in that efficiency to even serve them in future.
True.
Therefore, these things are very, very critical in the insurance business. And, you know, I think some of the aggressiveness in terms of the pricing could be a temporary phenomenon. If somebody really want to say, well, I want to be the most aggressive out there in the insurance, will be, you know, you can't have, you know, like strategy of acquiring customers like your, you know, your car companies, you know, all this Ola, Uber strategy will not work in life insurance, because it's a very, very capital intensive business.
True.
And therefore, you have to look at, you know, for the next 25, 30, 40 years. You know, if I'm selling a whole life policy, I would have to look at least for the next 20 years. I can't look at today. And even the CEOs should have that sort of mindset. Unfortunately, some may not have, but I think that's what is what is needed in the life insurance business. And your question is actually how do we, you know, kind of navigate through this and grow the business. See, I think you have to really have products in line with the target customers. And, you know, you have to use a relevant distribution channel to target those customers, to make sure that your distribution is the most efficient distribution. So I think I would say a lot of discussion was happening on the digital. So life insurance is a complex product, you know. Some of our guys who work in life insurance, they on themselves, you know, may not understand the what's happening in the background. You know, it's like an iPhone, you know, and what's happening in the front, but what's happening in the background is only known to actuaries. But what I'm saying is, the simple product has to be digitized. Which means actually you'll be able to minimize the whole distribution cost, connect the customers, because it's easy for the customer to understand those products. You can digitize them. But the complex products, which are difficult to, understand, like, critical illness products or some of the other products, or some of the savings products where there is some complexity in terms of the elements, will continue to be sold by the face-to-face channel. The digital really help enable them. I think what we're trying to do is, how could you empower your distributor when the distributor is sitting in front of the customer to really bring in the perspective as to why do they need that product, how that is meeting the need of those customers. So all these products are needed. When you design a product, you do so much of research, you look at which customers, what needs, etc. It goes through so much of scrutiny in the insurance company, in the regulator's office, and by the time it gets into the market, is the best product for the, but it's just about your distributor, right? Your distributor is not so educated. And therefore, you would like to empower these distributors by technology, by bringing in your tools, your apps, to see how could that product be presented to the customers so that the success rate of the agents goes up. It's the most difficult product to sell. And therefore, your insurance company, that's what we were trying to do. How could we make the life easy for your distributor to actually convert the proponent into a sale? And that will make sure that your distribution channel becomes more efficient, increase the sales, and then you actually are relevant and sustainable.
Great, great. A lot of good stories in terms of growth, changes, reforms, capital, and all of that. I come to disclosures now. With the ESG on background, right? We just talked about sustainability, disclosures, ESG reporting, and all of that. I think as it is in India, we had one of the best of the disclosures. If you see globally also, I think one area where we really did well is disclosures. So do you see that with this rush of growth and reforms and all of that, somewhere that's getting lessened in a way, or do you see any threat on, let's say, capital structuring, or is there anything that still industry has a wish list, particularly for the product where you see low ticket, like Ankit mentioned about the right pricing of premium. So what's your take on disclosures?
So Amit, you're right. India has one of the most transparent in that sense of it. The regulator has made a lot of efforts of having enough disclosures that people can actually look at the public disclosures and ascertain what is actually the company trying to do, how things are good from our customers, or what the customer it might not be so simplified in that sense, but the information is available. The analyst or there could be activists who can really look at the disclosure and provide relevant information. That is what the beauty about the regulations are today. We are quite more transparent. I think the regulator is also making more efforts, by at least in GI, when you look at the triangles are getting published, so that the financial stability of the insurance companies can be estimated by advisors or analysts as well. That will help them, give them credible ratings. At some point, the regulator also looked at classifying the products into simple or very easy. They try to want to color code it, especially the health products. The new disclosure also wants health products to be listed out. What is the performance? What are the GWP, loss ratios, everything. I mean, that sort of transparency the regulator is pushing insurance companies to have, which is good at the end of the day. I think that should, as I earlier said, that will improve the corporate governance for the companies. But at the same time, I think what we need to be mindful is the more disclosures also means that the companies will be a bit hesitant in terms of making the choices which are 50-50, in terms of when it comes to doing right thing in the customer. Things can go right and wrong. User file gives a very good opportunity, but if things really go wrong, would it mean that withdrawal of products, how things will happen, and that would also mean reputation risk for the companies.
Absolutely.
So I think it's a two-edged sword. Insurance companies are going to be mindful of these things, as to what they're disclosing and what they're required to disclose. But at the end of the day, in the era when everyone is looking at more and more data, having that information is good, but we need to have mechanism as to how things can be modulated in a particular manner so that not everything is available to everyone. There has to be some sort of sanity, some sort of clarity as to what.
Interested to invest in because I thought one of the large story that the regulator wanted to drive was also flow of capital to the country, right?
Correct.
So do you see enough, being done, or do you see that insurance companies are making money or would make money, or the newcomers some? What's your observation?
Yeah.
And I'm not talking about Lombard. Just
No,
to
absolutely.
say.
I agree. So, this is not about my company. So, so I think, it's a very important conversation when we are regulators talking about, by a certain year, every insurer, every person in India having a health insurance cover, the kind of projections he's giving on coverage, and that too on business as usual product. I'm not even talking about the other radical products which are available and which requires amazing amount of capital. So, but just one of the key things one learns over a period of time is capital is agnostic into any sector. It doesn't love the insurance sector, doesn't it? It will go by return on investment. ROE is the most important driver. And if you look at two important aspects and I keep watching that very strongly, is what is the ROE of reinsurers across the world, and what is happening in that world. And when ROE goes down, they find their capacity gets constrained. And they're not able to offer capacity to primary companies. They are linked. So ROE of the reinsurance companies is also linked to ROE of what's happening in India. Correct. And so these are linked things. Tomorrow I need more capital to write larger risks, more, the coverage becomes more and more, I need more capital. Just even on traditional products. Correct. I just increased the fire insurance thing, and he was talking about the Bangalore or Chennai floods. That requires capital. 20,000 crores of payment. Who will give 20,000 crores of payment in a Chennai floods? Correct. So, and their ROE on in the reinsurance world has been struggling. So that's why you will see a lot of hardening of rates in the reinsurance. Take simple businesses, across the reinsurance world, aviation, the exposure businesses, everything, even cyber for that matter. Somebody mentioned cyber. He's seeing, he's seeing huge rate increases simply because capital is not available. And there's tightening happening there. So that is something which will happen in India too. They are linked. One is I use contingent capital, which is again dependent on their own capital thing. And I use capital which is available here. Now, the one important part is, we've read the story that in the distribution world, capital was freed up. Foreign capital you could go up. But the amount which has come in after the freeing up has not been great. And why has that not been great? That's the big question to ask. They will look for returns, ultimately. And are we able to provide returns which are sustainable? Are we able to operate, as we were saying, in a manner where we are able to cooperate and be sustainable and compete?
Precisely.
At the same time, not allowing competition to drive down profitable to such an extent that ROE, we are not on the ROE. They are linked questions. And insurance, as everyone is, is a long thing. We are here giving, even if you look at general insurance, it's all about trust. I'm covering every factory here, and sometimes earthquake comes and I have to pay out that amount of money. My biggest thing is your insurance capital. So then, hence, we have to do it very sustainably. Whether it's pricing, products, the capital, the coverages, and the shareholder, capital we seek. We have to acknowledge that and be very, very conscious of the returns we give. Everyone has to get returns.
Absolutely.
One way or the other, either value or returns. Dono may say. So, and I'm very clear, insurance world requires that kind of thought process. It's just not mindless, not having 200 companies coming in doing mindless and then shutting down, going the reverse way.
Yeah, we have seen that also.
Yeah, so I'm okay for consolidation in the market where you're not able to get capital. Hence, a person, which happens, which is fine. Worldwide insurer may find its Indian arm not doing well and may sell it. That's fine. But
so interesting that everyone's talk about penetration globally. How do we compare with other markets, Sanjay? So, in terms of shareholders' profitability or ROE on the capital investment, so which are the global examples you think that we should keep in mind? Because everyone's talking about reforms to enhance penetration. Someone should also talk about shareholders' return, right?
Yeah, absolutely. So I mentioned the reinsurance world, that's a good proxy. Then we look at certain markets standalone on primary markets and all that. So, and the key markets to look at are penetrated market, because that's something which we are going to, we may have, things down. See, the penetrated market, once capital becomes surplus, then, capital flows back into under-penetrated markets. So a lot of the, if you would notice, a lot of the Japanese capital is now flowing out into US markets, of the insurers and all of that.
Yes.
Then it comes here into anything. So that flow is very important. Of trying to, so we need capital because we are just getting penetration through, actually. Absolutely. Some are over-penetrated. Japan is over-penetrated, and then the capital starts flowing out. They keep buying companies, which is a good thing. It's not a bad thing. So my guess is, in India, definitely, high teens is the expectation which is there. And the reinsurance world, in the global world, if you are falling behind 5 or 6, they can have his own view, Sunil can have his own view. I've seen them tightening very strongly and, going back into either tightening or selling their businesses because they're not able to operate at that level. So that's a very important marker of, sustainability in terms of products and stuff like, going capital availability, shareholders' interest.
Anand, one question I think I can only ask to you because on my right side, I have two very, very experienced qualified actuaries sitting, a very, very experienced underwriter sitting. Now everybody tells me that technology is solution to everything. 5 years down the line, you don't need actuaries. Okay, data analytics will solve everything. You don't need underwriters because risk modeling things will get rid of everything, right? So the talent story, Anand, so much of growth, so many companies coming up. Are we able to attract enough talents? And we spoke about agents, the 16, 17 crores of applications, but the reality is on the life side, I still see only 2.5 million. That's the, and I do not know how many of them are really active or, like you mentioned, made money. So how to make this industry, attractive in terms of attracting, retaining talents at the right spot, or do you think technology will solve that also?
Technology will solve certain, I think, issues pertaining to processes, okay, pertaining to deliveries. For example, when I was in SBI Life handling operations IT, we completely digitized the sourcing to delivery of the policy. So it was the first company who came out with a, it mean that if I have my policy on a DMAT format, I cannot ask for a hard copy?
The answer is no.
Answer is no. Yeah. Okay. Now, if I have to make this entire thing more productive, I think the biggest thing we need to do is, and that's my view, segregate my distributors into different categories of distributors. Those who are good in technology, try and see whether you can use technology as a distributor for them, distribution medium for them. So it's more like an assisted sales.
True.
Okay. And then reduce the cost to that extent, and that still will go back to the distributor of that particular choice. Depending upon which market you're operating, try and find a distributor who will be in a position to distribute it. For example, the guy sitting on my left. Now, how can I make use, as a manufacturer, how can I make use of him with his contact? So it's buying of FOS. I will build my own FOS. I will buy this FOS. If I go to a bank, tie up with a bank, I'm buying that FOS to do the sale. So there the business will grow up in a much better manner. But that strategy has to be completely different than the way he is going to distribute the product, because his medium of delivery is going to be different. Today what is happening is he is selling the same product which my banker sells is in the bank, which my individual agent sells in the market, and which he is selling on a digital platform. Now if we go by the same methodology, it's not going to work after some time. Retention of a talent is going to be a big question. IT, we are all of us are as it is facing issues. Okay? And digitization, whatever we call, including the large IT organizations who are providing services for insurance companies, are facing problem on attrition. Insurance companies per se is also facing attrition problems for key resources that are required in the industry. You say actuaries will not be required. I'm sorry, Sunil will agree, there are more people taking admissions for actuarial examinations than what we had seen few years back. And even today we don't have actuaries that are required to get the jobs done. What technology can do is enhance the output of these volumes. For example, underwriter. Can the technology, can the AI, ML be used, analytics be used to give a much better output to an underwriter, which can make his life simpler, assess the risk in a much better manner, and then price it correctly. If this can be done through technology,
that's a big plus.
It's a big, big plus. I'll give you a small example. When I was in life again just a year back, at the time of underwriting, can I use analytics? Can I find out whether this particular policy holder whom I have not seen from Adams, how he is, I'm only trying to assess him on the information that is given on the proposal form, whether he is high risk, medium risk, low risk. Can this same analytics help me in renewal management? Can the same analytics help me in trying to do a propensity analysis for his claims, whether this guy will come out to be a claim, a faster claim or a early claim guy? Now, if the technology can be used in these methods, the cost will be reduced. You will get much better assessment of risk at the much better appropriate cost, which will then solve most of the problems that we are currently facing on it. So there are technologies available. How do you use it? Where do you use it? And what outcome do you want of that technology is very important.
Yeah, you touched upon a very important point, Anand, is how technology is getting used. And to expand on that, if I say that, and you also spoke about something very interesting in terms of whatever reforms or whatever things are happening, it's kind of uniform for everyone. That may or may not be the right outcome expected out of it. So Ankit, what's your candid view in terms of reforms? Like Anand mentioned that now you have AI, ML, now also metaverse, right? And data connected source and all of that. Do you think that reforms are adequate for the digital stories? Do you think that 100 new operators you will see on the digital float, which will make the business very, very profitable, nimble, like Sunil spoke about right acquisition cost, right? Disclosures, better risk Sanjay spoke about. So what's your story? What's your take on that?
I have a very different view on the entire piece. I don't think the country needs 100 new operators. We probably may need 8 or 10 will ever make money, whether we have 100 companies or whether we have 1,000 companies. So first we need to take a step back, do mindful underwriting. The entire industry needs to get together and focus on that. Second, we need specialized underwriters right now. Right now what we have, one underwriter fits all size, or one product fits all size. So what Anand said is absolutely correct. Each customer category has a very different requirement. Layering on technology, AI, ML, we need to understand and probably evolve into instantaneous underwriting. Technology can be an enabler for human. They cannot replace humans, right? We may have the smartest computers in the world, but the computers still have to be run by a human, right? So technology is good, all the reforms are good, but we do need people. And even though you've not asked, as an industry, we need to solve heavily for talent. The entire industry needs to come together and solve for talent. Right. If we don't solve for talent, the industry will start facing a very different kind of pressure in another 18 to 24 months. We are already seeing that happening. This will only grow more and more intense. This is the only industry right now which is facing so much pressure on talent, because people who are good here can be absorbed anyways. Selling insurance is one of the most difficult products, right? So we really need to solve for talent here.
That's amazing. And, I feel like going on and on and on, but unfortunately we are almost on the time. And I must say one thing, guys, that having done so many moderation, in my working time, I haven't seen a panel as candid as all of you were. And I know that end of the day, it was not a full hall, but I am sure that the digital means that we have. I wish Bengal Chamber of Commerce, would do something to transmit these to the larger world, because I can't thank enough in terms of, my knowledge, learning and everything. You are very, very candid, and it's awesome. Thank you very much, guys, for giving us this opportunity. Thank you, the main organizer, Bengal Chamber of Commerce. It's an amazing story today in the country when insurance is actually looking as the sunrise industry. A lot of good stories that you heard over here, and it goes on. I'm sure that these kind of things will go on and on and on. But the most important thing for all of us to take is that There will be struggle, there will be challenges, but these people sitting out here 24/7 are thinking a lot of goods about the industry, and we definitely are looking for a much better world. Thank you very much. All the very best for rest of the session. Thank you.
End of the financial market conclave, but we can rest assured that almost 350 and above people are watching the show and making comments and all. We would have shared few questions. One question that one gentleman has asked on the net, which I personally felt was very relevant to us, that we are talking a lot about digitization, but despite of that, whenever they are for any kind of submission, the insurers, particularly for the general insurance segment, they are requesting all the supporting documents for health insurance to submit hard copy to the insurance office. Particularly during the COVID time also, that was very difficult for people to come from different region and submit to one particular office. It's not that any regional office you can submit over there. So if digitization is a solution, what exactly, I know the constraints for the insurance industries are, because there are lots of, they have to clarify each and every bill in actuality whether that has happened or not. But that is also a struggle for the customer also, and that person is not from the city, so he has to travel a lot. So that is his question, that if you may kindly take that question to any of you, sir.
So I agree, during the time of COVID, when the beginning started, I guess we've understood the pain points a customer has over the period, and I guess we are already trying to take that journey towards digital. I guess give us another 12 months, and I think a lot of things will be digital in sense.
Thank you. And another, we have discussed about training of the agents, and lots of agents are coming up in. So for the skill development so that they are more pro the industry, and what kind of skill, whether the government of India can take any particular initiative for skilling the people in the insurance sector, that has been asked someone from Delhi.
I think on this training and the talent development, I think there was a committee which was constituted by the in fact, the Prime Minister has this aspiration when he said the increasing the penetrations, and it went to Finance Ministry, and then it eventually was committee was. One of the suggestions that we gave, I was a part of that committee, was, see, until and unless someone buys a life insurance policy in the family, nobody knows about the insurance. Are our children educated about insurance? Do we have any chapter in any of our books? We do have some chapters on the banking. But do we have any chapter in CBSE or some of these SSC, etc. on the insurance? No. So I think we need to introduce some chapter in the CBSE or SSC on insurance. It could be one small chapter. I mean, the kids would know about the insurance. Nobody knows. I mean, I myself, came to know about insurance. My father actually bought an insurance for me, at very late stage. But it was just that I knew the word insurance kharida hai. Nothing more than that. So I think we need to really have that at that stage to enhance the awareness. I'll tell you, my son actually recently went to US, he's doing his MS. The awareness about insurance, you can't actually rent or lease a flat without getting into renter's insurance. The landlord will not lease your flat. He'll ask you, you have to buy a renter's insurance with certain minimum liabilities and burdens. I mean, that's the kind of awareness that they have. We are hugely underinsured in the market. And therefore, I think at that early stage, when somebody is actually in 9 to 10 standard in the school, perhaps one chapter can be introduced.
Thank you, sir. Thank you. With this, we conclude the session on the reforms as a catalyst in pushing the insurance industry to the new level. We'll be sharing all the Facebook and live YouTube links to all of you soon. And we have a pleasant task to perform. I would request my colleague Shoma Mitra Mukherjee, if you could kindly hand over one memento from us. Yeah, to Mr. Sanjay Datta. To Mr. Hiten Kothari. To Mr. Sunil Sharma. To Mr. Amit Roy. To Mr. Ankit Agarwal. To Mr. Ankit Agarwal. Can we have a group photograph, please, with Shoma? No, I'm not done. Thank you, sir.